Morning, welcome back. We are going to be streaming today. FOMC, Powell. Volatility is upon us. MSGM 185% up. Oh. Oh, wow. Wow. That's quite the continuation. Let me get set up here and get going. Get kind of a late start. No, you do it. And put those away. Let's get them. Short squeeze. I mean, yeah, I still don't know the catalyst for any of this actually. So I don't know. Yeah, a little bit behind here. Let me get going. Switch that around. Got about 6 minutes to open. That's insane. Does anyone have a catalyst for that knows what's going on? I think it all started with the only thing I saw was NASDAQ compliance and then that reverse split. Seems like a reverse split is maybe the way to go. Not a normal split, which is strange, but and I can't help but think still. Hold on, tweet this out. Tweeting out the stream. Whoa, there's a big dump 5 minutes in. Oh, look at that thing drop. What the heck just happened? That was weird. Well, you can get in now if you want. Might be a good buy. That's insane. That wasn't profit taking. I don't know what that was. That was, I mean, maybe it was computerized though. Some algo profit taking. That was, holy crap! That just came down what, like 100% in like a few seconds. So many stop losses right there. Stock market. Okay, so we will be watching Powell, listening to him. I'm not sure if I'm going to listen to Powell or listen to someone watch another stream that's listening to him. That kind of gives good analysis. We'll see. Morning, Brad. Hey, X-Ray. Hey, Jeff. Thanks for joining, guys. I appreciate it. Got about 3 minutes to open. That was brutal, violent, vicious. These. J-Pal puts me to sleep. Get that up there. There we go. I mean, the volatility should wake you up at least, right? What's MGOL? You mean to say this one? Bottom? Whoa. Soccer? Oh, Messi? Is this the D-SPAC one? Wait, what is this? Was this the... This was the Manchester one? I don't know if it's a bottom. Oh, I've got some bad news. BBY bonds up 150%. Yeah, Messi's company. Thank you guys. We got 6 likes. Appreciate it. Your early morning likers definitely help out the stream. The more we get, the earlier, the more traction this will get as the day progresses. So, thank you for 7 of them. Appreciate it, guys. BBY is down 3.3%. Did have that rip up with the market, this crazy rip. 312, friggin' 9:29. Half a minute to open. Still logging into stuff. See what's going on. Yeah, so I'm looking for shorts again on short entry because yesterday I got stopped out. If I did one less average, if I didn't average down here, I maybe wouldn't have stopped out. Literally this top, oh, there's a big pop. Literally this top on the market stopped me out. One of these candles. And look, it hasn't even hit there since. I can't believe it was so close, and it's like, oh, I could just get back into it. But that kind of goes against my rules a bit. And this chart, I mean, it's still on a very bullish trend. It was just that resistance that I was playing. So, anyways, yeah, got stopped out. It's the exact same thing that happened back here. We don't need to look at it. Market's open. Ding ding ding. Laser. My laser contracts are up. And market's open pretty flat. I'm gonna be looking for a short entry. Keep an eye on some of these levels. Probably here. Could happen right here in the morning. If not that, then yesterday's high. BBBY moving on up. Oh, BuzzFeed, is it coming back? The catalyst for this thing to rally, I'd be surprised if we kept going. But maybe it's kind of getting squeezed too, I don't know. Bearish? I think volatility for sure. Like end of day, hard to know really where it's going to line up. But for some reason, I'm thinking he's still doing 50 basis points. Call me crazy. Everybody says 25. Market's priced in 25, it seems. For some reason, I think he's still doing 50. So I'm pretty sure if that's the case, there's going to be a massive sell-off. You say 52? Yeah, I don't... I've never been... MSGM has halted. I've never been like so... Not confident. I've never been so far off the consensus. Like, I've been like, oh, I'm not sure what he's going to do. Whatever, market's pricing this or that. But I gotta see what it's actually pricing in. I think it's like very high probabilities of 25. So that I think could definitely cause a big shocker. Even if he speaks sweet dovish words into our ears, if he's doing 50, market's pricing in 25, I can't imagine we won't drop a few percent even just today and continuing on. But then I've seen some YouTubers talking about this crashing the market and stuff. They must be thinking also 50 basis point, but I don't know. The people are thinking the market's going to crash from it. Or that we're at a top. I mean, I suppose it still could, even if he does 50 or 25, just depending on what he says. Okay, here, or that will be their excuse at least. Okay, so SPY's pretty straightforward. I actually might close out of my oh yeah, that's right, I need to close out of my calls at GME. Yeah, no T+2. I don't know how they do it, or yeah, I don't get it. I mean, definitely could still rally. It's got a bullish formation. But we're either in one of two spots of consolidation. We're either going to go up from here, break out, or go down. GME usually goes down. So if the market does rip from this FOMC, which is also a possibility, that could be the catalyst for GME to, you know, have its move. Let's see here. SPY's coming down now. I kind of want a nice high entry on a short for SPY, but this rally yesterday, it was just so ridiculous. It's just like, oh my gosh. Okay. Laser up a lot or just a little? Not up at all. Somehow my... Oh, it's just a huge spread. Never mind, it's not up. So I think I'm going to just reduce exposure on a lot of stuff coming into this meeting. This chart looks ugly. So I'm gonna close out of those. I should wait. I was too hasty yesterday morning. Give it a little time. Sometimes GME just dumps straight out of open though, and that's no fun. If Apple missed, we crash. I think it's more about Powell, but yeah, that could have a push as well, of course. T plus whenever if they want, pretty much. All your firm stuff made sense to me, and yeah, it did take an extra day to run. Not read or see anything that reasonably explains lack of T+2 settlement. I think there is T+2 settlement. However, they've been internalizing stuff, internalizing shares and that kind of thing. So maybe it'll just show up on the FTDs. I'm not sure, but there was definitely options that expired in the money on Friday that, well, maybe they hedged them. So T+2 is only if they didn't actually hedge them. You know, maybe that day that price action was hedging. So it's possible that they, again, it's possible GME is broken. Broken in the sense that it's not broken anymore. Where we don't get these T+2s or these cycle moves. Okay, SPY's coming up here a little bit. But yeah, the T+2 is only saying that they didn't hedge. Yeah, you do need liquidity. I mean, they've spread it out some. I don't know. We've had a couple days of volume. Volume's picked up. This volume is pretty big. That volume. Some's deferred or whatever and pushed to a later date. I mean, I don't have the answers. What we have is the chart, and that was kind of the obvious glaring thing in my face that made it show that it was manipulated. Mavis is up 10%, Peloton's up 8%, we're in 17%. GME is just shut down right now. Okay, yeah, I'm gonna lower those. That's not up at all. Oh, the spreads in the morning are ugly. Okay, I closed out of those calls, took the loss. Still have shares. Why is moving up here? So I'm not gonna do any cover calls today because I might actually end up just closing the shares. And some of these accounts I can't go in and out same day. I don't even need extended hours. Everything's so flat. BBBY down 3.5. There no news on BBY. Their interest is due today, right? Interest on their debt. Volume confused me. Pretty big, but no. Yeah, the volume has come down. I don't know. You could explain that with just people holding, I guess. PRSing and not trading their shares. Okay, moving up here a little bit. This T+2 though, if it's deferred from MLK Day, which was like 3 weeks ago, I don't I don't know how many weekends it pushes it back, but I'm not thinking so anymore. eBet's on the move. The gaming stocks are taking turns. This one's just halted. MSGM might be a good one to jump into, honestly. Highly sketchy, but yeah, all these zero catalyst gaming stocks. One of them has to be the source. I mean, MSGM has made the biggest move, and I think the only thing with that was compliance. So they had the reverse split back here, but that was over a month ago, which put them in compliance. But yeah, maybe it's just a short squeeze. I don't know. But why are shorts closing? Like, did something get bullish on it? Yeah, I've seen all the reports of them closing stores, which is pretty bullish, really. I mean, they're trying not to, of course, go bankrupt. So, and closing stores that are unprofitable, yeah, they've got. I mean, yeah, they have stupid good revenue. So like, a ton of debt, but with that kind of revenue, I don't know why they couldn't not go bankrupt. And I was saying that when I first got in. I'm like, I mean, I don't know. I don't know how to run a publicly traded company, or all the intricacies of it, but or running a company with debt. I try to never have debt with companies. I never have, actually. So, but that said, with that much revenue, it seems like they could just trim a bunch of fat and make money. Yeah, MSG is halted. MSGM. Oh, it resumed. Halted to the downside now. Yeah, halted. Wait. What? Crazy. Yeah, halted to the downside now. They let the thing run so much yesterday. 256 million operating income. Negative. Doesn't seem too hard to turn that around. But I don't know. That's SPY. What the heck? Did you guys see that? This thing is so volatile. Alright. I think I can do a big ES, so only one entry, which makes it more difficult. Here or here. Or are we going to just rip up to these highs before FOMC? Where are these? Did this? MC is pumping. Yeah, it is. Alright, GME, maybe I sold my calls too early. Fox D is up 10%. SDC is up 5%. I mean, I'm not expecting a whole lot of volatility before FOMC, but I would like to get into a short before it. GME's coming down. EBET 120%. AMC is ripping. Did AMC make a deal with EBET? Ape's still negative. Thanks guys for likes. These early morning likes really help, I think. 13 of you guys, appreciate it. GME's kind of breaking the lows. Oh, never mind, bouncing on it. Oh, we just got data. Let's see what the here. There's the economic data today. Mortgage rates this morning. Non-farm employment change. Manufacturing PMI just came in. Basically right at forecast. Construction spending is coming at 10. ISM in manufacturing. SM manufacturing. SM manufacturing. Jolts. Feedback got halted. MSGM still halted. It's a big move up, man. Please. Let there be a movement in the micro mobility space. Pumping gods. Pump it. There's plenty of penny stocks for you to move from one to the other. BuzzFeed's up 6%. SLGG still going 10%. Had a lot of volume yesterday. S&P 500 was up 6.2% in the first 20 trading days of the year. One of the better starts we've seen. That's crazy, actually. Alright, SPY's coming up to that high. This is the 12th best start of the year we've had. I don't know when oh, from 1928. Pretty much, yeah, forever. I mean, this I keep seeing the stats about how good this January is. It doesn't mean a whole lot to me because you're not looking at it at the year. It's not like the whole stock market resets. You know, like, oh, it's January, let's reset everything. We were just in this trend, and I mean, literally, we broke out of that range. Had a lot of tax loss harvesting or whatever back here, and then broke out of that range, and then this is it. You know, like on a longer scale, it's not like, oh, this is such a great January. Just it's just a part of a longer downtrend. That could turn into an uptrend, but Silvergate's ties to FTX are under scrutiny by U.S. senators who say that crypto banks was evasive in early inquiries. Tinder is letting go of 8% of its staff. Canada manufacturing PMI 51 versus 49 previous. Looks like the consensus is getting closer to actual as of late. Like they're not way off. Seemed like there was a time where it was always a surprise one way or the other. UK house prices fall for longest period since 2009. Alright, it's kind of on the up a little bit. AMC is ripping. GME calls? I mean, on FOMC day and before, just get a pump into it. What the heck? AMD's ripping. Yeah, it's maybe a little hotter, but it's so close. I don't know. Seems like they're close on stuff. Closer than usual. That was Canada, as I was saying, 51 versus 49.2. US manufacturing PMI 46.9 versus 46.2. Yeah, it's not like spot on, but it's very close. Not a huge surprise, I think. All right, SPY's at that level. Say it wants to break it. Davis having repeat. Maybe. Yeah, we might be doing the 70s inflation dance. I don't think it's going to go that slow, though. I'm hopeful we don't get stagflation, basically, like we had then. AMC is moving up. GME might anchor its way up there. eBet's back on 165%. Crazy. Buy moving. BBBY coming down. Display is supposed to be cool, it's pretty more obvious in these numbers. I don't know, like manufacturing. The CPI, of course, is the main one, and then PPI. So yeah, I mean, you should notice with those. But they do, I mean, it's skewed. That's why it's a lie, CPI. So as far as what we're actually seeing as inflation, it's just up to you where you live and what you buy. It moves around. I mean, eggs are crazy right now, you know, like it's all jacked. You can't just print a bunch of money and not have ramifications. We're just gonna keep having ripple effects. Been a long time still, but you know, could keep going. By moving up to that next level. Give me pretty flat out of here. MSGM halted. Oh, to the upside. Halt down, halt up. Well, it's not like it's moving faster than it was yesterday. SPY just squeezing through there. Wasn't this like a... Oh yeah, 2 to 20. Okay. $406. I mean, 407, 408. All right, another 408 short. Oh my gosh. Yeah, if we get there, I'll do another short at 408. Thing is, if the first response from FOMC is bullish, the thing's just gonna blast. Even if I get a nice entry and we come down some, if I have a stop on there, it's just gonna stop out. If it drops first though, then it's very nice. E-bet's going. MSGM is resumed. And just gapping back up. This would have been a good entry. Looks like it wants to come all the way back up to those highs. That's crazy. It's got more than 100% to go to get to the highs of pre-market. Looks like it's probably going to. I want my GME money back. I don't know, like a short squeeze. I mean, they got a reverse split, which put them in compliance with NASDAQ. But I don't know if there was something else that they did to put them in compliance to get this going. But this is the last kind of catalyst news that I see. But this was a while ago. It was in November. So, for some reason, it's ripping. And if it is a short squeeze, I don't... Maybe there's more news on it. Let's see. NASDAQ compliance. Wait, no, it's 3.9 registered direct offering. Yeah, they're having secondary offerings. Market price at 21.40. So yeah, I don't see like if it is shorts covering, why did they start? And now it's just probably on momentum. Squeezing. Oh, do we hit 408? No, 406. Yeah, I mean this thing's moving back up to its pre-market. I'd look for this 46 as a resistance, and then back on up 60 bucks. They even had a share offering down here, and it's halted. BBBY coming down 5.5%. Getting back to its barcoding levels from yesterday. All the game stocks are on the top of the list. MGAM, eBet, SLGG. No, GME. Yeah. I mean, might be broken. Bull flag on the daily. Of sorts, this is a pretty ugly flag, just with how big it's getting and how choppy. I guess new highs and lower lows. It's not like it's very clean, and it's so large this part, but it could. I mean, I see consolidation and a break. Oh, there's a smaller bull flag there. Maybe that's what you're talking about. Yeah, that's not bad. So I think it's gonna break out one way or the other, up or down. If it's not like a big move, it's just a normal breakout and comes back up to 25 or whatever. I don't know. Without seeing the velocity, I'm gonna think GME's broken. The last 2 days we've had that were the biggest days we've had in a while have been abnormal. That was a 20% day, bottom to top, which pretty good, for sure, but not GME. Even the way it happened, it was just so unnatural. Or maybe it was so natural, but abnormal. I feel like it's been weird really since the split. I mean, this was weird. This range it was in for months. The heck is that? Like one little. This was to be expected. We had our double top, and this was all normal. We had a rip up to 48, made a double top, and then long train down, which we've always gotten. But then this, no, this, no. Gamble, another gaming one. Esports gaming. There's a squeeze on the gaming stocks. I don't know. Box D now 15%. Same with Peloton. Box D up 15%. Peloton 15%. This looks like a nicer bull flag. Longer term, I guess. The GME one's just shorter term. But this is weird too. This is similar to how GME actually has moved. Yeah, even this consolidation with that heck. So if GME is looking like a lot of other stocks, then it's not just in a basket, it's just part of the whole sector of stocks moving. I don't know why it would be with this one, but this IWM, like, is that what's moving like this? No, this is what GME is supposed to do. Yeah, it's, whoa, SPY, something just came out. I don't know what. 10 o'clock? Oh, ISM data. Oh, Jolt's jobs opening. Just as I was saying, we haven't been surprised by data. There you go. A lot more jobs than we're expecting. Jolt's job openings 11 million. Forecast was 10.25. So that's a pretty big miss as far as expectations. A lot less. Sorry, job openings. Nice, and manufacturing prices much higher too. 47. Closer. The Jolt's job openings is the biggest surprise. Or no, this one actually too. Highest in manufacturing. GME decided to tank on that macroeconomic data about Jolt's. Look at this thing. Look at it. I'm gonna wait before I close the shirt. I'm chilling. I don't know what I'm waiting for, but GME's not getting any move up with AMC. It's kind of strange. All right, I'm closing out of these. It's been fun. Holy crap. Is that my order? Whoosh. Okay. Still actually made a little profit from my entry, like down here. Yeah, I don't really hold through the meeting. And my short on SPY, maybe I missed my entry. Yeah, SPY's coming down. Woo. GME is flushing there now. Okay, I got my short. I'm way late on it, but I'll hold. Probably bounce off this level. Maybe retest up here again. Before FOMC, I'll have a stop somewhere. If it goes the right direction, I'll just probably close it on that volatility. Could have been a little quicker to react to that jobs data, I guess. U.S. construction spending down 0.4%. Yeah, they've got to kill the economy, kill the jobs market. See, what else can I get to cash? Well, BBY I jumped in just for the news, but I guess that could still be by end of today. So I'll hold that. I like some of these bullish charts, but little bounce on GME. Same with BBBY. Thank you guys for your likes. We got 17 of them. I appreciate it. Yeah, these early morning ones help out a lot. So just seeing the market react to the jobs data though is interesting because it hasn't. I don't feel like it's quite reacted like that in a while. Maybe that's because it was so different than expectations. Okay, so yeah, I added to my shorts. I did two. I had one here, and then one here, and then one here. I actually got to 11 of the micros. And if I think if I did not do that last one, I wouldn't have gotten stopped out. But this last little move, and then it was actually in after hours. I was really close, and after hours just ticked up. I was like, I know this is the very top, and it just clip stopped me out, and then it came down. Like, oh. So I got back. I guess I got back in here. Not too bad of a difference, but psychologically and mentally and emotionally, it's so much easier holding when you're up on it. And every time you enter and exit, it takes to me it's like a punch card. It takes emotional toll. So I want to do it. I don't want to do it too much. So yeah, that's why the stopping me out is like, oh no, I have to get back in. I have to try and time it again. I have to just go through the swings of being down on it. And yeah, MSGM just insane. I don't know why they're halting it so much. I mean, I guess I don't. Maybe it's moving faster than it was yesterday. Yeah, I think this thing's gonna climb its way back up to this high. So actually, we have money now. Could get in it. Yeah, maybe I'll grab some shares. I mean, just all the halting is just sketchy as crap. Let's see, 20,000 worth. How liquid is this thing? Free floats, 6.5 million or half a million. It just sucks trying to get out of halted stock so much. This move was wild. That was like 100% in a minute. Alright, SPY's coming down now. My entry was late, but maybe not wrong. So I might get an order of MSGM for shares. This thing doesn't have options, I don't think. It's maybe better to get into something like eBet because it's not halting, but not as fun. I don't know, maybe this isn't a good time to get in. MGame is on its way down, so is eBet. This would just be a very quick play, really just to get the grind back up to maybe 60 bucks. By bouncing off that low from today. So kind of finding its direction. Oh, I don't actually know. Yeah, never mind. I can't even day trade on here. Yeah, I can't day trade on that account, so won't do that account. Don't do it on that account. Okay, SPY's bouncing now. I'm not putting a stop limit in it, stop loss in it yet. Kind of want to stay in it, and I'm in there pretty early, so when any volatility, I'll probably get stopped out. Suppose if we break this 406, I'll close it. Maybe go long for the 408, or maybe just leave it. Wait for another short entry. You watched my video last night, Steven? Oh, he picked up it open. Nice, well done. Like right here after that huge drop. Yeah, I was talking about this morning when I was streaming. I actually had this chart up while I was setting up, and it was here, and we watched it just elevator down. I was like, this might be a good buy down here. I was still getting set up, didn't have capital. Because yeah, I mean, from here up, you're 100% move. All right, it's resumed. I don't like that the other ones are kind of coming down now, though. That does kind of sketch me out. Maybe they were just coming down while it was halted. It's halted again, I think. Yeah, it's halted again. All right, I don't want to get into this. It's too halty. That's ridiculous. They're not letting him go at all. Thanks for your likes, guys. We're at 22. Not bad for some morning action. Yeah, this would have been a good entry at open, but it's just fancy. Peloton's up 21%. MGame's up 40%. This thing just ripping now. Seems like, I mean, a lot of stuff is like squeezing still, even with the market. I mean, I guess the market was yesterday too for a bit. SGM halted, MGAM. MGAM's bouncing there. Foxy 13%. MVIS. That's a nice consolidation up there. VIS. This one looks nice actually. Broke that resistance. Might grab some shares of this. That's options also, huh? I want to go slow with what's going on today. I don't know how much it'll affect these stocks, but definitely see some volatility in the mega caps. Yeah, AMD's up pretty good. What was that? 6%. Yeah, that's it. That's a good move on AMD. It was getting right to that resistance, but today it gapped up and broke out. So, pretty big breakout on AMD. Probably fill that gap up there at 83.46. I would imagine that's where it's headed. And SPY's pushing back up above VWAP a bit here. BBBY 6% down, back to its barcoding level, 2.5, 2.6. The Adani Group stocks have lost 72 billion so far. Is that guy that lost the most money? Lebanon to devalue currency by 90% today. U.S. construction spending negative 0.4. The consensus was 0. So less construction spending than what they're anticipating. I actually saw a house on Zillow last night. I hit up the agent. They said it's a multiple offer situation, so I'm not like in a hurry, but I'm curious about some stuff on it. There's some deals out there. They go pretty quick. This other one, they're still flipping. It was like there's still flipping going on because some of these deals they're trying to, what is it? In like 1 month, they bought it, just remodeled some stuff, and I think they're trying to get like 40% more. Like, and I think they could. They're selling it for like pretty much close to market. They got a good deal on it. I don't know. It was only on the market for a couple days or like 1 day. So the market's not like, it's not scared yet. There's not, once these flippers, I mean, there's still gonna be flippers and people, investors, but once they get scared, then you'll have the best deals, and there won't be a bidding war for good deals. So it's still a little early, but there are some beginning to show. MSGM's resumed. Maybe I should get a little position on this. Don't like all the halting. Oh yeah, never mind. I can't day trade on that account. The account I want to do it on, I need to sell some premium on it or something, get the value back up. Think I could do it on this one? Maybe. On the buying power. Twice in a row, it's like trying to get this big move on the SPY. If I keep trying it and I keep not losing money trying it, should eventually I should get a move down. At least to here. But it's just been choppy the last like week or so. This move, yeah, this one I didn't just hold through. It just held. But if I played this, I mean, I had the short here for that, held, and then we had this move stop me out, and then I shorted here, or no, yeah, that time. But then it happened again back here somewhere. I think here. When it's choppy, you just got to take profits. But if the trend has begun to a certain direction, it's like you don't want to take profits. You want to ride that thing. Whoa, GME getting kind of poppy there. I think that's actually maybe my chart. Sometimes the Weeble like lags. Like when you go to a ticker, it'll populate what's happened in the last little bit, so it looks like it's moved fast, but it's just like catching up. Chinese brokerage, man. BBBY coming down here. Barclays or whatever buying a bunch of shares seems pretty bullish to me. That seemed like pretty good news. So I did open a debit spread on BBBY yesterday, but I'm even tempted to do some cash secured puts again. Because the premiums are still elevated 430%. But if it goes bankrupt, I mean, you don't even get the hose? I don't even get that reference. Probably best to just wait till later in the week to make many decisions. Reduce exposure now, get to cash, wait for the volatility, see what happens. This is weird price action on GME. Big wicks. Low volume though, very low volume still. I almost want to get puts on GME. That'll be a nice little igniter to the upside, I think, right? These shorter time frames does have that divergence on the RSI, which isn't good. It's hidden on the daily. Messed up, people. I'll wait on puts. I think if it does come down, it's not going to be a move like necessarily like this. It'll be probably quick. It'd be good for puts, but I suppose it could. Really, I mean, today could be a big turn in the market. Big downturn. If it's bullish, I don't know how. If it's 25 basis points, which I don't think it's going to be less than that, and he's dovish, suppose we could break here and then we'd probably rally in the next couple of weeks. Fill this gap, maybe get back up to this high, 425. Or not. He could even be dovish, 25 basis points, and it still dumps. The news is just an excuse for the big money to move it around. Yeah. Yeah, after Powell we should have some insight. I just pulled money out. Got the cash. Halted down now on MSGM. SPY just kind of consolidating an area. What if GME starts to squeeze though before 2? And maybe the FOMC is what shuts it down, right? If they're able to manipulate the time that they cover their obligations, which I think they can to some extent, they would wait for a catalyst like this huge move on SPY that's probably going to happen. Help shut it down. I don't know. A little bit of tin, a little bit of morning tin. A little coffee in your tin. So the halts on MSGM, they haven't at least halted with a big gap yet. They've been pretty close on the halts up and down. That's good, but you never know. Like it could halt here and open up down here or further. That's where the halts are just sketchy. It's been tight so far today, but there's a chance. See if SPY breaks the support. Got that bearish MACD crossover below VWAP. Got right under the 9. I think it'll probably come down. At least test this. See if we break it before FOMC. MSGM resumed. Yeah, see, it's not making big gaps, which is nice. Coming down more. GME's had an interesting bounce there. A no volume bounce. I know what you mean, Jay Scott. Yeah, I know. I feel like it's definitely gonna get crashed today, but if I get too confident with that, that's usually when I'm wrong. It's at a high, so if it does break, if it's somewhat bullish and it breaks, like it could be the beginning of another big move up. 411 is kind of a resistance, but really gap fills. But if it's not bullish enough to break that support or that resistance, then I mean, I suppose it could chop around up here, but it'll probably come down. There's 8%. MSGM holding up at VWAP there, huh? Not bad. Will VWAP bounce? AMC consolidating after that run. Me just looking so weird and low volume. Time to go long. Do it. Yeah, I mean, there'll be volatility both ways. Usually there is, at least. So, not to say if you go long, you'll lose it, even if it's bearish. I own SPY, but I have more to put in. You mean like for long-term holding? I mean for as like a trade? You mess with me because I don't understand. Yep, and like UNG's done, I had a gap down 3.5%. It just keeps getting lower and lower. I'm like, at some point, it's not gonna work. It's just gonna go up. All right, SPY's up above VWAP now. Interesting. Natural gas is gonna be free before too long. Just free natural gas for everybody. Although no one's gonna refine it. So sorry. I won't sell my SPY until I retire. Yeah, I wouldn't be averaging right now, no. I still think we've got new lows coming. New lows from last year. And it might be on this leg that we're about to make down, potentially. First day. Buy before closing and sell it open. You're looking to like overnight trade. Fusion is going to kill natural gas. Yeah, but that's not anytime soon. Buy before closing and sell open. What I recommend? Like, what do you mean? Sounds like you got it. You got your plan. Yeah, aftermarket moves. It's not a bad plan. You're talking about like trading SPY. Most of the move is in the extended hours. Oh. Boom. Philo so high. You're a genius, Ace. Freaking genius. Um, depends on how you're trying to trade. I don't know. I haven't read a whole lot of books on the stock market. Uh, like paperback books. MSGM at least stopped halting at VWAP there. Straddle, yeah. Yeah, I mean the premiums are going to be high. Straddle's where you're buying the premium to both sides, right? Is that a strangle? Yeah, yeah. I mean uh, that definitely could work, and maybe something that I should set up. Just where's it going to be? I guess before it, so maybe waiting until it's closer. But premiums are probably increasing as we get closer. But yeah, maybe a good idea. Just timing the drop offs. I've kind of got my short here on the futures, but going both ways with options would be fun, I guess. GME's volume is shut down. Oh, I'm looking at my spent a lot on my puts for margin this week. I don't know why. I guess if we get a big drop, these 19 puts might work. $18.77. I might get some more puts for next week on GME. Further out of the money. Okay, 15. Jeez. Buying power. SoFi's been hanging out up there, huh? I get my info, yeah, just from the internet, not specific websites, I guess. Um, just kind of immersing yourself in it, then you'll learn what questions to ask. So To start, you got to figure out what questions to ask to learn. And to do that, sometimes you just have to be around it. So be in the stream. Whatever questions you have, is start Googling. Never type of being. That's big brain moves right there. Yeah, paper trading definitely. Some stuff you won't find in books, like I put GME buy puts. That's true. I'm just looking at my buying power. I'm not sure why I lost. Oh, is it because I did that cover? I went in and out on a covered call yesterday, and I don't think I was supposed to. Yeah, I probably need to wait another day for funds to settle. Dang it. But they let me get into a futures contract, so that is neat. Goldman Sachs has reportedly cut CEO David Solomon's compensation by 30% to 25 million. Poor guy. $6.56, 6% down on BBBY. MSGM holding up right at that VWAP. That was my computer. Don't be alarmed. HPCO looks like a nice chart. I mean, 25 basis points. It's just. Whew. Just don't know. It seems usual. Okay, I'm gonna get. We get our crew on here, see what they're talking about. Our young investors. Keep others buzzing with those just Good morning, Donaro. 19 puts might do well on GME. 18. 1944. That's that big move. That big support, which isn't even in here anymore. I don't know. If the market dumps today, probably, huh? Doesn't seem like they didn't do any market makers much to hedged on Friday. You can see any T+2 action. I closed out of my my shares and my calls. I have puts, but they're for margin, so Can't really do much with them. Could roll down, but they're pretty far out of the money in their weekly still. I don't have any buying power because I think that covered call I did yesterday in and out. Did it too quick. I didn't read. I don't think I was supposed to do that. Yeah, GME just flushed through that support. 2097. That really was that level from? That high. Yeah, if it breaks that, probably back to 1940. If it holds that, it's just back in its trading range. I know, yeah, it seems like they must have, the market makers must have been hedged on Friday. That was part of the reason we had the rally. Kind of, you know, they were hedging as we were going up, and it caused that big of a move. Buy's coming back down here a bit. Oh, we'll see 15 again. Ace. Oh, there it just broke through that support I had. Just gapping down on no volume. Ace, we very well could see 15 again. And if that breaks, which if it gets there, I feel like it probably will, because that's such a random level. I think we're at 10. 21s? Nice. I don't have buying power. I was going to buy more, but I think my cover call screwed me up. Oh, okay, you got to bounce on that 2091 or 95. Oh no. I wonder if I can sell the shares in here. Will it let me? Yeah, it will. So I do cover calls today. I'm gonna wait for Powell to do cover calls, but yeah, it won't let me do them. I might just start doing like at the money cover calls in GME. If I'm gonna keep these shares, that's kind of what I need to do. It is a nice little bull flag though. We break that head shoulders. Yeah. So breaking this line, this is like the shoulder. And we broke that. It was confirmed, but literally just wicked through it. Now we've come down. So I don't know if Weeble like erases those at some point. I think they do, but the fact that it didn't hold up above that, I think, makes the move, cancels out that pattern. And these divergences still in the shorter time frame. Thank you guys for your likes. Appreciate it. We're at 25. These early morning likes are very helpful. Yeah. Yeah, I mean, I was just kind of my last time frame was this morning pre-market, more or less for GME, and that didn't happen. So, I guess they were hedged. And as far as a cycle, I don't know. Maybe I have to retest down here like we have. But that, I mean, that's going to put this time frame from this peak to another peak so far. We're already further further in time frame than we've ever been between pinches. Those 84 bars. So that's the only thing I'm thinking GME might be broken. 84 was back here. And broken meaning maybe it's not broken now. maybe our broken toy that maybe we broke the toy, played a bit too much. No, shares, options, futures, derivatives. Yeah, all the derivatives. I guess I don't do like swaps. I think you have to have a CFB, have a lot of money to do swaps or be a firm. I don't know if individuals can just do swaps. Buy is retesting that low. Ace, learn covered calls, man. You've got a big position, I'm assuming, on GME. You should make money with it if you're gonna keep holding it. It's very easy. You could paper trade it, but yeah, I mean, you understand the concept. You don't even have to like trade them. Do like monthlies. You know, do monthlies and pick a delta. SPY's coming down, broke through that support. GME is following also. So monthlies you're going to have a little higher IV, so you're going to get a little more premium. So you do the Februaries. Pick like a 25 delta. That's quite safe. That's right here. See 0.24, that's the closest you can get to 25. And then just sell them. Do it in the morning. Or you could still do it today, it's still pretty early. And then you can either just set rules for yourself. Say at 50%, I'm going to close it or roll it or whatever. I would say by 80%, it almost always makes sense to close it or roll it at that point. 80% profitable. Cover calls that help yours. The best time to plant a tree is 10 years ago, Ace. What's the second best time? Today. It's not hard to do cover calls when you have high cost. You can do cover calls below your cost basis. That's all I've been doing on G. I mean, I don't do them a whole lot. I have before, but my cost basis is like 60 bucks on this, so all my cover calls are going to be below my cost basis. Calls on seeds. One day I'll play my shares. Yeah, I mean, just sitting on this capital, you got to make money with it, man. Just watching it go up and down in value is, I don't know.
But I think the overriding.
But yeah, you kind of have to have a plan and stick to it, because if you're not used to it, then
we basically have an idea.
You sell a cover call and then it starts to rally, and then you panic and buy back in, and then you lose money. That's the only way you can lose money on cover calls, really.
And we've been talking about it.
You buy to close it when you're down on it.
Along with many others.
So for me,
it's not so much
you have to make a plan before you open it, but you make the plan to just commit to it and then roll it if it gets the money. Then just do that. Shut off all emotion.
Ahead of him in ensuring that we don't get it.
Forward futures.
I think his problem.
I don't trade those either. I don't have. It takes more permission to trade the
is if he were to come off too dovish at
to
this point. So
trade like
he's
coffee
gonna have to
and
be careful to
all
walk that
those
fine line. We'll see what
orange
happens,
juice.
but I think that's what we're seeing.
Spring cover calls.
I just think we have
Uh,
FOMC jitters this
Do you
morning.
understand
I
a
like
contract,
that.
an
What do you
option
think,
contract?
George? Anything to read into here from the action so far?
No, I agree with Scott. I don't see any reason why the Fed will come out and be dovish at all. I think at the end of the day, I mean, look at the JOLTS number. It beat by 1 million openings relative to the 10 million expected. I think the labor market conditions are still so strong that, and I think it's also particularly strong in the cyclical areas of the economy.
Yes,
and what
let's
we're actually
dump.
seeing is a lot of
Do it.
layoffs in technology area. Of the economy, and as I spoke about
You
a
can
couple
just
weeks
paper
back,
trade it. You don't even have
technology
to
doesn't necessarily
do a bunch of
represent
research. Just
a
start
large
trading it,
percentage of total
so you see how it
employment.
works.
And I think again, the cyclical areas of the economy are still growing, at the very least from the job standpoint. And with jobs
Yeah, that's
still
just a pretty
growing,
big surprise.
openings still available, the Fed is going to be locked in on it. And I think, if you just consider that the Fed undershot inflation for quite some time, they may end up overshooting here where the federal funds rate exceeds inflation. It may actually be essentially the first time since the 2008 crisis, because if you just look at the trend in inflation and interest rates
All
have been
option.
below inflation this
Yeah,
entire
there's calls,
time.
there's puts.
And I think they may end up overshooting because they want to make sure they get a clamp down on inflation and doesn't resurface on a forward basis. So, that might
Don't worry about
put a
options yet,
damper on
Scott. You
this,
should just
rally.
learn about
I can't
buying
say
and
if
selling
it's going to
stocks.
be the case. I mean, we've had a monumental one at the very least from the beginning of the year. I mean, double digits and
What's on
technology
GME? It's
gains
freezing.
on
You're broke.
aggregate. I mean, that's basically a year's worth of returns in less than 4 weeks. So I can't say. At the end of the day, it'll be very volatile after the
Hold on,
announcement.
let me hear this guy first.
I don't necessarily see any reason why they'll be dovish because of the nature of the labor market. I mean, we're still reeling from a lot of retirees from the pandemic. There's a lot of folks that are still either on medical leave or
Bye,
just,
it's coming down now.
because of the pandemic. Immigration has also been very tight, and that's really keeping the labor market robust, and that's the focal point for the Fed.
Yeah, and this is pretty clear from the JOLTS number, even ahead of employment on Friday. But given what we saw in the last print and basically all the jobs data, it does look quite robust. So we'll see how serious Powell really is about kind of creating some cracks in the employment situation, because it seems like we got plenty of room to take more punches if he wants to deliver them. Earnings and the big ones that we've been talking about here, AMD's up, Snap's down, Match is down, T-Mobile a winning stock. What stands out to you from some of the reports, Scott? And don't forget, we've got Apple tomorrow.
BBBY
so
just
maybe,
gave up all that
we're not totally in the clear
spike
post
from yesterday.
Powell.
Back to that barcode bubble.
I don't think we are. Because I was going to bring that up. We do have Apple coming up as well. We've earnings, have been kind of what we've expected them to be, I believe, so far. There's a lot of opportunity.
Hurricane, where's your news on BBBY, man?
For these companies to kind of rewrite the ship. We've seen the layoffs taking place, and I don't think we're done there. I think that'll continue to roll out as well. And as we do that, as companies become more and more profitable, as those that are leveraged highly get that worked out and start, we see the funds rate eventually start coming back down.
Put a level down here.
Be in good shape. But
no, that's
I
just
don't think
low and high that
we
day.
have
I like
completely
that.
weathered this storm so far, Oliver.
George, you got a 30-second earnings takeaway you want to hit us with this morning, or should we circle back after Apple?
Well, I'm going to stick with what we talked about yesterday with AMD, OJ. Companies that have actually cut their earnings estimates are the ones that I think are going to be in favor, because they've already been effectively down in price, but also in expectations. So companies that are they haven't cut their earnings estimates and may end up surprising to the downside on earnings. I think those are companies to be aware of.
Good. GME 22 call expires 3:10.
Thanks, guys. Scott, George. Good
John, I closed mine.
360 with Nicole Pedalides is up next.
Yeah, I closed my calls on GME this morning. I took a loss on them. I actually closed my shares too. Still have my long-term shares, which I am considering closing actually. So yeah, I mean, it's up to you. The chart still looks bullish. It's consolidating, so it's either going to break to the upside or downside. Maybe it's all up to the Fed and what Powell says to which way it breaks. If it does break to the upside just because of SPY and that, it's the move up. I don't know how big it's going to be. unless it's one of our obligation cycles that move up 100, 150%. It's probably not going to be moved very high, maybe 25. But as far as the predictable cycles, they've gotten much less predictable now that we've had all this time pass. We haven't had one, so that's where I'm reducing my exposure. I had exposure for that specific event, so I could see us coming back down to this 1541. I could see us even coming down to 10. That breaks. If we're repeating certain areas on the chart from back here, same deal. Like, you know, if we're right in this area, which I feel like we could be, then this would be like 10. But if we are in this area, that means we're still in some kind of pattern, which would be good, because then we'll have this move. So might not be here though. The price action we actually saw could have been even this, which I thought about, and then somebody even mentioned it. But yeah, it's not looking quite as much like that anymore. But just this kind of this rip with volume, and then this rip with volume. Kind of a double top. I mean, this is much higher, but if you just think about it in this sense, if they were flipped, even had big volume rip there, big volume rip there. See the volume on both those. So we could be faced with this now, and this would definitely put us at 10 or even Bob's 3. I don't know. It's just on a smaller scale, you know. So this move up, and then these two tops would have been this move up, and then this top and this top. So yeah, just see which way it breaks. If it breaks this 1940, definitely coming back down to 1540, I'd say, and probably lower. If it breaks 24 to the upside, or whatever levels these are, probably even if it breaks this like 23, it'll probably move up to 25. But so far, I'm thinking more to the downside than anything. Yeah, and even looking at it like that, actually, I didn't even notice the volume. Increasing volume, then volume spike, volume spike. Those are the times to take profits. It didn't quite work like that, but yeah, almost. I don't know. I don't know if we're repeating anymore. Again, GME might be fixed or broken, however you want to look at it. So broke through that 2097 level. And yeah, 1940 is basically that next big support. Lots of data that goes into this volume bar rate trading signals. All right, cover calls. I can just paper trade it for you guys, but this is what you guys should be doing. So I think you do it on Webull too, but I'll just do it on here. Actually, yeah, does Webull have it? I think Webull does. I haven't done it on Webull, I've done it on here, so. I've got these futures trades on here just to see how they work. VIX is even broken on the futures too. Broken on all the different assets. I did dump my GME longs, my shares. Yeah, I dumped those this morning. Yep, I'm out. My time frame was this morning. Pre-market didn't happen. So if we have a move up, maybe it'll be, you know, that'd be great. But it's seeming like it's not the stock it once was. Instead of cashing out, just sell cover calls. That's the point. If you're going to sell here, you could sell cover calls at the money, especially if you're undecided. So look, I'll just reset this. We'll just, yeah, that's fine. So you have, we're going to keep it simple, just 100 GME shares. Okay, 100 GME shares. Okay, yeah. Okay, about 100 GME shares, right? So you have 1,000, whatever. It has to be in multiples of 100 though, to do cover calls. So you have to have at least 100. If you have 150, you can do 1. If you have 200, you can do 2, right? Multiples of 100. And then however your brokerage is, have to have options enabled, but then you just go and physically go to the option chain. On this one, it's option trade. It's just like a little bit too simplified because it's hard to even see what's going on. Most will have an options chain. Let me there options chain, and then you pick a date. I would just stick with the monthlies. So it's the third Friday of every month is the monthly contracts expiration. So yeah, these ones highlights the weekly. So this is the monthly, February 17th. One even says the IV over there. It's interesting. Cool. So open up the options chain, and then you can pick whatever strike you want. Closer to the money, or basically the lower you go on the strikes, the more premium you're gonna get. Because what you're doing is you're agreeing to sell your shares. So if you're selling premium or selling calls or writing calls, that's all the same thing. Sell, short, write. Those are all the same thing. Different ways to say it. So covered calls, you're selling calls, you're shorting calls, you're writing calls. All the same thing. If you're doing that, you are entering a contractual obligation to sell 100 shares at that strike price by that date. If you're selling, shorting, or writing. Now, if you're buying or going long contracts, option contracts, you don't have an obligation, you have the right. So selling, shorting, writing, you have an obligation. Buying or going long, you have the right. So when you're selling it, you have an obligation. Your obligation is to have these shares available. If you're doing shorting calls, you have shares to sell, and at the strike that you pick on the options chain, and by the date that you pick. So that's basically all it is. Best look around, it's not going down. I mean, you can sell them whenever. You can be when it's going up, and be when it's flat. But yeah, so if we paper trade it, so to keep it simple, if you're going to start with it, I would probably just pick a delta. Not bring in technical analysis, not bring in anything like that. Pick the monthlies and just pick a delta. You could pick 25 delta, 20 delta, 30 delta, and you'll see it. So on here, it's right here. Here's a delta. So it's not showing me all the options. So here, I'll have to change the strikes. Let me change it to 18 strikes. So it shows me more. Now it'll show me strikes up here. So now we have 24 deltas up here. More. So 24 is the closest. 24 delta, 0.24, 24. And then this would be the call I'd sell. That's 24.5 strikes. So I'm agreeing to sell my GME shares at $24.50 by February, is it 17th? Yeah, February 17th, which is the third Friday of the month. So first Friday is this Friday, second Friday, third Friday. Okay, so here's the 24 delta. I would sell this. I don't even know how to do it on here. So I'm selling this contract. I'm not buying it. I'm only selling one because I have 100 shares, right? I have 100 shares. I'm selling a call. 24.5 strike. Monthly contract. One of them selling. It's a call. Make sure all that stuff's right. Pick whatever price you want. Bid, ask, mid, wherever. Market order it if you want. Make sure you get filled. I usually limit order options, but you can definitely just market order it. Okay, so we're selling one contract by that date. Now let's review it. So I'm going to receive $52.85 to agree to sell my shares at that price by that date. Right? So I won't sell the shares for less than that price. I'm not gonna somehow get shafted and sell the shares for $21. The least I'll sell them for is 24.5 by that date. And to me agreeing to that contract, I'm receiving this amount of money, because the people on the other side of the trade want the right to buy GME for $24.5 by that date. Now, why would they want that? Because they think that if GME is way above that, if GME is at $30, but they don't know if it's going to be, so they don't want to buy shares, they're going to buy call contracts, which gives them a lot of leverage. So if it is at 30, then they can come back to this contract that they bought and say, hey, I want those shares for $24.50. GME is at $30. So that's why you can get exercised at any moment. So very unusual to get exercised before expiration. If you're deep in the money, you could, but we won't talk about that anyway. So send that, receive a credit, and bring. Okay, so now I have my 100 shares, and I have a covered call. So basically, I've received that $52, and it should be in buying power. So now I can, one strategy is you can use that $52 and buy shares of GME with it, or do whatever you want with it. This is money. You just made money right there. So the money's made. Now you just wait. Now you're a theta farmer. You just sit and wait. That's basically it. Stock goes up, stock goes down. Doesn't really matter. That thing's going to decay. If the price of stock goes up to 25, if it goes up to 30, if it goes up to 100, the price of that contract's going to swing a bunch. It's going to show your way down on it. But if it comes back down to $24 or 24.5 and under by February, you're still fine on that play. Now, if it's above that by expiration, then your shares will be called away. But you can close the contract out before that happens. You don't have to lose shares from it. You can close it or you can roll it. But you can just start with that. Keep it simple. If you have 1,000 shares of GME, you could do it with one call. And then just look at how it will fluctuate with the share price of GME. This one won't fluctuate super fast since it does have some time. You've got a couple weeks on it, and it's somewhat far out of the money. I did a market order, so of course I'm down on it a little bit, but you'll see as the day progresses. I'll show you this later. I'll show you this in a couple hours. This most likely will be positive. You probably won't be down on it unless GME rallies. This was not a good time. As far as timing, selling covered calls, you want to do it on a spike to the upside. You want to do it in the morning when the premiums are higher. Today, that very well could be the low of the day there. But that being said, by end of day, if we don't get a huge spike, that covered call will probably still be profitable for you on day one. So SPY's bouncing up here a little bit off of 403.75, a little bit above that, but that's kind of the level I had. Nice, looks like the green. What these guys are saying.
Helping to offset, some of this demand.
And some of the companies have pricing power,
right,
which has also helped them sort of navigate through this time of inflation. Did I cut you off to tell? Was there any more on the list? Because I'm writing them down.
Right. Yeah. I mean,
2 o'clock show.
Yeah. No. I mean, yeah. The cost cutting is really,
yeah, exactly. You can grow a position
right now.
I mean, you're making money
that's
with.
Really the biggest one that's been.
You're being the bank. That's like the simplest way to think of it. You actually being the bank or an insurance provider. You're selling insurance. So yeah, you're making money providing this insurance for someone. And the insurance is if it goes up, they want to capitalize on a huge move to the upside. Mine's bouncing up here a little bit.
4,100 to see when we get there. Where do you think we could be?
Yeah, that's the.
Yeah, so you collect the premium right away. So that cover call is sold, that money is in my account. Depending on if it's margin or how it's set up, you should have that buying power though. So I received $52 in credit, and that's mine. That doesn't change. If it expires in the money, right? If come expiration, February 17th, and GME's at $25 and I haven't done anything, I still keep that credit, but I'll lose the shares. The shares get called away and I will have sold it for $24.50. So, but yeah, the credit you get right away, you don't lose it. That's yours.
Flow. We're going to see some earnings contraction, right? I just don't think it's going to necessarily be as bad as some of the really dire bear cases that we've heard.
Right. Yeah, that's why it's a like what Donner was saying. If for this case, I bought 100 shares, like it's a little different because your guys' cost base is probably going to be higher, at least on GME. But so my cost base on these 100 shares is $20. Like I can't really lose on this trade. I can't lose at all on the covered call. I can lose on the trade if GME just keeps going down, but can't lose on this as far as this play, because I purchased these shares for $20.85. I've agreed to make money on it. I've sold a contract guaranteeing me profit. If GME goes up, I will have made the difference between $20, which is what I purchased it for, and this price, 24.5, which is what I sold the contract for. This is basically like a limit sell order. You think of it like that. You're agreeing to sell at that price, just like a limit sell. So GME's flushing through. This contract's not moving much, but that's because of spread, the spread on it, and of course we got a bad fill because I market ordered. But now you can see it's at least 0, and it takes time. I mean, it's slow. It's a farm, and the further out in date you go, the slower it will move. I guess the further from the money. Yeah, probably the further from the money, the slower to move also. So if someone picks up your contract, you make the premium move on. Yeah, so even if no one picks it up, it's a market maker. So they provide liquidity. So they're always you'll always get sold. There's always a market for it. So no matter what, you can buy or sell them. I shouldn't say no matter what, but yeah, pretty much. And yeah, if they exercise, then they get your shares for $24.50, and your shares are gone. So you made money on it. That would be the best thing to happen right now. I bought these shares for $20 a couple minutes ago. Someone exercises. Okay, thanks. I just made all that money, and I can go do it again. SPY bouncing back up here. I'm holding on to my ESs. I'm not. It'd be nice to stay green into FOMC, but okay. Rolling calls. We're not there yet. One step at a time. Yeah, I wasn't gonna get it. It's not no matter what, but yes, there's some stocks, some option chains where there's no volume and no liquidity, and so you're gonna have big spreads, and it's gonna be hard to get in and out of options. It's not impossible, you just won't get good fills coming in and out. So it is something to keep in mind. I mean, penny stocks, I wouldn't be necessarily doing on penny stocks. I would do it on something that has a pretty liquid options chain, and you can tell by open interest, volume. You can just look at the spread too if it's somewhat tight. The spread is the spread between the bid and the ask. That's the spread. For simplicity's sake, we'll just say just for GME at this point, just selling covered calls to GME. That is 2 p.m. and I think Powell's what, 2:30?
Tape bombs coming out. You have the Fed. You have, like
the GME is bouncing a little bit there.
Out, which, obviously.
And see this cover call? It sits here. We'll just look at it periodically today. So really no problem. It's down some.
Over here, but
doesn't matter.
I'm looking at an
our shares still have that same value, so it's up from where we bought the shares now, 0.05%.
Out of the money put spread, I'm going to be buying the 160 puts, selling the 150 puts. It's done for a $2.40 debit. Again, defined risk shot to the outside. Looking for a.
Now you want to get confused on options? Just stick around and watch these guys for a bit. You'll start to understand what they're talking about here if you keep going with this.
Okay, so bearish here after the recent run-up we've seen. Ben, your thoughts?
All right, I'm completely dialed in on the areas that Don just described, and what he's talking about is the range that we've seen since we sold off in the beginning of May, which we'll take a look at in a second. That was up around 223, a sharp move lower. we've been a bit contained since, but I wanted to begin with the move off of the double bottom we saw in the end of December. We're talking from 140 recently up to 172. Direct your attention to that bottom left corner of the chart, and you'll see, as I highlight again, we've got a very well-defined area where we found some support. You can see, again, as it played out around this 140 level, and you can also see, again, a stair-step type pattern to the upside that played out since. We're talking areas of consolidation along the way up with very little retracement, if any, at any point, never taking out the prior area that formed relative to the one that we're currently forming. Again,
MSGM's breaking through VWAP.
possibly breaking out initially.
Man, I thought I was going to make the move all the way back up.
But this
I guess that is
again,
kind of a resistance there at hit.
to what we've seen over the bigger picture. Now let's start with the bigger picture.
I don't get this massive short squeeze on the gaming
stocks. You can see the sharp sell-off I saw it mentioned the beginning of May on the left side of your screen there, 223 all the way down to 137, sideways around 155.
BBBY getting a little bounce.
But pretty well-defined upper and lower extreme at this point, right? Here you can see it. We'll call it 185 to the upside, 137 to the downside, working our way through the middle. We always talk about how that could result in a retest of the upper extreme there, but again, that would only bring us to the upper extreme. Now, I want to just quickly point out why, again, I think that this is important. Let's get a little bit more time on this chart here. You can see that this is a stock that, well, this one has been, and take a look, it's continuing to be trending lower off the highs that we saw, a bit of a double top in the summer and fall of 2021 into the selling that we saw throughout all of last year. Look at this. Here's that range we talked about and just kind of working our way towards the upper extreme. But lastly, I just wanted to point out where things stand in terms of the 50 to 200-day moving average, because this is a stock much like the broader market that has a strong run-up throughout January, but relatively contained. Here's that containment. Couple things I noticed. The lows that we saw on the end of last year took out the fall lows but saw limited follow through, and here we're seeing a series of lower highs come into play, so we're establishing a bit of a triangle pattern here, but no question this stock has been very comfortable around this 160 level, and again in a longer term trend off the highs that we saw last year, lower, just reaching an upper extreme of range we've been in for a while now.
It's amazing because everybody loved Target, right? And then you had that big gap down. I love that you brought that part up of the chart, and then you see us on that lower end of the range for some time.
She
Don,
loves it.
what do you think?
Oh yeah, this guy.
Well, it's an incredibly difficult environment. I mean, one of the things that I really feel, especially on a Fed day like this, that is being discounted is, look, you just came off of, what, 4 75 basis point hikes, another 50 basis point hikes.
Buys
When is
moving
this
back
gonna
up.
slow down the consumer?
It's just probably going to chop
I think
until
that
FOMC.
The clock is ticking. You've got again some very
Short
concerning
here would
debt
have
levels on
been
the consumer
better than
side
here,
right
but
now.
oh well.
Eventually, I think we're going to see a
The shark
very
is
dramatic
back indeed.
retail slowdown, and you start to look towards stocks like Target, Walmart. Walmart is basically flat on the year. Costco. I'm going after what is large and what would feel the most impact of a
pretty much any
declining
option chain
consumer.
that Donro messes with is illiquid.
Okay,
Any
so
stocks.
and that's going to be the big story too, the consumer in 2023. All right, let's get to the next one here, the triple Qs. I actually know that in the options trades they've been doubling down on the puts. Tell me your thoughts.
Yeah, this one's going to be very straightforward. This is big, bad, and bearish that I'm going to get into in the QQQ. One of the statistics I've heard thrown out considerably earlier in this week is that the NASDAQ has kicked off with the best start since 2001. Now, if you are a bit of a market technician, a little bit of a historian of the markets, look at the NASDAQ inside of 2001. It was absolutely horrendous. Obviously, one of the worst years on record for the NASDAQ. In this particular case, NASDAQ is up considerably. Again, we believe at this point, this is probably just a bear market rally. Nevertheless, I'm going to give myself the gift of duration on this particular spread. I'm going to go out once again. I'm going to use an April 21 expiration. Now, why 79 days out? Because I'm going to tell you right now, you don't want to step in front of this Fed announcement. We can still explode higher, or the selling may resume even, later today. Then you've got to deal and contend with earnings and big earnings and Apple and, Amazon and Google tomorrow. Again, it's, veritable a hotbed of risk. Define your risk, go out a little bit in time. In this case, again, the APE 21 buying the 280 puts, selling the 270 puts, $10 wide spread for a $2.21 debit. Very straightforward shot for a nice size move to the downside. It's bear market rally at this point.
All right, so you're going to have some patience here because we've seen obviously tech running up. You know, I was watching Meta from $88 soaring higher. I mean, just across the board, everything has been doing so well, and now people are trying to take some off the table. Ben, your thoughts on the triple Qs?
This is testing an upper extreme of a range that it's been in, again, on the daily time frame, bigger picture, trending higher last month. I love Don's fundamental breakdown in terms of the bearish narrative. The one thing that concerns me is it seems like everybody is bearish right now, and the market continues to go higher. So let's begin with the market and how it did go higher throughout the month of January. You can see we're talking bottom left corner to top right, 260 all the way up to just shy of 300. I did, as I like to, went ahead and mapped out some of the areas of consolidation. You can see them separated by vertical consolidation or vertical conviction to the upside in this instance. And then again, we just kind of continue to balance out with very little retracement on the way up in terms of taking out key areas that were established on the way up. So taking a look here in terms of a longer term chart, I've got the daily time frame, and I wanted to point out that we are by no means out of the woods yet, right? That chart we just looked at definitely shows the heavy lifting that the bulls have been doing, but a couple things that stand out to me. One is we're taking out the December highs here, or attempting to. That's getting a little bit ahead of the broader market at this point. And also you can see that, again, as I've been mentioning and kind of calling this market out as for a while, contained. You've got those August highs, you've got the October lows, and look where we are, just kind of working our way through the middle of that range. And even if we were to take out those August highs, look, you've got March and Feb highs from last year up around 370. So I wanted to point out here that move we just looked at in terms of January, absolutely counter trend to what we've seen since, well, we're going all the way back to the end of 2021. And I think this kind of staircase pattern, right, I actually use red lines in this instance to just kind of highlight the fact that this is a high conviction move to the downside that we've seen, again, with very little retracement in terms of invalidating the working assumption that longer term we're seeing a trend lower. And look, we're just retesting the upper extreme here. So this is going to be a key area to watch the bulls and the bears kind of battle it out. By definition, extreme means that price won't spend a very long period of time here. So let's look for this to move one way or the other, up or down, in reaction to the Fed, the jobs report. I mean, we've got some potential catalysts kind of fitting in line with what we're seeing in terms of the technicals here that are going to move us from this point quickly in the next couple days, I think.
Yeah, and without a doubt, and that's the quick moves that people are talking about and maybe even banking on. But Don seems to be more patient these days. We're impressed, Don. Final thoughts on the triple Qs?
Yeah, you have to have a little patience to be bearish in a marketplace that's been straight up in the beginning of January here. So I'm more than comfortable in seeing you can't time it, but you can define your risk and sit and wait for the move that you anticipate.
All right, let's get to GLD. I mean, we've seen gold running up 3 months in a row. Right now, 1944 a troy ounce. Your thoughts on GLD?
All right, so this is a GLD trade specifically surrounding, of course, the Fed announcement. However, the jobs report's also going to play a role in this. Very unusual trade for me. I rarely take, if you will, just a shot on one side or the other with just buying an option. In this particular case, I'm going to go out and just buy a GLD February 3rd, the shortest duration possible. February 3rd is this Friday. I'm just going to buy the 180 calls for about an 85-cent debit. The trade itself, though, is actually predicated on the idea that the Fed announcement, along with jobs, could possibly shake and spark sell-side activity specific to the dollar. If you look at the dollar index, been holding on to like that 102 level like it was grim death. It's actually slipping to the 101 level. The Fed could inadvertently actually cause a big sell-off inside of the dollar. Gold actually exploding to the upside.
Thanks, Ace. Appreciate it, buddy.
Again,
thanks, man. Sorry, guys. I had a phone call there.
To understand that this is
Spy ripping back up to VWAP here.
An 85-cent debit. Either it's going to work, okay, spectacularly, or it's going to fail miserably. That's one of the reasons we're defining our risk with this upside shot on a call inside of GLD.
Okay, what do you think when you watch
Pretty
these closely?
volatile so
Nicole
far
Donald's
before
talking about having to be
was
patient in terms
FOMC
of
even.
being bearish with the market we've seen
Me getting a
throughout
bounce there,
January to
too.
the upside. The
Oh,
GLD
let's see
bears have
here.
had to be patient as well because we've got a well-defined
Yeah,
trend
liquid chain
higher
suck.
throughout the month of
Learn about selling
January,
premiums.
to say the least.
Yeah, wheel
This really
strategy
started
is
back
pretty
in
good.
November. Take a look. You've got a big move up from
Paper
150
trade.
all the way up to this 181
The shark
level.
man,
Don just
he's
mentioned,
crazy. He'll stare right into your
180,
soul.
the
The cyborg.
expectations for some weakness
Yeah.
in the U.S. dollar. That would kind of continue this move higher, one would think. But I got a couple areas here that I established
Yeah, I don't like
on the way up in terms of what
explain
we've been
stuff
seeing.
too
The
much in
last
the wheel
time we
strategy
looked
playlist,
at
but it is a good one.
GLD,
And if you just
Nicole,
start
we had
watching
talked
it, you'll
about how we
probably
were
start
kind
to
of
figure
balancing
out.
around this 174 level. We
Just
talked about these
understand
areas of
what's going on.
consolidation that moved higher into the middle of this January. We talked about continuation more likely than change. And look what's happened since. Well, we established that area around 174, and then we broke out again to the upside and have a new area of consolidation. We're forming 178. Basically just solidifying the working assumption we've had along the way up that we're trending higher as we continue to establish areas of value at higher levels. This would feed into Don's kind of expectations that we're going to, again, see an initiative move to the
Central
upside
banks bought
here,
the most
break
gold
out
since
and
1967
establish a new
last
area of
year.
value
Wow.
higher, forming again or validating that working assumption that we've seen to
crazy.
the upside here as value continues to form at higher levels. Now, along these lines, look, you've got this very wide range that we've been forming, and that would kind of lend itself to what Don was talking about, potential some more room to the upside because we're convincingly through the middle of it right now. You
Please
can
get
see
Jimmy
the
to
triple
15.
bottom that we formed.
I mean, I'll
around,
do my best.
that 155 level, and gold bottomed out last fall around 1620, I think it was. But take a look. Here's that range. You also have this well-defined trend environment to the upside. This was a failed attempt to break out below levels from
Bouncing pretty good on
2021,
that
the spring of, and you can
2063.
see the rejection of that
Probably just
lower
with
level
SPY.
off of. And I just wanted to point out where things stand, checking in on GLD versus the 50-day, the 200-day moving average.
It's a
Look at
dollar
the sharp
today.
move that we've seen again. This comes into play back in November, right? We were just looking at the move up from January, but here's that triple bottom I mentioned around 150, and you can see here kind of just finding some momentum to
just
the
mostly
upside
come down
here right
today.
now. GLD nearing again or working its way through the middle of the
Oil's
range,
come down too.
potentially testing the upper extreme of it if this momentum continues higher.
All right, thank you for all of that. And today's a big day for us, Ben. We'll have Fed Day
see how this thing's
at
going?
2 p.m. So we'll have a
Look,
lot
it's
to
still about
discuss.
even.
Don, final thoughts
Again, I
here
got
on Fed
basically
Day.
the worst entry you could on this.
Yeah,
but look,
this,
it hasn't
this Fed
lost
Day,
value
and
with this
listen,
bounce.
Be comfortable with your risk. That's probably
So,
the
takes time
preeminent idea that I
to
want
farm.
to ultimately express to everybody. The SPX just between now and the end of the day is still looking for a 50-point move. So get ready. We're going to move, and you better be comfortable with it because this is big and binary right now. It's literally we're going to explode higher, explode lower. Be prepared for some significant
Maybe some of both.
volatility, not only today but through really the end of the week.
Mm-hmm.
All right, Don, we better get ready then, huh? Thank you both very much. Don Kaufman, co-founder of TheoTrade, and our own Ben Lichtenstein with the charts. Thank you so much.
Liechtenstein.
Coming up next, time to spotlight Electronic Arts. The video game stock plummeted after the earnings report yesterday after the bell. Much more from the group. 360 continues.
No, not the music. The music. All right, so we'll talk about rolling covered calls. I don't know if you guys are ready yet, but as Don said, there's like with the stock market and options market, there's like 5 different words for the same thing, and they try and confuse you. They try and just have all these different fancy words for it, make it sound like it's something different than it is, something more special. It's so annoying. Rolling covered calls, it's nothing. It's nothing. It's closing the covered call. So it'd be if I said, oh, I want to close this now, just the covered call, close it. So I'm not going to, but closing it, and to close a covered call, you're buying it because we sold it to open it, right? We wrote it, we shorted it, we sold it. So to close it, I buy it, buy to close. So I would buy it, and then I'd have no covered call, just have the shares. And then I would go and sell another covered call, maybe with a later date, maybe different strike, doesn't matter. That technically would be rolling, but you can do it in one trade, so they call it rolling. Because you can do it in one transaction, right? I buy to close this one, and then I sell to open another one in the same trade. That's rolling. That's all it is. It's closing and opening. Buy hanging out right there, VWAP. Okay, let's see. All right. All right, breaking VWAP to the upside.
Points. The Nasdaq down 0.2%.
They literally have like 12
Semis
seconds of
doing
ads.
well on the heels of AMD, but can't give it a go here for the tech group overall, 12,081, and the Russell is down 0.2%. Now for a look at developing stories, I'd like to bring in Kevin Green, senior markets correspondent.
SPY starting to move up. So the only reason I think we would get maybe volatility before is if something's leaked. And you start to see price action from it, which would be unfortunate.
Top
but
and bottom line there,
happens.
and they also saw some significant growth when it came to Latin America and the emerging market segment of the business as well. Latin America actually grew about 29.7%, and the emerging markets grew about 20.3% year over year. And because of that, and the results that they had on their earnings, Piper Sandler actually raised their price target on the company to $80 from $77, and they kept their outperform rating or overweight rating. And they do believe that the company's guidance is very conservative at this point in time. There could be a nice little setup for a move to the upside when we see them report earnings for the next quarter. We also see Credit Suisse raising their price target to $76 from $70, and they keep their outperform rating on the stock. Once again, noting the earnings beat that they had, as well as the guidance that they have for earnings per share.
Oh, this is the
high single digits for 2023. So overall, we
like
are
Cadbury,
seeing movement
GME.
to the upside for the stock. It's up about 1% in the session today.
All right, thank you for that. Appreciate it. Nice to see the growth there for the company abroad. Thank you, Kevin. Now it's time to talk about the video game stocks. We're focusing on Electronic Arts, came out with its numbers.
No, talk about the ones that are squeezing.
Details on the group. Andrew Urkowitz with us, equity analyst at Jefferies. Thanks for being here. So tell us about the report. What stood out to you when you looked at what went on with Electronic Arts, and how can we interpret it for the entire sector?
Yeah, there was a couple of really, I would say the most interesting piece about it was you had a pretty significant guide down and miss. And yet in the commentary, they talked about, some of their biggest games doing really well. So things like FIFA, record year, The Sims, record engagement. And so what you get this quite, some things are doing really, really well. Some things are doing poor enough you have to guide everything down. Looking at Ubisoft, they had the same issue. A lot of their smaller games underperforming. And so the big question, I think, for the industry is what is happening? Why are the biggest games continuing to take share and doing really well and everything else doing very poorly? Is it macro? Are people, being more discerning with their spend? Are they being more discerning with their time? It's a big open question as we head into 2023.
And where's the delay? You did talk about an intellectual IP delay. What was that?
And so there was another delay. It feels like about half the guide down was the shift of Star Wars by 6 weeks. So it's not that big of a deal. I think there's been over 100 delays that we've tracked over the last 18, 24 months. So it's not, so that to me was not the most concerning thing in this print. It's really kind of the underwhelming spend outside of the largest games.
And what about mobile strategy and the shift there? I mean, what's going on? Are people using mobile less, more? Are they doing these on PCs or the actual game consoles?
Yeah, so on mobile, we had again, it's just been like 2022 was down for mobile across the board for everybody. The overall industry was down probably mid to high single digits. There's been some changes in the way you advertise, the way you gather players and capture new players. EA was, again, just like everybody else, really struggling to kind of capture those new players with some of these new rules from Apple and Google. And 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 what EA has decided to do is cancel some of their bigger mobile titles and further integrate them with the console and PC games, hoping that that makes it more attractive for players to come in and easier to find those players to play the mobile games.
Understood. And at this point now, you have a buy rating, right?
Kind of
on
rejecting,
EA?
or not rejecting,
Yeah.
but stopping
Yeah,
you up. Looks like.
look, we don't, as sell side fundamental analysts, we don't try to call quarters. We look at the kind of the longer term trend. EA has significant pipeline here. If this trend towards bigger games is going to become more of a reality, then you want to own the biggest gaming companies. And EA's pipeline has some of the biggest games in it over the next 3 to 5 years. Unfortunately, we're just not going to get any of them in the next 6 to 9 months. A lot of faster money guys are play the video game space in and around what's coming next. But
Natural gas is
longer
flushing
term,
through
we see
support.
real growth
Dude,
here
this thing.
as they start to
That's
build games around
crazy.
Star Wars, Iron Man, other sports, college football.
Gotta get it
So
a short entry on this thing.
there is a strong pipeline here that should get these guys back to growth relatively soon.
This is great.
And how do you feel about names like Take-Two? I mean,
53%.
Activision's going to Microsoft still. I mean, that seems to be the plan still. So you have Activision, Microsoft, Take-Two, and whatever else it may be leaping out. I mean, are there other things that we should be watching and others that may be buys?
Yeah, sure. I mean, as we look across the industry, we do think the industry will grow this year. We do think the biggest games will drive that growth. Take-Two's got some of the biggest games. We're expecting a GTA 6 in the next 24 months. And that's one of the biggest games of all time. And so again, we favor names that have great pipelines, but also some of the biggest AAA titles in them that will come to market over the next 24 months. We think that's Take-Two. We think that's EA. And so we favor those names.
Great to see you, Andrew. Thank you for all the details, and I love all the mentions of the games. They're so much fun for the gamers. I'm not a gamer, but I watch everybody else playing them, and I know they love, love, love. Are you a gamer?
Of course.
Look at this guy.
Of course. I mean, it's work, right, Andrew? That's what I think.
That's right.
Andrew Urquhart. It's
totally.
nice to see you, equity analyst at Jefferies. Thanks. Coming up, the Disruptors, and George Stills is all over the new name here.
Okay. Got a question about rolling covered calls. So cover calls are in the money, expire today. When you roll it, you go deeper in that. So that you're just talking about strategy now. And you're talking about technical analysis, and that brings in a whole lot of other, what I personally do, I mean, it's definitely different depending on the case by case. If I think the stock is going to keep rallying and I'm in the money and it's going to expire, then I'll roll it up a strike, not down a strike, and to the next date, either next week or next month. But as you're beginning, I would stick with the monthlies, keep it more simple. MSGM halted again. I'd roll it to next month. Why is it halted? What? And I always like to roll for credit. So basically what that means is EA sucks. So for credit would mean on this cover call we opened, it hasn't moved much because we just opened it. But to close it, see, we made $1 on it. So I opened it for $52. I received $52 to open it. To close it, I would pay $51. Okay, so that's the $1 I would receive. Now if I was going to roll it, and I thought the stock was going to go up in price, I would want to roll it to receive a credit. This is how I do it, but you can do it however you want. I would roll it to receive a credit. I would go to the next. It's confusing on here, but yeah, so I'm buying to close and then I'm selling to open. We don't need to get into the bit of this, but basically I would pick the next month, rolling it to next month, and then I just want to make sure I'm receiving a credit. So when the order's all done, I'm receiving credit, receiving more premium, not paying money. So if you look at this, this is the next month, is March 17, 25 strike. Okay, review. I'm receiving another $75 in credit. Because to close this one, it costs less than the credit I'm receiving to open this one. So that's where the credit comes from. So the credit to open this one is more than the debit to close my original one. That's always rolling for a credit. So sometimes if it's deep in the money, you have to roll a lot further out in time. MSGM equals volatility. Lesson number 1, MSGM. This is not volatility though. This is, I mean, it is volatile, but this halt seems fake. They're just toying with it now. They shouldn't have halted it there. GME bouncing up here. So see on this little bounce, Theta Farm, it's a nice passive income strategy. It's set it and forget it for the most part. So us just looking at it focused is not really the way to do it, but for learning's sake, that's what we're doing. But yeah, so see how a little bit of move up and now it's down a little bit. So to close this, I would have to pay $1 more than I received to open it. I trade on Webull, TD Ameritrade, E-Trade, Fidelity. This one is Webull. This one we're doing this paper trades on is TD. And then my long term I have on Fidelity. And my futures and options trades I do on E-Trade.
Something we've talked about when companies themselves, especially in the technology realm, are close to between 1% and 3% or close to the break-even level on net income basis, and that shows improvement, that's when you actually see these big adjustments in stock price. And I think that's what we're seeing today in Dynatrace.
And I'm glad you brought up some of the competitors too.
Welcome,
At this
Aaron.
point now, based on the outlook, how would you go about trading it?
Yeah. So what I've noticed about this stock, Nicole, is it doesn't trade a lot of volume. And typically speaking, we can actually see that it was trading in a sideways pattern, slightly higher in the last 6 months. If you look at the last 6 months, it's higher by about 13 or so %. But it did gap to the upside. So there's a possibility now that after the gap, contingent upon market conditions, because we don't necessarily know what will happen after this week or maybe even the following weeks after the Fed announcement, that essentially the gap that we're seeing to the upside could backfill back to around $41. So with the volatility still high and built into the options, but also the fact that it doesn't trade a lot of options and liquidity for spreads are not very
Dynatrace,
liquid,
what is this?
or the option volume is not very high, we can actually look at selling a very simple strategy we've talked about, especially coming out of sideways trends, essentially looking at selling cash secured puts. So what we can actually do is go out to the March contract with less than 50 days to expiration and sell the $40 put option. And effectively, you could sell this for $1.50 a share or $150 in credit and effectively per contract. So This allows us to participate if it happens to go higher from here. Eventually, that premium will erode away in value because we're selling for high premium. We like to see it, of course, erode to zero. And break even is at 38.50. So if you think the stock will stay above that level or above the 40, that's where the max profitability will be. This is certainly a trade you can consider. Now, and again, it allows us flexibility because if the stock continues higher, that premium will erode. But also, if it does fill that gap, potentially if we see some market weakness, if it holds that $40 level,
Thanks,
that's
guys, for
where
likes.
the trader will
Appreciate
achieve
it.
max
We're at
profitability.
30. Well done. 30 morning likes are dope.
I love all the scenarios. Thank you for all the details on this example trade. George Sill is so
Nicole.
excellent, always. Appreciate it. Good luck at Dynatrace, up 10% today. Coming up, our panel is ready to talk about Peloton, the at-home.
Yeah, see, that doesn't make any sense why that was halted. They're just trying to stop this thing. Trade of 8. I'm not familiar with Trade of 8. I do trade futures. I just use E-Trade. I just use the Power E-Trade, just the browser version even. I don't use the desktop. You don't need anything fancy for futures. They're very basic. I was already trading my options on there, so just started trading futures on there. But yeah, I mean, if you're already using a brokerage for options, if it's a legitimate broker, they probably have futures too. So, keeping it simple, platform you're familiar with. I'm not familiar with Trade8 though, or Trade08. Coming back down below VWAP. MSGM is being hustled, I think. Peloton's actually holding up nice. GME kind of consolidating down here. How's my laser doing? This thing's probably going to get squashed with everything else if the market comes down. SPY coming back down below VWAP. Wonder if AMC is going to just start moving a little separate for their convergence or whatever with Ape, or if that's even going through. It's interesting to see it move up today without GME. BBBY back at BBB barcode. Use Webull? Yeah, that's the thing. Chart and trading view. You can't buy and sell for scalps on Webull? Why not? Yeah, Webull doesn't have futures. Trading view makes sense just because yeah, that doesn't matter what platform you're doing your transactions on. be consistent with TradingView. But yeah, to do futures, I would probably just get another brokerage, not get like a futures specific trading platform. I mean, Thinkorswim on TD Ameritrade. This one does futures. It's good. So you can do stocks, options, futures on here. This is just the browser version, but the desktop version is pretty good. It's a bit more complex. I haven't really sat down to get comfortable with it yet, but that's actually what we're watching here. This is part of the TD Ameritrade desktop platform. They give you this network.
I think it's already moving in that direction, and trends are stabilizing. We have a professional at the helm for the first time after a long time of some nonsense with the CEO, and trends are stabilizing. And also, you're looking at Peloton; they have a huge moat versus peers. If we're looking at the connected fitness category, Peloton has a 50% market share. Nobody else has more than maybe 10%. So they are dominant in their category. Yes, the category is seeing a decline post-COVID, return to work, but they do still have a franchise here that is worth something.
Do you think that a deal is likely soon, Jim?
I mean, I can't speculate, but I mean, obviously the news flow today has been a list of names that might be interested. It does seem to make sense that there are larger companies out there that could benefit more from the subscription revenues that Peloton does provide. And with them looking to exit the manufacture of equipment and focus more on service, I think that it might be the right time.
Right. And we're in the midst of a turnaround. Chris, what are your thoughts on the fact that the prices, we've seen in some cases where they were cutting prices or they were making newer models and cutting the older prices, they have a great following, right? They have a pretty good market share. We were just talking about that. Is the price point right? Are all these things falling into place?
I mean, definitely the macro environment is going to be challenging. They're selling the Bike Plus for over $2,500. The Tread and the Row are over $3,000. So it is a hefty price point. But when they get people on the platform, they do tend to stay as the churn is very low and the subscriber base is very loyal. I'm wearing my Peloton shirt for riding 100 times. I think I'm closing in on 400 rides over the last 3 years. So customers do love the classes. They love the product. It's just about getting them on the platform. So they're going to try to get 1 million prospective members this year to try the Peloton app because they realize if you get people hooked on the app, they'll keep on exercising and keep on paying.
Mm-hmm. Jim, is this stock a buy here or a sell, or what do you think?
I mean, we're not in the business of picking stock, but what I can tell you is that this is a company that is gaining market share versus peers, seems to have stabilized a lot of their problems, has opened new channels, selling over Amazon and other networks, looking to change some of the missteps of the past. And, the news flow for Peloton has always been negative, and here we are showing some positive news, which is great for a change.
Yeah, that is some good numbers. Chris, over at Runnymede, is this the kind of name that you would put in a portfolio? What kind of names are you looking at?
I mean, we do like service companies, and Peloton is a service company. We do like companies that have a longer track record of history and of less of a bumpy ride. But over maybe the long term, I think it could be a name that we would look at. Just turning back to your question about acquisition, I think an acquisition in the short term is probably unlikely. Barry McCarthy, his options really don't kick in until the high 30s. So he does not want to sell out in the short term. He wants to build this company out and sell it out at a much higher price.
Oh, great.
Okay.
That number come out this morning.
Bottom in on GME?
11 million
Maybe.
open jobs. You think the labor market's going to cool anytime soon?
I don't think so.
It doesn't appear so.
Right, and
If market
I think
rips,
that's
maybe.
the concern from a lot of people. Now, those are backwards-looking numbers, right?
He's
We've
not
seen
gassed
more
on
layoffs.
6.3.
We just got more announcements today. Splunk laying off people, FedEx laying off 10% of their management team. Rivian Automotive just announced 6%.
High profile.
I was surprised how many EVs Rivian sold compared
claim
to
numbers are historic low
Ford
levels.
and Tesla.
So
Pickups, they sold quite a bit of those.
small business versus high profile
Probably still go
business.
bankrupt, but
And that relationship, that's tricky to measure because there's no one talking. Every headline, Tom, that we get every morning is about some big
right now,
company
Endgame
and
depends on my.
layoffs.
There's no way I can answer that for you.
Yeah,
How much
and
money to
that's
make a
what we
year?
talk
How much
about,
you have
that
invested in the market? What's your
lagging
long-term look like?
data
How many
that
kids do you
we're
have?
getting,
How
which
old are
might be
you?
a month, 2 months behind.
What'd you buy it
what's
at?
going on
What was your
right
plan when
now.
you bought
But
it?
one stock that's actually helping
Those
the
kind of
market
questions
a
will
little
not be
bit.
answered.
We'd probably have deeper losses if it wasn't for AMD.
It's consolidating at a high level, which
Senior
looks
markets
good.
correspondent here on the network to help us break
It's
down
way
these
overbought,
results.
of course, because these things
Pretty
have gone insane.
optimistic moves here in the stock, Caroline, after I guess decent.
I don't know
numbers.
your plan, your buying or anything. If it breaks the support, you can do like a stop loss down here. If it breaks that, it's probably going to keep coming down. This low. So if it breaks, say like 3,
up about 25%.
but if you don't want to do stop losses, because it's quite possible it just wicks down there and triggers your stop loss and rallies up. So, what's your risk tolerance? What state do you live in? What's the weather like where you are? Did you wake up happy this morning?
Topped expectations of
How many cups of
66
coffee did you
cents
have
per share,
yesterday?
Revenue of $5.6 billion. Beat expectations of $5.51 billion. That was a rise of about 16% in revenue. Data center revenue jumped 42%. However, client segment revenue
Okay, you don't actually have to answer these questions. But like I just said, it's holding up nice. It's got nice consolidation. It's way overbought. It's super risky. If you have a small amount of profit, you can take it. If you're not going to be profitable, if it drops below $3, then and you don't have risk stomach to hold through that, then I would just take your profit.
Guided for a 10% decline
Right?
year over year
That's what I would
in
do.
sales to about $5.3 billion. That's actually slightly
If you made money on a
lower
super
than
risky play like this,
consensus.
congratulations.
They expect strength in data center and embedded segment revenue will continue to be offset by lower client and gaming segment revenue. Did warn that data center segment revenue is expected to decline due to elevated levels of inventory from some of its cloud customers. But based on the stock, it's clear that investors are focused on the positive today and not so much that cloudy outlook. The stock, as I said, up about 8% today, up 25% so far in 2023.
That guy's still flushing,
I will say,
dude.
though, some analysts
Where is this
did
thing gonna find a
actually
bottom?
cut their price targets because of those muted expectations. We saw Mizuho lower to $90, but still have a buy rating. Wedbush
Yeah, we're getting
is
down
at
there, man.
95 from
822 is
100,
that
also in the buy camp or
low from
outperform camp.
2020.
But several other analysts raised their expectations for price targets. Credit Suisse is now at 96, Goldman Sachs at 87, benchmark at 93, and then in the less bullish, more in the cautious camp, JP Morgan's at 82 now, still neutral though. Deutsche Bank is at 70 and HSBC is at 67. So those obviously trading below where it's
So if
currently
it's
trading,
less low
very
risk,
less
then
bullish,
just
but
hold it
70%
and have a
analysts at
stop.
this point are in the buy camp. So
It's a small amount, no big deal. You don't mind.
bullish on AMD,
You know,
despite the jump
you could
that
have a
we've
stop
seen
down
so
here.
far in 2023.
Maybe it'll fill this gap and then rally.
Caroline, this is a winners and losers
But
story.
yeah, I mean, it looks
isn't
good.
it?
It's consolidating, but
when you
super
talk
overbought.
about
You could-
AMD,
could
we
dump still, of
always
course,
talk about the
anytime.
comparison to Intel and the
Where it
different
hit.
price reaction, the
we
different
still talking about
overall
this
tone
gaming
between
stock.
these two companies. AMD's almost getting a
Yeah.
Tesla-like close
It'll probably
enough
have a big pullback.
reaction, almost a
If it
relief
continues to go
rally
up after
from
that, maybe,
AMD. And this is a company where their
That pullback
processors
might not happen right now. It might not
Intel
might not
may
happen until
have
it
a
hits
competitive
$6.
processor with them until 24, 25. This is a company that had, if the market
Looks
turns
nice.
around,
It's consolidating. I mean,
that's
this is
they
what
seem to be
day
betting
2 or
on,
3
that
of
this
these
company
gaming
may
stocks squeezing.
lead semiconductors higher. I mean, the competition. This is going to be an
You can keep an eye on
long-term
MSGM.
story. How
See
AMD was to
see what
go,
this does.
was
This
able to go
could
up
probably give you
against
some
Intel and basically win, Caroline.
kind of foresight on it. If this starts to
despite
dump, that
lower
probably will
revenues,
also.
really taking market share. And Lisa Su on the earnings call said that they're confident that they can continue to take market share away from some of its competitors. You know, when I look at AMD, I usually would think of an Intel, which is basically flat today, as you can see, up about 0.1%, or an NVIDIA, which is actually up
2.6% today. Even more impressive gains so far in 2023. It's up, what, 37% so far this year. But we also saw Western Digital report. This is kind of the flash memory chip maker. They're lower today because of mixed earnings. So you can see how investors can punish higher than analysts were expecting. They noted
No, I'm
pricing
not
pressures
playing
for
any
flash,
earnings.
lower shipments
Earnings are
for
just complete roll
solid
dice.
state storage for PCs, lower retail hard drive shipments. No big surprises because we
Especially
know
not
what's
around
going on in the
FOMC.
space.
Like,
But
I'm
in
playing the whole
terms of
market
that
with,
outlook,
you know.
they are expecting revenue of $2.6 to $2.8 billion for the March quarter. That's down 38% from a year ago at the middle of the range. So seemingly getting punished for it, down about 5% today.
But there are a lot of
Still up,
earnings this
though,
week. That
more
is
than
true.
30% in 2023. So this is a space that's has definitely been rewarded. You know, we talked yesterday. Last year's losers, this year's winners. So not the case today for Western Digital, but so far this year.
Yeah, not surprising there. Western Digital relies so much on one
Here's this week's
segment
earnings
of
to
their
see what
business. Memory
Western
and cloud, decreasing
Waste
cloud,
Management.
CapEx, and
Peloton this
such,
morning.
while
T-Mobile.
AMD can
T-Mobile
offset
beat really
some
well.
of the losses maybe in the PC
after
space with that
after hours
data center
Meta.
business. All right, thanks to Caroline
pretty
Woods,
big.
senior markets correspondent here on the network,
Aflac.
breaking down AMD and the earnings.
Pre-market
up
Lilly,
nearly 8%
Honeywell.
on the day. Now let's bring in Nick Theodorakis, Financial Risk
Shell.
Management Director at
Thursday
TD
after close is a big
Ameritrade.
one,
Nick,
for sure.
I wanted to get your take here. Ahead of the Fed meeting, we had a lot of data today that we went through. Market's a little bit weaker, but optimistic as a whole since the start of the year.
Yeah, you guys said the percentages, and I think what's really telling in all this
Pull tomorrow, Google, yeah.
No, it's not like
Well, after hours action.
last year and
Jimmy be at 19 minutes by now.
Yeah, hold on one second, Nick. I don't think we got your mic set up.
Gotta
here,
wait for FOMC,
real
man.
quick. I'll come back to you. Kev, real quick, your thoughts here. Quarter basis point hike. Is
I showed
Powell
2060.
hawkish? Because if he gives any sign of dovishness, the market will take it and run, in my opinion.
All right, let's look at our covered call.
The numbers that he's getting, his high
Look
frequency
at that. See, it hasn't gone up or down the price.
And this JOLTS
but this
data,
covered call,
this has got to be
we're
concerning
making
to him,
money
Tom.
on that.
I mean, I've given
That's
a
just
litany
theta decay
of
happening.
reasons why he should be more hawkish.
Right,
but
5%.
He's got to be fearing his worst
And
nightmare.
just back here, we were negative.
Reignition.
The price is about the same.
You can make the case that right now, as
But we've made money
speak,
on it. But we're selling
inflation
time.
is moving down.
Which way do
When
stocks
does it
go?
plateau?
Always.
When does it
You can
firm up?
always predict
There's
which way they
a lot
go.
of reasons
They always go
why
right.
he should look on this economic data.
Up, down, who knows?
And
They're always
government
gonna go
spending,
right.
which I keep pounding the drum on, and be
He's
extremely cautious. So
selling premium.
does he go Jackson Hole?
You're always
Jerome
getting the
Powell,
direction right.
And talk
Right?
harshly?
Because you're
or
selling
does
that.
he
The chart
do
will
what he does
keep
most of
going
the
right.
time,
If
which
it stops
is
going
deliver
right,
a
then you're
pretty
gonna lose on it.
Friendly response. There's the question. But boy, there's a lot of concern, right? You've got unemployment at a level that is not frightening to you. You've got one job now because unemployment's not a problem.
Right.
You really have one job, and that's inflation.
Right.
And your biggest fear is that it stops going down.
Right, and Nick, to that point, you know, he's kind of got to put the hammer down on this market because it seems like the market's, you know, judging that they're going to be cutting rates by the end of the year. The terminal rate for the overall equity markets and Fed funds rate is basically reflective of about 4.88%, 4.9. They've said we're going above 5. We're going to keep it there. We're not cutting rates this year, but the market doesn't seem to get it. Who's going to be wrong or right here?
We were looking at some of the, you guys got my audio.
Yeah.
Losing in-person audio is a rare thing, guys. Maybe we need more AMD chips to solve this. I don't know.
The problem is if my mic went out, I think they'd still hear me. There's the real problem.
Right.
I don't think anyone would notice.
Broadcasting from home, I get losing. Anyways, you know, I think he's got a really challenging job here because the market is saying, right? The market
Still
is saying,
dropping. Wow.
we don't believe what you're saying.
right?
Yeah,
Which is, and we were looking at some of the trades going on yesterday, kind of from the institutional side, and there's massive positioning in these new SOFR futures and the SOFR options. There's people taking massive bets and buying upside calls in longer, I'm sorry, in shorter dated stuff. They're saying this isn't going to happen. The people are putting real money behind this, and that's what the market's saying. We're saying we don't believe that all these kind of signs of slowing down can continue, and you're just going to keep your foot on the gas, right? You see the sign up ahead that says, caution, 30-mile-an-hour curve, and you're going 65, right? You're going 65, you're going 65, and all of a sudden you hit that curve, and you're like, I got to jam on the brakes. I mean, everybody has to do that, right? Nobody goes head first into the wall, and I think that he's going to say we're not going to put the brakes on as long as he has to until they think that they're right at that point where they have to crank the wheel, is how it feels to me, because he doesn't want to give an inch in terms of sentiment right now and say, hey, we've done a good
Buys
job.
back at this low, see if it
when
holds.
They said it was transitory, when they said they had it under control, and they said they needed to put more money, all that stuff kind of proved to be wrong. So the last thing they want to do is take credit for something that isn't fully evolved yet. And then you throw these job numbers on from this morning, and we're going to get more jobs information tomorrow, more jobs information on Friday. But you look at how strong the labor market is. I think in some areas, in some of the commodity spaces, in some of the service spaces, some of the manufacturing spaces, you can hear it's come down. But these job numbers tell a completely different story. So I don't think he's going to be willing to pivot at all yet. And he's going to say we're going to be we'll slow down because things are looking a little different. We don't want to overdo it. And that's the easiest message to say. We'll slow, but then we can ramp right back up again.
See what happens here.
The market's underestimating the fact that unemployment and because of the China situation,
these guys,
other inflationary pressures could come back up a little bit, and they re-accelerate this. The market is not positioned for that.
That's one of the key points that we talked about earlier this week, Kevin, was the fact that, hey, if the market's thinking that everybody's okay, right? Your portfolio is going up, your home values are coming down a little bit, not much, right? Home builders are back to year-high levels, even with interest rates at double what they were a year ago. And so people are putting money into big assets. Their houses, home prices are just below all-time highs, buying cars, right? And then, you've got the home builders up, interest rates are up. I mean, it doesn't make any sense that when you get that wealth effect back into somebody's psyche, like an investor, then he's going to spend more. What does that do? That causes more inflation, right?
Housing, I think, is its own issue, right? Because and you and I have talked about it on this show. I believe when interest rates get volatile, like they did in the past, that people don't just decide I'm never buying a house again. They wait and they form a queue, right? And the minute rates stabilize, like they did, all the queue just unleashes on the market. And I think that's what you're seeing in the home builders. Renewed interest because, well, rates were over 4. Now they're 3.5. The 30-year mortgage was over 7. Now it's in the low 6s. That's bringing people back in. Right. Is that right? Remember, even since 2007, 8, 9, there's been a shortage of homes in this country that they're trying to catch up on. That's why I think in the normal market, demand for homes will be strong. That doesn't mean it won't pause when interest rates are volatile like they were the last several months.
I think that's one of the key things. If you start getting home prices to crack a little bit, that'll take care of a lot of things in effect, and then get maybe unemployment back up towards 4%. I think that's what the goal is right now. Nick, real quick here, when you look at that, expansion in risk on assets at this point, I got the rally in some of the stable consumer staples, dividend-paying stocks towards the end of 2022. But now you're back into companies that are unprofitable again. You've got stocks up 20, 30% in January, and they're still unprofitable.
I don't know about the
whole seems like
home shortages since 2009.
Is getting ahead of itself.
If you happen to be positioned in a way where you've recouped the losses from trades you put on, say, middle of last year, thinking you were buying the dip, you got to look really closely at those. I think classic trading error is to let your losers run and to not take your winners. If you're back to zero on some of these names, I think you got to look at hedging. The VIX is only 19 and change right now with all this sort of news coming out over the course of the next 3 days, and then on into the rest of the earnings season. You got to look at hedging, and you got to look at protecting yourself at these levels if you're in a situation now where you've recouped a lot of that. And what is the position you want to have going forward? I think people have to sort of look at this and say, I might be spreading out into sectors that I'm not as familiar with. I'm not just buying, IT stocks anymore. I'm really diversifying myself a bit more. But with a rally like this, it's a pretty good time to assess your portfolio, take some smaller gains if you have them, and then redistribute capital.
Right. Yeah. You got to always manage risk. I think that's a key takeaway from that point. All right. Let's take a quick break here. When we come back, we're going to take a look at Meta Platforms, which reports after the close and was up over 20% in January. Fast Markets coming right back.
Let's walk through charts. One of the most common.
Audio gets me every time. GME looking super illiquid. SPY, I think that's a new low on it. So let's see, 403.75 I have. Never even hit that before. But kind of the same area. The wick spec here is where it bounced off. Breaking that. Just erasing this madness move at close yesterday. What a catastrophe. UNG. That gas may be bouncing. Do I dare go long on that? No. Let's see how our covered calls are doing. Mm-hmm. 7.69%. And again, we sold this at a very awful time. I sold it in the first like 10 minutes today, 15 minutes. This would have been up, and we would have got a lot more premium for one. Probably would have gotten like 70 bucks. And this would have been up probably like 20-30% now. So imagine if GME starts to rally with some speed up to VWAP, this is going to go back negative pretty easily because it's only up a little bit. But the point of the theta farm is just to let it go. You want the time to go by. The opposite of buying options, you're selling them. So you're not trying to time it. You're trying to just sit on it, let time go by. All right, SPY, little green candle on that 403.75. Exactly.
To help us break down the fundamental backdrop here in Meta Platforms, George, because stock's still off over 50% from year-ago levels. Had a nice January run up with the overall market. What's the key to this earnings event for this company? Is it pulling back on expenses and stop talking about the metaverse, in my opinion?
Well, I think it is definitely going to be expenses. That's going to be the foremost issue with Meta Platforms. But if you consider their business right now, I mean, ad monetization has struggled in the last year or so, but so has the stock price. And I think if you were to look at the estimates and earnings, at least even for the quarter they're going to be reporting, considering even next quarter, I would say it's underwhelming. So let's just take into consideration.
Pretty big bounce there on that
estimates
support.
are going to be about 39% down in earnings compared to last year, expecting $2.23. Last year was at $3.67, but see, last quarter, $1.64 was the number. So we're going to see some sequential growth, assuming they hit these estimates quarter over quarter. Now, revenue is also expected to be down about $2 billion relative to last year at $31.7 billion, about 6% to the downside. Now, last quarter, the company actually had a quarter where they reported sales contraction of 4%. And what we're actually seeing is the challenge is not necessarily on user growth. The user growth continues to increase at a fractional rate, somewhere in the low single digits. It's the monetizable active user, while at the same time operating expenses are going through the roof because of the metaverse. And that's been the structural challenge, business challenge for Meta Platforms. You know, at the same time they're losing monetizable revenue, they're also increasing expenses. So if they can flip this on a forward basis and they beat the estimates, We may end up seeing a continuation pattern in Meta platforms, but I will stress this. One of the things I did notice is that if you look at next quarter's estimates, they're actually lower than the previous quarter, which was lowest in the last year at $1.53. So the bar is set really low. I think for this quarter as well as even next quarter, which ideally speaking is actually maybe a good thing, because a lot of the companies, I'm going to use AMD as an example, that seem to have reduced their earnings estimates at least in the last 3 or 4 months or so on a forward basis. If they do beat the numbers, they seem to be performing better. So it'll be interesting to see. The company's still very profitable. The challenge is profit growth. In order to get that, they have to do something with expenses. And also, where are they spending this money? If they deploy
pretty big bounce
more
there.
investments, perhaps in artificial
Engulfing
intelligence,
candle
we know
too.
that theme is very popular right now. That may be
Be a
seen
good long
favorable,
right here,
but I don't know
at least
if,
for a move up
that
to probably
Zuckerberg's ready
VWAP.
to cut back on the metaverse expenses just yet.
I think investors want to hear him cut back on the metaverse spending at this point. And I'll tell you, I think Reels is going to be a real key moving forward. They're taking market share away from TikTok a little, and that's monetizable at some point. All right, George, appreciate the rundown here on Meta Platforms going into earnings. Now, Kev, I'll go to you real quick here before we get to Nick, an example trade. Meta Platforms, they've got monthly active users across all their platforms, over 3 billion on monthly active users. That's a good base to start with if you're trying to create revenue, but digital ad spend down significantly.
Digital ad spend, a cautionary tale came out when Snap released their earnings, and Match.com, frankly, released their earnings.
Yeah.
But remember what George was talking about with monetizable assets. What he really means is they make less money off Reels than they do off other more mature parts of their business.
Right.
And so they haven't gotten Reels, which is incredibly popular and maybe the most popular part of Facebook, Instagram world right now. That doesn't make as much money as the other parts.
Yeah.
It's harder to get the revenue up to that level. So they're struggling there. That's hurting. Obviously, the spend on the metaverse is struggling, and digital advertising, what we talked about, is hurting them across the whole board. But that's Amazon, that's Google, that's everybody.
Yeah.
But Mark Zuckerberg's got to come out and be a real CEO and talk about cutting expenses based on the overall picture. He's got to understand the economic environment that he finds himself in.
Yeah, cutting expenses. There might actually announce more job layoffs on this, because I know he was, at the end of last year, he was trying to force people out. Basically like, hey, you guys want to go? Underperformers, get out. That, that's been helping stocks when you announce this stuff. Nick, your take here on Meta Platforms, and you got an example trade for us.
Yeah, I think there's a lot that can be done just by the conference call and the wording that's used without necessarily, really doing a ton from an expense perspective right now. He can say we're going to be cost conscious. He can say we're going to reallocate, right? He's got, how many people live in the world, guys? 7 billion, right? He's got 3 of them on his platform. Like that's a pretty powerful and compelling place to put your advertising dollars if you're going to spend. So I think there's one element here that, and George hit the point, and you'll see this in my example trade, but I think there's a little bit of potential upside, and that's why I brought this example, is if you're cutting back, you might cut back on Snap, you might, as a company, but Facebook is the place where the most people are. You get the most bang for your buck there. And restructuring how companies have to pay them, restructuring where they're allocating their resources internally is something that is pretty easy for them to do. And this digital ad spend in general is very volatile, right? If companies see that they want to ramp up advertising, the quickest and easiest place to do that is in the digital space. TV ads take a lot longer, things like that. So there is a little bit of a lever under this, and I think if they outperform those already extremely lowered guidance numbers, you could see a little bit of an upside here in the stock.
Tom, one last thing. Something to watch for with Meta. 2 things. Obviously, TikTok, if that gets government regulation against TikTok, that could be big. Yeah. And the other thing is, if they come out with a solution to ad tracking, if they come out with any update on, hey, we're beyond the Apple iOS problem, we've got our own ad tracking, that will reignite a positive message.
Yeah, that was a big
problem
hit to them in late 2021 into 2022 based on that. But Nick, break down your example trade real quick here for us in Meta.
Sure. So this is, I brought a trade last week, as I said, I don't think it's really worth selling front week vol going in earnings, but this is a pretty expanded volatility with earnings tonight and expiration on Friday. So a little bit of a different look here. Essentially, it's a double diagonal, it's a double calendar. We're selling this week's 167.5 calls and buying the 140 puts. So selling a front month strangle is essentially how I think about it. But I've skewed it a little bit to the upside. So there's about a $15 expected move in the stock. I'm giving about $20 to the upside and only 10 on the downside. So you can skew it either way. This is skewed to the upside, obviously. In addition to that, the protection we're buying is 30 days out. So it's the March 3rd weeklies, 30 days out. You're buying the 140 put, so it's a straight up calendar on the downside, and then buying the 165 calls. So there's a little bit of a vertical component to that, $2.50 long vertical, which is why the trade's more expensive. It's $4.55 right now. But there's a $2 long vertical built into there, which is why you see that shape of the graph to the upside. The 167.5 strike is really where you're going to profit the most in this. You're looking for it to go higher. It doesn't have to go there tomorrow, right? You want it to kind of grind higher and not blow through those short strikes on earnings.
Yeah, so let's break this down. Going out to the March 3rd weekly series, 30 days to expiration, buying the 165 call and buying the 140 strike put. And then in the near term, February 3rd weekly series expires in just 2 days, selling the 140 put, so you've got that 140 put calendar, and then selling the 167.5 strike call. So you've got a put calendar and a call diagonal here. Kev, you're paying roughly a 450 debit. You got a pretty wide break evens there between about just below 200 and about 129, 130 on the downside. Wide range. What you pay is your risk on this.
Number one, 4-week trade. You mentioned the put calendar call diagonal. And how do I know it's skewed to the upside, as Nick alluded to? Look at the delta.
Right.
10.5 deltas, right, on this trade. That means Nick has made a little adjustment where he's skewing it to the upside. Why? How did he do that? Well, 2 things. He moved the strikes, and he made the call side a diagonal. Right. So there's a 2.5 point vertical spread embedded in that call trade. So a couple ways that Nick has taken this relatively normal neutral trade and skewed it to the upside.
Yeah, about a 10% move either way in the shares as far as the anticipated market maker moving here. You do have some short or some assignment risk on those short options going into earnings until the end of the week. But a good look at a different type of strategy where you skewed the double diagonal type of position, more upside profit potential near that short 167.5 strike. But a good look at an example trade here in Meta Platforms ahead of earnings, taking advantage of that divergence and implied volatility. All right, thanks to Nick Theodorakis, Financial Risk Management Director at TD Ameritrade, for breaking down markets and Meta for us. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for discussion on Canada Goose, which reports earnings tomorrow.
Canada Goose. I've had that drink before. FedEx is in the process of reducing the size of our officer and director team by more than 10% and consolidate some teams and functions. FedEx's news. In other words, they're firing 10% of the people. Rivian Automotive is reducing workforce by 6%. FedEx shares up 1.4% after that news. Wait, FedEx up 1% after code to cut officer. Yeah. Natural gas futures keep dropping, but it looks like it's actually bouncing there. US heating oil. India's Adani Enterprises calls off its share sale. That's the guy that lost the most money. I think he broke the record. Broke Elon Musk's monthly loss record. Not much of a bounce so far. This still isn't a engulfing candle at a support though, so I think it could still play out where we get a move back up. VWAP or 405.50 maybe. BBY kind of moved up to VWAP there.
Then anything here in Chicago down to about 0 over the last couple days. Probably need those, but I'm hearing like overseas weather's better than expected. China was on lockdown. Are you guys seeing any positive data out of Canada Goose into earnings? Because it seems like we've had a mild winter here in Chicago, even though it's cold this week. But does that equate to maybe less people buying this according to your data?
Yeah, so it's kind of a confluence of trends. I think you've kind of hit that weather is a factor for a company like Canada Goose, and we are seeing the company perform pretty well. If we look at global page views, so the number of people just visiting Canada Goose's website, you can see the cyclical nature of this as it starts to get cold. People start looking for these types of coats and jackets, and I am actually a little bit surprised to see, given the weather patterns that you've talked about, the mild winters we've had, that they've been able to achieve some growth in this cycle compared to last year. I really kind of expected it to be down. But the reason I think for that is really kind of a bigger picture, and that is the consumer in the high-end side of things, the luxury side of things, the consumers of affluence are doing very, very well. Inflation, interest rates tend to impact these consumers less than the rest of the world, and it really shows. If we look at high-end apparel, mentions of people going upscale in terms of their fashion choices and their clothes, we're at all-time highs according to Likefolio data. And I think COVID was a little bit of a break point for that, where people decided, once they were able to get back out and about, they were going to look good, they were going to spend money and make sure that they made the most out of every outing. And so Canada Goose, I think, is getting hit a little bit by those weather patterns that you mentioned. It's just not as cold as early as many expected, and then probably as the company expected. But they're benefiting from the larger macro trend of people just wanting to go upscale, and these are expensive coats. I'm sure, Tom, that's why you said before the break you weren't going to buy one.
Coats you talking about?
I know how you like to save a dime, but Canada Goose, very expensive coats.
Canada Goose.
In the right place right now.
Drink.
Expensive is where you want to be in fashion.
Not if we're going.
There's
Not for a recession.
There's a lot going on with this company. Some of it is trading,
but maybe the rich won't really feel it. They'll keep buying nice coats.
Some of it is more into the consumer, like we talk about in this show a lot, which is their margins are big and going higher because just like Nike, they're going to more digital, direct-to-consumer purchases. Now, their expansion into Japan, into South Korea, it's capturing that high-end customer. Tom was right. China is vitally important to this country because that's where, with so many retail products like this, a lot where their growth is going to be. But this is also a company, last December, is buying back 10% of their outstanding shares. So this is a company that believes in itself, Andy. And again, the fundamentals are there with the direct-to-consumer moving and the growth into other countries. This company, even though they seem very narrow in what they sell, they sell big parkas and puffy jackets, but they have a big following and they continue to grow, don't they?
Yeah, and they're a status symbol. I think when people see that Canada Goose logo, it conveys something.
I'm not
about
familiar
the
with Canada
person
Goose. BBY breaking VWAP there.
And a lot of people like that. Enough people.
GME looks like it's going to move up the VWAP, maybe.
$1,000 coat. And I do think that they work really well. They're going to keep you warm. They're very well made. And so, you know, when we look around, you know, this theme in general, you know, Canada Goose is one of many companies that has benefited from this known shift to luxury or high end. You know, there's On Holdings, which owns the running shoe, ticker symbol ON. They own the running shoes that are high end. Revolve Fashion, even Lululemon. These stocks are up significantly since October. Canada Goose is up, I think, 41% since October. So it's had a really nice run. I'm not sure going into earnings if the run has been a little bit overdone, but for the long-term investor, I think that looking at these names where their customers have money and are a little bit less likely to be impacted by interest rates is the smart play longer term.
Yeah, I mean, this stock's back to levels we haven't seen since, you know, about 2.5 years ago. We've come off of those lows. You mentioned that the stock's is up, 25% over, down 25% over the last year, but still up about 35% so far this year. But Andy, compared to a lot of the competitors, right? Do they have that Lululemon type of you know, mindset from the consumer that I'm willing to pay a little bit more against other competitors, not only the status symbol, but because of happiness? Is that one of the key data points that you guys look at, right?
Yeah, it's really one of these companies that has a really sharp dichotomy between the people that own the jackets and that buy the jackets and wear the jackets. They love them. Their consumer happiness is very high. The brand loyalty is very high. The people that don't own them, and especially some of the activists like PETA and others that get involved, they really hate this company and talk very badly. But I think Canada Goose knows, you know, as well as anybody, that its bread is buttered by the people that buy its products, not by the people who talk bad about them. And so they continue to make high quality items that portray a certain level of exclusivity or wealth to the world when you wear one. And that's their customer base, and they're sticking to it. And I think so far they're doing a really good job.
Yeah, it shows the resilience of the upscale consumer, and they're willing to spend at this point. And then you got the market back up. Wealth effect takes a hold. You can afford one of these. Do you have an earnings score going into this report, Andy?
Yeah, unfortunately, we're neutral. You know, I like this company, but the stock has already moved so much since we started some bullish coverage of it last October. I think we're kind of played out on this run, but we get a dip on earnings like we saw with Lulu, and I start to really like it around $20 or so.
Yeah, that's true. I think that's been a theme.
Never heard of that.
This earnings season.
What's the ticker on
that
it?
we've seen doesn't make me
Goose.
want to buy it.
Oh, what I have. I've actually traded this one.
Double digits, 20-30% in a month. All right, great stuff as always, Andy. Appreciate it.
That's quite the tear from 16 bucks.
That's Andy Swan, co-founder of Lifefolio, breaking down the data.
Yeah, it's right at resistance. It'd probably be a good time to short it.
I like that thought process, though, Kevin. Hey, we're neutral on it now because it's run up so much. But to his point, Lululemon fell pretty significantly post earnings, gave you a little bit of an opportunity.
Yeah, it just ran from.
Oh, it was a great short. I'm gonna open a short on here.
So
got an RSI divergence there in the daily.
More than 50%, but. You know,
it's right at resistance.
What Andy was saying is this.
Not a good day to open it, but
if someone
whatever.
can identify what they feel is the best,
practice some.
Like Lululemon is the best yoga pant, right? Canada Goose is the best winter jacket. That's the one that holds that medal for being the best one. And I think that's what Canada Goose has. If you have that patch. And walking around with that patch on, people think, ooh, that's the best coat. That's the expensive coat.
Right.
I think that's their status symbol. Now, you're right. The stock has run a long way. But, Tom, how about this? Here's two stats that aren't the fundamental kind.
Dude, SoFi is in the money.
I already mentioned, company has
Look at that thing go.
A plan to purchase back 10% of the public float.
Yeah.
That they came out in December. And how about this, Tom? Short stock interest? 26.8%,
right?
Extremely high. Yeah. So some of this is a short squeeze on this.
And
so
only 105 million shares outstanding to begin with. And Lifefolio's data does not reflect overseas, international.
Right,
China
they're going to
huge
Japan,
market.
South Korea, China.
I mean,
those
probably
are
not going to short squeeze here, fellas. Let's keep our pants on.
So, short term, you can do the short term calendars are pretty efficient. They're trading like 25
They're doing
cents.
bullish plays.
If
I
you
would do
wanna
bearish.
Measure the expected move and then do
Just
the
moved
calendar.
up
But
almost 100%.
what I did, Tom, was something more. I went to
In like
March,
2 months,
44
in a month.
days, and
At
I
a
did the
historic
unbalanced
resistance.
butterfly. I did the
Got a
24,
RSI divergence here.
30, 32 unbalanced butterfly, and you can see
At the best,
buy
it'll
one of the
consolidate.
24, sell 2 of the 30 strike. That's where the peak is there, Tom. And then buy
Uber
1
rich,
of
don't
the
wear
32.
labels.
So you've got a 6-point vertical and a 2-point vertical. You're only spending about
Excuse me.
$1.55. Now you need movement, but you've got time if that were to happen.
Yeah, let's break this down. Unbalanced butterfly here. You can see
GME
from our
moving up there
example
some.
here on the risk profile, we've got paying about $1.60. That's going to be your risk. $160, $155
I don't like this
per
play at all. I
spread.
think it's
buying one of the
go
24
long
calls,
there.
selling
Just
2
like the
of
other
the
guy
30
said he wouldn't go
strike
long with
calls,
shares.
and buying one of the 32 strike calls, all in the March cycle. About a month and a half till expiration. Break even, 25.60 to the upside in Canada Goose. That's about $2 above the current share price, so you need to move. But it's not just an earnings play, right, Kev? It's duration, because you've got a month and a half in it on this particular example. And I think one of the key things is, even if the stock does go down a little bit, you've given yourself time on this. You're defining your risk. Now, because it's unbalanced, you've only got one break even, that 25.60.
Whoa, BBY with a move up. Where were you guys?
But above
Huh?
32,
Where were you guys on this move?
Your profitability goes down
Almost
a
said
little
anything.
bit, but it'd still be more than a
BBY is doing the exact same thing I did yesterday.
Set up on a longer duration, unbalanced.
But yesterday I did it with
All
SPY
right,
and much later in the
good
day,
look
so
at
this
a
might be
different type of
legitimate.
strategy here in Canada.
More legitimate move.
All right, but coming up after the break, we're going to take a look at another stock that reports earnings.
I don't
after
see
the
any
close, and that's
news.
Corvo.
You guys have any news on BBY? No news. Just typical midday volume and price rip. There are rumors that bonds started getting paid. Well, today's the cutoff for their interest on their debt, I think, right? I don't know what debt or what interest exactly, because JP Morgan basically is recalling their debt and wants them to pay immediately, so not too sure. There's so much just information out there that's flooded about it. I don't know what's true, what's not true, and what matters or not. Like, just to give information might not even have any bearing on anything. Who gives a crap, this or that? They need to pay back their bond debt back today. So today's deadline was for their bond debt. That JP Morgan debt was just not bond debt. Can only tell you what I saw on Reddit. Some guys pointed out someone received payment. Gotta wait and see. Yeah. Yeah, I mean, I imagine that would be bullish, but who knows? Seems like something might have happened there, though. it is moving on its own. It's not like with the market or GME or anything. We got a very awful fill on some debit spreads.
And just coming off a bit here. So nothing to get too concerned about, but definitely a potential catalyst here being this afternoon.
Yeah, and we've got oil falling, Ben. Anything out of the OPEC Plus meeting that's causing crude to fall here?
Well, they went ahead and left the production cuts in place, and I think that was for the most part as expected here, Tom. But we actually did see a bit of a build in terms of inventories come in, and we're seeing crude oil prices come off
GME,
a bit
I think
here,
it's totally natural.
$76.
Stop loss is like
and I did notice here that
big rips down
well, crude
in the
oil,
midst of volatility to the upside,
here.
or
Look at the chart.
vice
You can see after
versa.
selling off a couple
Usually you don't have
spike
stop loss
highs
to
we
the
saw
upside.
last year up around 120, 130. We've been mostly 83 to 70 as of recent.
No, this is just
I noticed here though, while
natural
crude's
sell-off.
kind of
It's
contained
5%, man.
here still, take a
Still
look
got a long
at
ways to go to
natural
get to 10.
gas, because we're back to April of 2021 levels, back below the $3 level as of recent to 250. Now natural gas is lower this week. It's 8 weeks in a row to the downside, 9 out of the last 10. This has been a slide from 750 down to 250, reminiscent of the declines we saw last year from August into the fall of last year, October from 10 down to 5. So again, basically a massive slide there. You can see again
massive.
Energy prices coming off for the most part, but
Crazy.
crude relatively contained compared to what we've seen in terms of heating oil, in terms of natural gas, and some of the other selling in some of the other majors. A reflection of what we've seen in terms of weather, I think, as well, Tom.
Yeah, definitely helping inflationary pressures at this point, Kev. All right, thanks to Ben Lichtenstein, senior futures contributor here on the network for the market update. Now let's get into this discussion about core loads. That one that we talked
intraday
about
volatility
quite a
on
bit,
BBBY.
this
I don't
might
know.
give us some insight into Apple's quarter.
We've seen this, like that move up to view up yesterday with volume at the end of the day.
Big supplier in the
and that
smartphone
rip
industry.
with the SPY.
We've seen a pullback in demand and supply.
I guess this is
supply
different because it's not with the market
but
at all.
they're not only in smartphones, Kev. They're in everything.
They're in
So
Android
what's
phones
going
too,
on here?
and a third of their revenue though comes from Apple.
Yeah.
Make no mistake, they are heavily dependent on Apple. And last quarter, they had a nice beat on earnings, 266 versus 227. However, a year ago it was 342. So the slowdown in smartphones has been seen here. And by the way, but the thing is, Tom, a lot of it was Android slowdown. Yeah. Android numbers were down. Apple's were actually firm to a little bit higher. So all things considered, it's the Android that's weighing, but they're still, they make so much of their money. The problems in China that Apple had during the quarter probably going to show up in this earnings release. We'll see though, but it's definitely a heavy supplier to smartphones.
Yeah, and they said that the city came out with a note, put a positive catalyst watch on the stock based on the fact that, hey, they didn't sell a lot of phones in China, right? That's a big portion of their business, but that's supposed to expected to pick up pretty significantly. And then, the supply chain issues that they had in China affected the U.S. markets during the holiday shopping season also. So that's going to be a concern. Stock is down about 20% from year-ago levels, but had a nice run in January, like most tech names did. So it's off of those 52-week lows that we saw a few months ago on this. You can see some of the estimates there that they're expecting about over $727 million in revenue expected. Estimates for EPS about 64 cents. So I looked at the strategy, Kev, because implied volatility has been inching up going into this report, expanding a little bit. So I looked at it as one of the strategies that we talk about sometimes to take advantage of that or capture it with the expectations that we're not going to see a movement in here. Now, there's one correction here at the bottom of that trade. We're selling an iron condor, so we're taking in a 260 credit.
Yeah, EBIT's up.
Debit. You're actually collecting.
Yeah, all the game stocks are up pretty much. MGAM, MSGM,
here going out to the February monthly cycle, 16 days till expiration. Selling a put vertical that's out of the money, the 105-100. And then selling a call vertical that's out of the money, the 115-120 on that $5 wide short iron condor collecting roughly about a 260 credit on that. That's what you can make on it. That means you got about $240 in risk per spread. But your break evens, Kev, 102.40 to the downside, 117.60 to the upside for this. And we expect, or historically what's happened after earnings, implied volatility collapses, we get that vol crush, time decay is working in your favor.
Range bound strategy, short about a delta and a half.
Yeah, yesterday's volume on BBBY was crazy.
So pretty
so
neutral
low.
here.
28 million. Today is at 9 million. So
Corvo is a move
on pace for higher volume.
Your two short strikes. The 115 call, the 105 put. If you think that's too big or too little, you can move those strikes around. $5 spread. So, the risk reward, pretty fair, right around 1 for 1.
Right.
So that is the good part of it. You just got to be. This is a range bound strategy.
All right, I got some net gas to the long.
But you've got elevated levels. That's how you do.
A little
that.
risky,
now,
but
so
I think it can move up.
Tom, they take that credit. That's 255 because it's so big, and they move their strikes out, which gives them a little more room. Now it'll lower that credit, but it gives them a little more risk-averse trade. But so when you see big credits, that's a signal, right? That vol's high, and the move could be big. You either accept that risk or you move your strikes out a little more. That's the choice of the individual trader.
Right. And on the upside, you've only got $5 wide strikes, but down on the downside, you could definitely do that. Now, Kev, if you can do us, just do me something really quick here. If you think this stock's going to move more than the $7 that the option market's pricing in, because you got 16 days, there's no weekly options in here, Kev, push the buy button on that, buying the iron condor as opposed to selling it. If you think this stock's going to move more than anticipated, only 100 million shares outstanding. So this
rounding bottom,
relatively small.
slowly making its way back
and
up.
This is another way to look at an iron condor. If you think it's going to move more than that one standard deviation, right?
Full
this is the play. This is the opposite of
and then
everything that
turns out
we
it's
just
run
talked
by
about.
crappy CEO and their awful company and go bankrupt.
$120 on the upside or $100 on the downside. Your break even would be the long strike now plus the 255. So you've got a chance to turn 255 and make 245 on this trade, and you get to go to bed at night hoping for a big outsized move. Now the downside of that, Tom, negative theta, and you see in this big range you max out. It goes at or towards zero.
Yeah. So it's the opposite. You want it to move more than that, but you got duration. So even if it doesn't move right
check
after
out our
earnings,
covered
you got
call here.
16 days. All right, Kev, that's going to do it for you and I.
It's moved up some, so it's probably
today.
negative.
Stick around right here on the network.
Negative 4%. But see, that's like the same it was when it was here at a lower price. That covered call. That's just showing you volatility and time decay. Because if there's not a lot of volatility to the upside, that contract's not going to go against you as fast or as hard. Theta, yeah. Buy's finally making its move up. Excuse me. Last of Us, we actually watched the first episode, and I played the game, so it was kind of like just playing the game again. And the game was, I don't like scary stuff. Neither does my wife, so I didn't feel the need to keep watching it. First episode was pretty good though. It didn't have too much creepy zombies or whatever. But I remember from the game, after that first intro, basically what the first episode was, from there on it was basically them just creeping through buildings, fighting them, and I was like, it's probably gonna be mostly zombies from now on until they get to back to the police guys. Walking Dead. Yeah, see, I'm not into that stuff. I did play the game though, and it was a good game. You guys, Rush MC, we're going finally up or down the market? I think both. I think we'll get volatility both ways. What's gonna matter is where we're at the end of the week and next week, because even if today, say we rip up to 410, 415 on the SPY, and we all thought it was bearish or hawkish, the initial reaction, that's not always the way it's gonna go, the way it's actually interpreted. So time for it to kind of marinate and for people to trap people in their plays. Could definitely happen. Yeah, I figured in the show they wouldn't just have it like them walking through buildings like the whole time, because most of the game was at like exploring buildings, right? But yeah, I don't know if we'll keep watching it. Probably not. But I do like that guy. Whatever his name is, from Narcos. SPY is still weak down here. That's on Netflix, isn't it? GME kind of moving up here. What's BBBY is holding up there. Hasn't kept ripping, but kind of interesting this midday just rally. Just want to keep an eye on that. All right, SPY's now starting to grind up. Same with BBY. GME as well. We've got 50 something minutes till FOMC. Which program? Red Dwarf your bot? 9 windows of graphs? A sarcastic bot. Mr. Director.
It was sort of going to live or die by that sword, and maybe kind of a counterintuitive way of thinking, because the budget has gotten a little bit tighter for American consumers, and maybe you aren't seeing quite as much Nike sales taking place worldwide as well. It's to the benefit of a company like Foot Locker. They're going to offload some of that inventory that they can't sell direct to consumer to companies like Foot Locker and some of their peers, and keeping those relationships going so that they can sell as many shoes and other athletic apparel that they can at Nike. So we'll see where this ultimately goes on the long run. They still have a Nike problem, regardless of how collaborative it's going to be. Whenever you're that exposed to one other competitor who's trying to cut you out, you're always going to be at that risk. But I'm going to say downvote for Foot Locker. Interesting note from Credit Suisse. Interesting move here today for the stock, but there's a bigger fish to fry here on this list.
Okay, and our next name is also making a nice move higher. That's Altria in reaction to its earnings. They posted a nice beat on its top and bottom line. Well, we did see its earnings rise about 8%
It's on HBO?
from a year ago on sales
What
that
the
did
heck?
decline about 2% year over year. Now for 2023, they expect their
All right, there's the move
adjusted
SPY.
earnings
See,
to be between
it shakes you out. You
$4.98
get your
and $5.13
signal
This is
here with
ahead
this engulfing
of
candle
what
at the
the street had been
support
forecasting. The
on a
company's
5
board
minute.
did also
But then you have to
approve
hold
a
through all
$1
this.
billion
That's not always the best
share
entry. Sometimes it is,
repurchase
sometimes it
program, which is
isn't.
expected to be completed
And then it doesn't
the
actually
end
make
of
its
this coming
new
year.
move until
They
way
said high rates
5,
of
10,
inflation
15,
did
20,
affect
25,
tobacco
30,
consumers
35,
as
45
discretionary
minutes later, and it's
income
making its
was
move.
hurt in 2022. However, they did note that their business has not been
Nike
materially
app's
affected
pretty
by
dope.
increased costs
Altria, that's in my
stemming
long
from
term.
global
Little
supply
ML.
chain challenges and high
Go smoke cigarettes,
inflation
people.
in the last year.
Go
We've
die young.
discussed Philip Morris very frequently as of late, Alex, as some analysts have thought that it has a
Ron Swanson with his
resiliency
boyfriend?
to it in terms of if we do
He's
face a
homosexual in that
market
show?
recession. Altria also looking similar.
Ron Swanson? Is that the main
up
guy?
about 2.5% this year, still down about 18% from its highs, but one of these names that is more steady
Well,
and also is getting a nice lift
You
today.
said too much.
Yeah, pretty high yield associated with this one. Oftentimes seen as a consumer staple, defensive, resilient. And typically, I would say a name that's more associated with kind of long-term investment as opposed to trading. But when you have an earnings
Snickers.
announcement, there's always that capacity for pretty substantial moves. And for a consumer staple that trades with relatively low implied volatility of
What's
downwards
Snickers?
of about 20% or
Is that a
almost in
ticker?
line with the overall market, to make a 4% move is notable. I mean, if you imagine a 4% rally in
that's
the
a different
overall
app,
stock
Snickers?
market, that's a big day. And so for something that trades with very comparable implied volatility to make that kind of a move, it is impressive and certainly notable, but I'm going to say downvote because the king of this group
Oh, maybe
is
it's rejecting
certainly
our
Meta
lineup here.
Platforms, our last one on the list. You could take all three of these first companies we talked about, combine them, multiply that by 3, and you're still smaller than Meta Platforms. And this is after it's lost half of its value. So we had to talk some Meta.
Yeah, of course we had to talk about, I'd say, the biggest earnings report of the day expected today after the close. And I saw a headline this morning that said, Snap dragging on all social media stocks. That's not true anymore. Meta Platforms now higher on the day, albeit slightly up 0.2%. But hey, I will take it ahead of this report, shrugging off some weakness we saw from Snap. But they are
Weird,
expected
BY just hanging
to
out there
post
now.
their third straight quarter of declining sales as they also grapple weakened ad demand. The street has pegged revenue of just shy of $32 billion, which would signal a 5.5% drop from a year ago. The sales slump has more notably accelerated in the recent months after falling less than 1% in the June quarter and around 4.5% in the September quarter. The street is forecasting a net profit of $6 billion, which would be a 41% drop from a year ago. So that would be pretty substantial. However, One bright spot is analysts are forecasting its daily active user base is continuing to grow to just shy of 2 billion users, which will be up sequentially. The company has already warned that Apple's policy changes
buy a whole lot of
alone
shoes,
would
though.
translate into $10
When I have, it's
billion
been
in lost
in
sales
store.
in 2022.
I bought shoes online. I
Like
shouldn't
you
say
said,
that,
Alex,
but
shares fell by
not been on
two-thirds
an app, I
last
guess.
year.
Just,
To put in perspective,
well, maybe it
that's
was an app. I
erasing
think I
more
bought
than
shoes from.
$600
My
billion
wife gave me
in
some shoes
market
from
cap
Gap
for Meta
with their points.
platforms, which is now up 24%
Maybe that was
for
on
the year
her
and
app.
up 69% from its lows.
Definitely not enough
Most
to
importantly,
have
this
specific
is the quarter that they get to maybe
shoe app
steady the narrative a little bit. Obviously, they made
marketplaces.
some pivots after a tremendous,
Thank you, Tainted.
tremendous sell-off in their most recent quarter
Wasn't me.
that they announced 90 days or so ago. Then they talked about layoffs. They talked about focusing on cost cutting and getting back to the core business. And you've seen a really
Gas is coming
impressive
down
recovery.
now.
But are they going to stay on that
I went
message
long
that's
here.
working, or are they going to go
This
back
break.
to, hey, we're still very focused on the metaverse and things like that the market hasn't liked? So a couple things, obviously upvote, big earnings name, kind of the appetizer for the big three tomorrow. But I think for the first time, the market sort of said, fool me once, fool me twice, in regards to the Snap reaction. It's like we only have to wait until the end of the day today. Just wait and see what Meta has to say themselves, as opposed to trying to always read through and connect too many dots and overthink it. Same for Alphabet, which is a little bit weaker today. We might have a message from Snap, but why don't we just wait and find out, because we're going to hear from both these companies very, very soon. And
it will be interesting to see if
that's
advertisers
for used shoes?
more drawn to a name like Meta with its scale versus Snap, or if
Crazy.
this is a collective issue, because that would be a concern, I guess, then for Alphabet, which does report
All right,
then
GME moving
tomorrow.
up.
But we'll be upvoting both of these
I can
names.
see how
Sticking with
our
a social media conversation
covered
with
calls
our
are doing
Chartmaster coming up next.
down
We'll also be looking
10.5%.
at example trades. Stick around. Next Gen Investing.
This has to
We'll be
do
right
with
back.
when we opened again. I'm gonna open in the morning and on a green candle if you can. But I still imagine by end of day it'll probably be green, profitable. So I have an order to sell these contracts at VWAP. Could lower it to here. I don't know if it'll make it all the way up there, but I think it will bounce at least to 25.75. Microsoft has introduced a Chat GPT Plus subscription at $20 per month. Oh, they got right to work. Right, there's a little move up. GME back to VWAP. SPY inching. This long here still would have been a good trade. Well, not right here. It would have been green, but this was the signal. Had a support with an engulfing candle. Just needed 40 minutes to enter. But now we've got a bullish MACD crossover, got green over the 9, so more things in its favor now to rally. What's the price range you want GME to be based on? What's the ideal price range you want GME to be based? You mean like how far out of strikes are you picking? Thanks for your likes, guys. We're at 34. Not bad for this early in the day. Helps to get them out early. Get those thumbs up in FOMC's in 45 minutes. Nike typically re-release shoes that are popular but limit the number. Oh. I see. So that's where you get those from. I don't know what you mean by price range. Are you saying how close to the current price? You said that about Zella. I didn't know what you were talking about. Talking about something else? Because this doesn't look like anything to me. Or I'm not seeing it. BBBY rejecting further upside. Back to VWAP maybe.
Support or resistance or some other kind of notable technical information to try and base where you might find a stall in what's happening. So looking at the chart more closely, we can see that we're up about 23% still since the start of this most recent rally, since about this point over here, but definitely in jeopardy right now, especially if we can't hold on above these two moving averages. And it doesn't look like we're very slightly below them right now, a couple cents below. So it could happen, but it'll be really important to see what goes on in the close of today's market. So note as well how high above us the 250 exponential moving average is. It speaks to how significant and severe the decline has been in this stock during the past couple years here.
So looks like it's rejecting now. Yeah, it's up an engulfing candle.
Twice as much as
we don't get to move all the way to VWAP.
That speaks to a lot here. And looking at the RSI, our measure of momentum, been zigzagging pretty wildly back and forth here. We briefly were in the overbought area yesterday before it came crashing down. Right now we're hanging on by the skin of our teeth above that midline, which represents the shift between bullish momentum and bearish momentum. So we're still
exposure to the AI space
here, but it's very precarious, I would say. Looking for some
a lot of volume.
Resistance to the upside. If we do manage to
see what's going on there on the daily.
Come back and start rising again, the 1250 mark
chart doesn't look good, but
where prices bottomed
out like that cheap price
and topped out in these areas. So that could be a point to keep your eye on. If we do keep going lower, look for this trend line here, this very mild upward trend line right around here near the 850 level. So probably 1250 to the upside.
Reverse split.
$10.
Another reverse split. Yikes.
Are the points to watch.
Yeah, and Rick, 850 I think is really critical because of the analysts I saw that were reducing their price targets or updating their price targets today. I saw really a range between about $7 and $9 a share. So then 850 would be pretty much the midpoint there, obviously implying some further downside from where we're currently trading. But
a lot of volume. It doesn't look good,
given
though.
the fact that I have seen a lot of negative sentiment today from the reaction we've seen from the analyst community, at least. Walk us through then an example trade that leans on more bearish in nature, continuing its move lower here.
Yeah, first off, lower price stocks, so accessibility is going to be there for many account sizes with different varying degrees of risk tolerance and interest. But in the end, it comes down to what is your opinion. You talked about the analysts leading a little bit more bearish. Certainly the reaction today was bearish. But within that $10 stock price, it's important to also note that a $1 move one way or another is a 10% move. A 50-cent move is a 5% move. Those would be big moves despite the fact that it's a very small notional dollar amount. And so I wanted to look at the options market and how we can still make even smaller trades in a very small underlying to begin with, but still requiring quite of a substantial move to reach that max profit. So what we looked at here was buying a put vertical
keeping it down
at the money. So
you can tell that from the candlesticks.
Strike, selling the $9.50 strike going out until the February expiration. If we spent 25 cents on this, that would mean we have $25 in risk in order to make $25, not accounting for transactions.
You're asking as if your cover call expires and nobody picks it up, you don't win, lose anything except for what your shares do. Yeah, we're selling covered calls. Your max gain on it is what you sold the call for. So, yeah, on this trade, I'm not going to make any more than the credit I received to sell this call. $52. That's the most I'll make. it's a separate, you know, separate from my shares. My shares will go up and down in value. But if you look at your shares as just something that has value, an asset that has value, not even think about the price of it, then you're selling contracts for someone to have the right to buy those shares from you, buy that asset from you. So you can just keep making money of this as you hold your asset. But yeah, this is the max gain you're going to get on it. It's not, you're not going to get more than that. You're not going to get less than that either. So if it gets exercised, then you still get that. You get that right away, but then you're going to lose your shares for that strike, though.
But looking at the stock chart here, we can see that there's been a long downward sloping trend line, this blue dashed line that was broken fairly
That much volume doesn't
recently,
make sense for it
right
to move.
around this point. We also, during the start of this recent
maybe.
rally upward, we took out our two shorter
I see what
term
you're
moving
saying.
averages,
It
our
could be,
21
I
day
don't
in
know.
yellow, our 63 day in orange, and we've
That's
transitioned
not a
to a
bad
very
thought.
tight, very narrow upward channel here. We're still in the upper range of the channel, so things are still looking more positive. RSI, our measure of momentum, is actually overbought as well too, so that's a sign of further strength. It does
now
not
SPY's
mean
moving
that
up.
the stock
have
is
patience
too
with this
overbought,
trade.
it's due for a pullback. Rather, going into the overbought area
We'll try and
is
chop
like
you out the
going
whole
into
time.
overdrive. You know, it's
But
a
it's still
sign
on its way up.
of greater bullishness. So in terms of support and resistance, this range from back here is what caught my eye first, this area here, because we had some pretty clear starting and stopping points. The 170 mark to the upside was where price topped out numerous
Looks
times.
like GME's
and
chart.
the 155 mark to the downside.
Is that the same time frame too?
Mark,
Look at
which
that.
was previously support,
It's literally
now that
right
we're
here.
below it, it becomes resistance. So that's
That
the
meta?
area to watch to the upside.
What's that time frame?
Heading into this earnings event here. That could be a sign if we get an upside move. That could be where it takes a pause or a breather, perhaps. We'll have to wait and see. To the
See that
downside,
consolidation with that spike in the
look
middle?
for the bottom of the trend line there.
Just
we
literally
can
like
see
right here.
that, that would be roughly around maybe 145 or so. And then we've got our yellow 21-day exponential moving average near about 138. So 155 to the upside.
Yeah, it is daily.
138 to the
Not quite the
downside
same, actually,
are some
but
key levels to
similar.
watch heading into
Look
this
at
earnings
this.
announcement.
This the
Yeah,
same
Nick,
time
I
frame?
like that you mentioned overdrive. I think that the bulls would
No.
welcome that. Although Meta
Back
has
here.
had a decent year thus far, it's still been beaten down pretty badly. It's shedding about
Little
2/3 of
different.
its value, like I previously said in the last year. So overdrive would be welcomed for investors in this name. But we'll leave it there. I appreciate all of your technical insight as always, Rick Ducat, our chart master. And then we're trading this name, Alex.
Masters.
Obviously, we have the advantage of the fact that the earnings haven't been released yet. I guess you could also look at that as the disadvantage
All right,
because this
30
name
minutes.
is volatile in nature, but from
Oh,
at least an
I'm
analyst
pretty close to my
perspective,
stop,
it
so I'm
does feel
scared
like
to put a
there's
stop,
mixed
but
picture.
also
so for
scared
that
not
reason,
to.
Perhaps our example trade today, then leaning more neutral to bullish.
Yeah, no doubt. And I did want to talk just real quick, too, if we kind of think about social media in general. We've talked about Pinterest lately. We obviously just talked about Snap and how those companies have almost polar opposite issues. Snap has no trouble getting people on the platform. They just have trouble monetizing the users. A company like Pinterest has a little bit trouble getting you on the platform on a regular basis. But once you're there, you welcome the ads, and
Something tis a
most
brewing.
easily monetized, and it's easy for them to sell kind of that space to advertisers. What's made
What if I just
Meta
close now
bigger
for a
than
profit
all
on
of
them?
its competitors combined is that it's been able to seamlessly combine those two elements. It has the most users, and the ads are relatively.
'Cause this thing could run up
welcomed. And
before we
there's
get
been,
FOMC.
Obviously, integration of sort of the shopping aspect of Instagram that's been hyper successful, and so because of that, they're not only collecting tons of data, they're selling tons of ads, and they're doing other things. That's made them just such a powerhouse in this space. And so while their ventures away from their core business have weighed on the overall sentiment over the last year, I think in general there is still that feeling of optimism about their role in social media and that role going forward in terms of digital advertising. So if you are neutral to bullish in this one, notably earnings have been volatile, Jenny. Most recently, of course, this stock basically fell into free fall, making a tremendous down move. If that were to happen again, even neutral to bullish strategies that give that window where you can be wrong will likely still be underwater. So I wanted to look at something that was high probability, but most importantly risk defined. And so looking at a skewed put butterfly, going on to February, so getting a little bit of time to that February monthly expiration, but buying one of the 137 puts, selling 2 of the 135s, and buying 1 of the 130s to define that risk.
Reverse repo came in at 2 trillion, 100 counterparties.
The break even on this would be 132.50. The way you find
GME
that,
getting shut down
$2 wide,
volume-wise.
put debit spread, the 137, 135, working
Weird
to the
little
advantage,
midday
and you
move on
add in that
BBBY.
credit, so that's where you get to 132.5. Total risk would be $250 on this one, and that peak also, which centers around the short strike, is sort of our absolute best case scenario. If we perfectly pinned 135 at expiration, is also 250. So sort of a unique one-to-one risk-reward ratio. However, that isn't the most likely occurrence. So most likely, if you were to reach profits on this one, it would be closer to that credit received, and that would probably be because this stock actually continued its ascent higher, and these
This
options
chart still looks
expired
bullish.
quicker.
It's just
So
at that
the real key here
resistance,
is
so
if you do get that added kicker, if it does center around
definitely
your
has
short
all the
strike,
all
but I would
momentum
look
in
at
the
it
right
more as that
place.
increases the probability of success by moving that break-even price lower. As
No
opposed
divergences
to,
or anything.
although it's your best case scenario, you're not really rooting for that. You're kind of just rooting for quiet, calm, limited reaction here, if not even to the upside.
Okay, and just one thing to add about the social media conversation. I will never download TikTok. I don't know about you. There's a lot of headline risk, I feel like, about Meta and the competition from TikTok. I am Team Reels all the way. And I think you're like me, too. I'm anti-TikTok. I'm probably in the
Team
minority
Reels?
camp there. But also
Never
important
heard
to
of
keep in
it.
mind for both of our example trades today. Multiple legs can lead to higher transaction fees. Short options can be assigned at any time. And carrying option positions into expiration can add risk. Like
Oh, let's get a little Yaz. Oh, Reels? Yep, not on the gram. Not ever posting on the gram. I tried to have Insta be kind of the nickname for it, but you guys all went with gram, so didn't spread like wildfire in my circles, I guess. Alright, I'm probably going to be putting on, for Jay Powell, I'll probably be putting on another YouTube channel, Stock Market Live. He covers macroeconomics really well. He studies this stuff like crazy, so I'll probably just be listening to him. He'll let Jay Powell talk, and then he'll probably have some commentary, but he gives good insight into all of this because he spends a lot of time researching, and specifically Jay Powell and the FOMC, and yeah. So that's probably the way we'll listen to it, instead of just listening to Jay Powell himself. Because depending on his wording and how it's changed from last FOMC, I mean that could have a lot of move on the market. All right, here's our move on SPY, slowly but surely coming in. Nat gas also maybe starting to grind up. Went long like right here, so kind of a high entry, but I do see this as making its move up. There's the rip on SPY. I'm just going to be holding these contracts through, I guess.
To restructure their business in order to be
we get one more Tesla low before
obviously, and then also to be able
maybe
to
I'll close
be a little
it.
bit more profitable and
but I don't think we will. We've
shifting
got 30
around
minutes.
their resources a little bit to try to focus on games that they know that will provide return on investment at this point.
Yeah, I mean, what a golden goose to have those sports franchises that you just conveniently get a resell every year as the team turnovers and roster changes take place. But it sounds like quite a damage to the sentiment to have these kind of cancellations or pausing of the plans for some of this development and pushing back of some of these major releases. And that might be overshadowing what was already kind of a disappointing quarter, but like adding more fuel to the negativity here, it sounds like.
Definitely, yes. It's just been it's been unpredictable when you look at the gaming space as a whole. It's not only EA, but it's also some of the other
Why aren't these
companies
guys
that are
talking
out
about
there,
these
like
ones?
Activision, Blizzard, and even when we look at names like Microsoft that really sell, the assets for those games or the consoles for those games as well, and even develop some games, we have just seen softness
Consoles.
across the space ever since the
Console.
COVID-19 pandemic. So we're trying to figure out where is the bottom here? Where can we find some consistent demand when it comes to consumers? Because right now it seems like the consumer is very flaky, if you will, when it comes to the games that they like to play and the amount of hours or the engagement that they are having with these games as well. So I think that's going to be the key. It's not only just an EA problem, it's a problem across the board when you look at the gaming space.
Yeah, and it looks like after this move in response to the earnings, getting back to basically yearly lows, or at least they're within a few dollars here, also corresponding to a disappointing earnings release at the early parts of last year. So we'll see where things shape up. Thanks for joining. As always, Kevin Green, great insights. Thanks for joining us. Looking forward to catch up with him tomorrow. Let's bring Jenny back in. Time for FOMO. Semiconductors in focus here once again. Building on our conversation from yesterday in AMD, we're also going to throw in Western Digital as well.
So we were talking about this yesterday. We were previewing AMD ahead of their report, and we were saying this will be very telling if some of the issues that Intel warned of, specifically with its PC and data center weakness, is this an Intel issue or is it an AMD or collective, really chip space issue? It seems, though, that AMD was able to fare this quarter better, and the street clearly liked what they saw from this company far better, with a nice move higher, shares up 9% in reaction to their fourth quarter. Although I have to say, AMD, though, not entirely in the clear. They did point to some data center weakness, which is still an ongoing concern looking ahead. Although they said the remaining inventory does still lie mostly in their data center business, so analysts are expecting a stronger half to 2023 as a result. These results really unleashed a collective sigh of relief, I think, for a lot of investors in AMD, with the company's fourth quarter earnings and sales coming in better than what had been anticipated, even slightly. Now, we saw, like I mentioned, the analyst community did react very strongly to this report. Barclays raised its price target to $90 a share with an overweight rating, saying the miss was expected and notably less severe than Intel, which puts a bottom to the PC correction and sets the stage for a return to growth for AMD.
I moved up.
KeyBank also
Leave it
raised
breaks
its
me
price
up here.
target to $95 a share, noting AMD did not guide 2023 and would not disclose its future revenue growth, but they anticipate a second half of the year recovery with a full year recovery in that data center unit. So that seems to be front of mind for the analysts. Now, what we have seen this correction in data center really, and what we saw that KeyBank actually said was worse than expected. They actually see things picking up from here for the remainder of this year. So all in all, from what I could read from the street, a lot of similar themes with AMD. Mizuho was one of the only ones I saw actually trimming its price target to $90 a share, but keeping a buy rating, highlighting its near-term margins, which could be softer. All in all, though, a 9% move higher after this stock has been down about 49% from its lows. A welcome move, not only fueling its gain up about 38%, or excuse me, 26% this year.
Yeah, no doubt. And it's still cut in half from its all-time high. So I think that's got to be factored in here when we talk AMD, Jenny, because this is the name that negativity's been priced in. We talked about Intel's struggles. We talked about the worries that were surrounding this report. But I think it's best said by sort of that analyst sentiment that you highlighted, which is, hey, things that they talked about in terms of outlook were not as bad as we thought they were going to be, or could have been, based off of what we heard from Intel and the general sentiment around semiconductors right now. So while the report was all right, it just wasn't that bad. And I think when you have a stock that's already been cut in half, you know, sometimes just not living up to those negative expectations is as good as a beat. And I think that's what we're seeing today with AMD's jump.
Yeah, I completely agree. This wasn't necessarily a super stellar, we're in the clear kind of report, but interesting enough, Western Digital, who also reported its most recent quarter, is seeing a quite different reaction today, down almost 4%. Now, they did really issue their March guidance lower than expected, which I think is clouding everything else positive we saw from the company, also highlighting this weakness in their PC and data center markets, which continue to weigh on the company's quarterly results. They did post revenue that fell 36% year over year, but at the upper end of its previously given guidance. They lost 42 cents a share on an adjusted basis, which was far worse than what the street had been anticipating. And the CEO did say they're continuing to take action to reset this business, but they did also announce the sale of about $900 million of convertible preferred stock to an investment group that's led by Apollo Global Management and Elliott Investment Management. So
Carvana 10% today
from Western Digital, but this is the name that actually into this report was up over
Looking nice.
33% this year. So consider
Yeah,
the
that
fact
breakout
that this
there
name
was
actually was
nice entry.
stronger than AMD, at least on a percentage basis, into this
Where'd I
report.
say this was going?
Just wasn't enough to
19?
please the street.
Yeah, it hasn't had the multi-year performance that a name like AMD
It's
has
low up there
had,
at
so that
15
sort
first.
of levels that playing field a little bit. But when you think about these names, I think about a very, very good comparison would be the conversation we just had in social media. A name like Snap and the selectivity that investors are actually having when it comes to investment. You know, why would you go
There's some
to the
short puts on
struggling
Carvana
company
actually on a red
when you
day.
can have the best-in-class name
Nice
that's still
IV.
cut in half? So Facebook's been cut in half, or Meta's
I like the
been cut in
principle.
half.
I just don't know if they're
Investors
executing
would
it
rather go
very
there
well.
than a Snap, and the same applies to AMD as opposed to Western Digital. And then you look at the struggles
SPY
within
rejecting
the space.
VWAP.
Just leads the opportunity. You really see the wheat separating from the chaff here, Jenny.
Yeah, and I think that's really well put. And I think that then when looking at these two names, if you were to be trading one of these names, I would then tend to go with the bigger of the names, the name that's showing more promising results, at least based on stock reaction. I would be looking to trade AMD now, just based off the reactions we're seeing today.
Yeah, no doubt. So we went to a pretty straightforward trade example here. Obviously, the stock's making a pretty nice jump, Jenny, but buying a at-the-money call vertical, $3 wide, going out to February, $1.50 debit, 80.83, $150 in risk versus $150 in reward. So we talk about that quite a bit in terms of that equal 1-to-1 risk-reward ratio on these ones. But this is bullish, obviously a positive move. The fear of missing out in a name like AMD for the better part of a decade has been to the upside for retail investors. Basically cut in half even after this nice rally that we've seen in the stock. I still think that sentiment is optimistic in AMD despite the cloudiness of semiconductors. And we talked about that selectivity of capital. If investors are going to deploy capital to semiconductors, names like AMD, names like NVIDIA just seem like those most likely candidates because of the trust that they've earned over the years, where names like Intel and Western Digital have disappointed and kind of continue to disappoint.
And to speak to that point, NVIDIA's shares are also up a nice 3.5% today in reaction, I'd have to imagine, to some of the AMD strength we are seeing. So collective strength really in these AMD, NVIDIA names that I do think the street does feel pretty positively about going forward. But that does it for our FOMO segment. Now coming up next could be another FOMO candidate of the day. That is Peloton. Peloton shares.
Peloton. Sounds like a transformer. Kathy Wood of ARK Invest has said that the market value of disruptive innovation platforms could scale 40% at an annual rate during this cycle, from 13 trillion today to 200 trillion by 2030. Wow. Okay. Econ calendar. Fed funds rate, Powell. Tomorrow, initial jobless claims. That could definitely move the market as well after today's move that moves the market. So probably taking profits today would be smart. We'll see if I stick to that, if there are any profits. And then non-farm payrolls on Friday, combined with all of the earnings, major earnings this week. So PMI, non-farms, and so tons and tons of stuff to move the market. Really, next week is maybe we'll see which way it's going to go, because that's just going to be crazy. I maybe should just get out and wait it out. It's going to be volatile. Need to be ready to sell, close, not get greedy. I've missed $4,000 in futures the last like week or so, just from not being greedy, but just I guess trying to get the whole move, and it just hasn't started yet. But I haven't lost that, so that is a positive. I don't want to take profits because I want it to keep going. I want it to whipsaw back and forth. This. That gas not wanting to climb yet. Just still chilling on that level. GME, low volume, and paper covered calls probably still down on that green candle. Yep, 16%. But tomorrow we get the same. If GME is at the same price, this will be positive. Because we only have, or no, I did a monthly. Never mind. This will take some time to decay. If this was a weekly, it would be moving much or faster. Could have been a weekly, I guess, but oh well. SPY looks like it's rejecting a VWAP breakout. And we've got Powell in 15 minutes. Well, FOMC, not Powell, I guess. Jimmy, a little pop. SPY coming down a little bit. That is with some volume too. It's not bad. This is what we like to see if Jimmy's gonna make a move. There's always hope. Jimmy just comes out of nowhere. Chart's still basically bullish. Yeah, it is still bullish, so maybe it's today, maybe it's after FOMC. Unless you guys listen to this guy, Stock Market Live here.
Of a pause in May, thus ongoing could be replaced with further tightening.
Yeah, we'll listen to
which
it.
Would be read as dovish. If ongoing stays, the presumption is the base case is for hikes at the next 2 meetings as well as today. So that's a very, very good one. If it doesn't change, base case is a quarter basis point from here on out until March, or March and June, or March and April, or May. The main question today will be the Fed signaling with regards to monetary tightening to come. The December policy statement said policymakers anticipate ongoing increases and rates will be appropriate.
It comes out at 2. Powell
Going
speaks
into
at
today's
2:30.
announcement shows that investors see 2 quarter-point hikes after today's expected move. That leaves just 1. If the statement still says ongoing, that suggests a noticeably more hawkish outlook than markets expect. So that's what I was telling you earlier there. It seems like it's there. Some people are saying now, if it is hawkish, or if they don't change the ongoing, that could be read as initially hawkish. This will be a tricky meeting for Fed Powell with inflation near 40
All right,
high.
man.
It's still been appropriate to be hawkish in 2022 meetings, but the inflation outlook has substantially improved in recent weeks. Powell will have to acknowledge that the progress and welcome it, but at the same time, he is likely to say that the job is not done to get price increases down to the 2% target. Powell's press conference have sometimes been misread on Wall Street, as in July, when markets saw an early pivot. Powell is likely to emphasize that there will be no premature end to high interest rates. Hot dog. The FOMC has an annual rotation of voters among Fed presidents. Coming in at the FOMC voters will be Chicago Fed's new president, Austan Goolsbee, believed to be dovish, Philadelphia's Patrick Harker, and Dallas's Lori Logan, both seen as centrist, and Minneapolis's Neil Kashkari, who is currently an arch hawk. So again, you only had 2 dissents on the last one. So as far as Powell has been in chair from 2018 or so, you've had about 6 dissenting ones, so that will be something to watch here. That's something I've even noticed myself, is that anytime there has been a dissent, it's usually a 2% plus day. So while the Fed's voting panel has changed since the start of the year, communication from officials before the blackout period didn't seem to suggest the possibility of any dissent. But surely we must be approaching this point where there will be divided votes on how much further the Fed ought to raise rates. I wonder if Powell will hint at anything along those lines in the press briefing. Ba-da-ba-ba-bop. 10 minutes remaining.
So if anything, yeah, we're gonna be listening to him. He, like I said, this is the Stock Market Live. You guys can go give him a thumbs up or something on the stream. He'll be playing it live, and then he's kind of giving a commentary on how to interpret it, basically. And yeah, it'll be interesting. So I'm thinking I might just, instead of a stop for small profit, I might just give myself some headroom for some upside volatility. Maybe like a break of this for a stop, but that'll just be a hard loss to stomach if I do close out up here from here. That'll be $400 probably. So I don't know if I want to. I don't know what I'm gonna do yet. Still thinking.
Rally in markets, which has the potential to undo some of the Fed's tightening. We saw in the minutes of December's Fed meeting that officials were concerned about this, but Powell has been
Second
very
Wicked Wednesday.
in addressing
Nothing.
this in
Everything's waiting on
comments. Obviously,
FOMC.
if he makes very direct comments, it's going to be controversial. He wouldn't want to be saying, "I want equities to fall."
We also had a little lesson on covered calls.
Stoke a rally today. Oh man. Understandably, there's plenty of focus on financial conditions, and it's likely to be raised at the press conference, given the solid rally in risk assets and weakening of the dollar as of late. What's less talked about is the inflation-adjusted or real Treasury yields remaining solidly positive. With the Fed's balance sheet running down to autopilot, true, the 10-year yields have rallied some 50 basis points since. It peaked in November around 1.75, but at 1.2,
Are you that same bot, Red Dwarf, that was talking
above
earlier?
the 2022 lows of negative 1.2% real rates, and it has now peaked above that
Yeah,
of
you
late
are.
2018.
They pan
You
out,
gotta
looks
wait for the
flexy.
color
What are you
tide.
talking about, Tree?
That could say a lot. That could say a lot. So Gregory Furinello, head of U.S. rates at Amervet Securities, he says, quote, QT is a big part of the real yield story, and it will continue even once the Fed pauses. They are very committed to letting that balance sheet run off, and that paper needs to find a home and pushes up real yields. Yallah. Bloomberg Economics expects the FOMC to raise 4.5 to 4.7 with the potential for
staying in a range. Still don't know what you're talking about. SPY is in a range today for now, but FOMC, and we're going to see probably multiple percent moves one way or the other, or both. At least 1 or 2%, I'd say.
Would signal that a sizable group likely favors pausing at 5%. Powell will likely acknowledge some progress in the Fed's battle, but stress there is still some ways to go before inflation is reliably back to target. 9 minutes till the release, Chad. I feel like time is slowing down, huh? Don't you feel it? Chief economist Anna Wong, she says, we expect the FOMC to downshift to 25. Fed Chair Powell will likely signal the Fed is still on track to raise rates to a peak of 5.25 and that policymakers don't foresee cutting rates at all this year. FOMC members need to see more convincing signs of disinflation, particularly in the labor market, before they can be confident inflation is moving durably downward towards the 2% target. See. Ira Jersey, I love this guy, says the Fed's post-meeting statement may acknowledge the slowing economic landscape, requiring Powell to emphasize that central bank plans to hold rates steady for a longer time than the market is pricing in. He says, we think job losses will be key for the Fed to consider cutting rates. Otherwise, on hold will remain the base case. So since November 3rd highs, the market implied projections for the upper bound of the terminal rate came down from over 5.25 to just over 5, while the expectations for December 2023 have came down by 50 basis points, around to 4.5 from 5. The results is there is now 75 basis point difference between the Fed's year-end projection and the markets as shown. So that is the game of chicken that we have brought up a couple of times. So here's an accompanying graphic. But I've showed you this in a different way, but there is 3 rate hikes difference, or one big one.
I think I'm just gonna put a stop at my basis. I don't need to ride the volatility. So I'm gonna wait though. Hopefully I'm still in the green before we start. And then if it does have an initial move up, it'll stop me out. Initial moves down, I'm probably just gonna close it on a big wick, like I did last time.
Between 4.2 and 10-year under 3.5, reinforcing a stark divide between investors and Fed policy. A weaker tone in the dollar also reflects the sense that the Fed is closer to taking a pause. Ian Ligon at BMO Capital sums this up. Investors will be viewing today's event through dove-colored glasses. Any comment from Powell that is not explicitly pushing back against the market narrative will be viewed as a tactic endorsement of an assumption that the long-awaited pivot is at hand. What helps Powell push a hawkish line is the labor market on cue. The latest JOLTS job openings released on Wednesday were the highest since last July. A big upside January number on Friday is what the bond market requires to alter its view. Blarini Arucci, chief economist at T. Rowe Price, says, without data to back this rhetoric, I expect Powell to tone to be challenged by the market.
Raise the debt ceiling? I'm not sure. I don't think so.
Message should start pricing the terminal rate in December statement of economic projections, which is yet to happen. Oh, man. Audrey Child-Freeman, Bloomberg Intelligence G10 Forex strategist, says a 25 basis point bump in hawkish tone aren't likely to substantially revive a dollar. The bottom line at the ECB relative policy rate differential.
I'm not negative on it, because then I'd have to raise my stop up to maybe this break.
At that time, when growth becomes more of a currency driver, risk reward has clearly turned positive for the euro dollar. Market watchers have come to a consensus that they think the Fed will do this year in terms of numbers of additional rate hikes. Deutsche Bank says its strategies see 2 more 25 hikes after this week, partly as the Fed won't want to see financial conditions ease too much as a result of being too dovish. Meanwhile, Sam Stovall, chief investment at CFRA Research, says that the central bank hike this week might be its final one before it pauses. Hot dog. Pauses for the remainder of the year, he wrote in a note. We see this Fed contemplating the start of another rate-lowering cycle as the inflation rate edges downward to the desired target. Looking at the last 3 FOMC meetings here, this is the volatility. we certainly expect some volatility over the coming hours and day. The risk appears to be to the downside, especially with the NASDAQ up around 10%. Over the last 3 FOMC meetings, the NASDAQ has declined 4.7 on average in the week after the announcement.
All right, 4 minutes.
So let's see if Powell weighs in at all
3.5.
on the press conference on the Federal Reserve debt limit standard. Many economists and formal officials are predicting, where is it? At least a tumultuous showdown as occurred in 2011 when stocks tumble, consumer confidence weakened, and the economic recovery hurt. Wall Street analysts sees the Treasury running out of cash sometime after June. Does the Fed chair weigh in at all in urging everyone to take the default as off the table as soon as possible? Hot dog.
Nice.
Mm-hmm.
Yeah, nice little rounding bottom.
4 minutes.
Inverse head and shoulders here. Looks good.
Terminal rate. He's not supposed to bring it up.
That's what OPAD does, buy sell properties using the phone.
Of economic projections. So it will be
Seems
interesting
legit.
to see if Powell
iPad, whoops.
hints at it or not, but people are going to be looking for clues there. Fed sentiment is currently at peak hawkishness at levels last seen in 2019, 2006, and 2000, according to Torsten Locke, chief economist at Apollo Global, who ran Fed minutes through a natural language
Peak hawkishness, but they're expecting 25 basis
With
points.
inflation trending lower and growth slowing, we should expect the Fed to turn more dovish after their meeting on Wednesday, he wrote. And a Fed pause is good for credit and equities because
Dude, if he pauses right now,
that we are at the end of a rate hiking cycle.
GME's gonna squeeze.
So
Not
literally,
squeeze,
this
but
is based
probably
off of
we'll
a
probably get back up to
natural
25 at
language
least.
analysis of the minutes. You're almost at peak hawkishness. Anything above 0 is hawkish, and you have actually gone to 2018 levels and 2006 and 2000. That's a very, very fun one.
I don't know how they're peak hawkishness
Chief
when it's.
investment at Morgan Stanley says easy financial conditions.
They're expecting a
not
25
validation of
basis
the
point.
Goldilocks soft landing have driven the rally, and we believe some of these temporary
1.5
factors
minutes.
will reverse, causing a mid-year liquidity squeeze. Goldman Sachs says how many hikes will be needed to stay on this path is less clear. They expect 2 additional hikes at 25, but fewer might be needed if weak business confidence depresses hiring and investment, or might need it if the economy reaccelerates as the impact of past policy tightening fades. Fed officials appear to also expect 2 more hikes and will likely tone down the reference to ongoing. Chad, it's game time, baby.
4079.
All right, we're cutting analyst comments.
4080.
You got enough
Markets
there.
rallying.
I'm going straight to the number.
Would
man.
have already
Straight
stopped
to
me
the
out.
Number is all we need.
Okay, I'm just gonna have to
If it says
ride it.
ongoing or not,
Yikes.
you have about 1 minute.
Here we go.
Until it is out. I'm waiting. Someone's like, "Is it leaked? Is
Maybe
it
it's
going?"
getting
No,
front
no,
run
don't
here.
worry, we'll find out. Unless the bond market, if the bond market's not moved, nothing's leaked. Promise you that one. All right, 50 seconds. I'm just gonna keep refreshing. Good luck, Chad. I wish you the best. I wish you the best, my friends. Let's go. Keep the emotions
30
in
seconds.
check. Make sure you like the video, man. Make sure you subscribe too, man. Every day, we got you. 30 seconds. See you on the other side. 20 seconds. You're
10,
scared?
9,
It's gonna be exciting.
8, 7, 6,
Let's see
5,
what we got.
4,
10
3,
seconds until the release.
2, 1.
Again, stocks are moving. Bonds are staying frozen.
There it is. There's the
are
first
frozen
wick.
right now. 2, 1, ding. Bonds down on first move. SPY
Waiting
is
to sell.
down. Uh-oh, what did they do? There it is. I got the statement.
Not a very big move so far.
The committee anticipates ongoing increases. So initially hawkish right there.
Ongoing increases.
They took out the statement of they didn't take out the statement. That's all. That's all that matters. They say inflation has eased somewhat but remains elevated. Ongoing rate hikes will be appropriate. So that's it. That's the base case.
All right.
So bonds are dumping on
There
it.
you go.
We're going to have to see how Powell is. I don't think you're going to die off of that just yet. But like we said,
I haven't
that will
closed
have
it.
an initially hawkish tone
It's up
right there.
$700,
They
but I'm
didn't
gonna
change the
hold it for
statement.
now.
So
that
that
is
means
bearish.
Powell's still kind of doing his thing there. The Qs are on the high, but first candle down. That's first candle down by 2 points, 2.5. Very, very small move compared
Yeah, it's
to
not
last
huge,
meeting.
honestly.
So I wouldn't get too
I was
tripped
up
out about
2,500
that one.
last time this came
Yeah, we
out.
got to wait till the
From being
speech, but
down
right now
1,500.
you have a slightly bearish tilt. Again, it could be borderline neutral, but nothing else has changed. Let's see what else we got. The initial read is slightly hawkish with reference to increases plural. Stock futures are a little bit lower. You're bouncing back up there.
Oh, there's a rally.
He's going to be hot. Again, they just didn't change that. So that's where people were hoping it would change, but that would have definitely green-lighted that he's going to slow down. But I think Powell's going to play the mid card, but you're bouncing off of that now. Rate expectations and treasury yields rise after they deliver expected quarter point. Terminal rate projections for June meeting swaps rise to 4.95 from 4.94. 2-yield extends losses to 4.26 versus 4.21.
This actually isn't that big of a
Well,
move.
just give it a second, though. But as of now, you have a slightly bearish tilt, but that could easily be eaten up. That's it. We talked about this all day here. They kept ongoing increases. Some people thought they would take it out, but it's just like now Powell is going to be a wild card. So now, even if you want to try to read Powell as bullish, it's going to be hard because even then,
selling my
in writing,
nat
they're
gas.
saying they're not changing anything. You know, the language is implying now at least 2 or 3 more rate hikes, where some people thought the latest trends would have led to maybe 1 or 2 more.
Yeah, nat gas
so it just
broke
makes
that
it hard
support.
landing, or your your early rate cut makes it a little bit more difficult.
Yes, I'm still holding.
So not much change in the take on the economy. They're emphasizing
Wasn't a
that
big
the
enough
job
move
is
for me
yet
to-
not done. They say inflation has eased, but somewhat remains elevated.
Powell could easily flip this around, though.
So nothing.
They're still interpreting, I think, what's in it. I'll go skim through it real quick.
I don't know if you could see it as good. They said they said inflation has eased somewhat. They took out reflecting price pressure.
Oh, it's not very long, so we've got it
I think
then.
that's kind of bullish. They took out the war. They took out related events. And they also said, what is that? They said upward. They said elevated global uncertainty. They changed the percentage amounts. And then they said they took out the plans for reducing balance sheet. They said previously announced plans. Oh, wait a minute. And then they just changed the voters. No dissents. So that's at least decent.
Yeah, nat gas flushed through the low there. Not sure if that's from this
S&P's down 0.5 after the first
from
2
this
minutes.
meeting or
Nasdaq
not,
is
but
off by
this
0.4.
statement.
So back to normality. That's the 37th 25 basis point
And
rate
profit.
hike in the last 30 years.
Maybe. I don't know. I want the long move.
No, this is just, bro. This is gonna be fuel for the press conference. Like I was saying, this shouldn't move as big as it did last time. You have once you hear terminal rate, once we hear that, that's what we're gonna need to see now. But it seems like ongoing rate increases is kind of getting people there. There's no change in guidance of quantitative tightening.
I mean, it's pretty
The committee will
bearish, ongoing
continue
rate
to reduce
increases.
Holdings of Treasury securities and agency mortgage-backed dets, as described.
So,
in its
if anything, if it
previously
settles
announced
down, I can put a
plans.
stop up here, which will probably end up getting triggered
There's
with
a
Powell.
couple names
but
going up.
If I
Yeah, the
close
pressure
here,
is where
I wouldn't know where to
it's gonna be at.
reopen.
Again, Apple,
But yeah, I might
Amazon,
maybe
those
should
are
do
all
that.
over the place. I watch like AMD too. See if any of those AMD's going up. Anything doing what it was doing before is continuing. So if it was waiting for Powell, it's following the SPY. If it was going up ahead of this, it's still going up. If it was going down ahead of this, it's still going down. We don't know about the terminal rate yet.
They're just bouncing on that support.
He might allude to it, but technically speaking, there's no announcement of terminal rate. So based on the language he uses, it could factor it in, but that's about it. So keeping the ongoing increases in the statement, Chris points out, is hawkish. It applies more than one. So you could look for another hike in March and May if they follow through with guidance. That has been a big debate on Wall Street about the wording, and it's not changing, saying they are committed to raising rates here. The key takeaways, they raised benchmark by 25 basis points. Statement repeats prior language of ongoing increasing. Language suggests Fed inclined towards quarter point hikes at the next 2 meetings in March and May. And they say inflation has eased somewhat, but remains elevated. That was a change. And they removed prior references to causes of inflation, including pandemic. They also omit prior references to public health as a factor in decision making. And right now they say the decision is unanimous, so no dissents. So
What a
pretty much
subdued
very
move here.
unified front at the beginning, but like I said, everything that's going up is still going up. AMD's on the high. You're back at the level where this came out. This isn't the real move. That's it. If you were looking for just a
25
bullish
basis points might
firework,
not be
it
because that's
didn't come
priced in.
now.
So very
People
well
are
that could very well
interpreting that
be
as hawkish.
flat or even
I say
bearish.
it's
I mean,
slightly
I don't know.
hawkish for now, but
Um,
Powell has the whole world in
But
his
the
hands right
statement said continuing rate hikes, so
now. And then a comment, not all surprised. KPMG's
plural,
Diane
so more than
Swamp,
one.
They say the Fed really has been
And that was what
pushing back
changed,
on the easing of
I guess.
financial conditions. That's probably why they didn't change the
So that's why I was
language.
bearish. But it's leaving a lot up to just about what Powell says.
That's the music they chose.
Okay, I'll mute him for now. He's got a lot of interesting stuff, but yeah, we'll listen to Powell. He comes on. I'm still holding. That move was nice. Yeah, I don't know. I was too slow to pull the trigger, I guess. And it sounded bearish, so I just kind of went with it. But now we're gonna rally. Not sure. Not sure. Everything drops, but the meme stock's starting tomorrow. What do you mean? Going for GME calls? Yeah, do it. Now Spy's ripping. Okay, yeah. As I say, it could go both ways, and there it did. It just went both ways. I'm holding. It's in Powell's hands now. It's literally just basically, I mean, it broke the support of the day, but it's traded in just a tight range so far. This is a small move. I think they're pricing in what, like 4.25 terminal rate now, not 5 or over 5. So that's, I think, what will scare the market if they're still talking about 5 or over 5%. Look at that. Yeah, locking in profits. Good call, Tree Leaf. Forcing me to diamond hands this contract. Ooh. Just follow. I know. I don't listen to myself. That's one of my notes. Listen to myself. Oh well. Didn't know where because sometimes you get this first initial move and it kind of settles for a bit and then it kind of keeps flushing. I was thinking it was longer for some reason, the statement, so we were waiting for more of it to get digested. But yeah, I guess it was just pretty short, so it was all out there on the table right away. There wasn't going to kind of have a continuation like, oh, this is in here and this is in here. So that was part of the reason I was just holding. But yeah, SPY very easily could come up to 408 even before Powell gets out here. This volatility, man, it's crazy. But this actually is a pretty small move from the statement. Thanks for your likes, guys. I appreciate it. If you want to show that other stream support, it's Stock Market Live. It's got like 5,000 people watching though, so probably won't notice if Happy Money Gang goes and raids them or anything like that. That's the stuff you say that happens 408. Yeah, I mean I very well could see the volatility. Yeah, up and down both ways. I think we could still come way down. We could still hit 400 today. So it is crazy, but on a longer term frame, I mean, this is a good spot to be short if you're looking at the chart. If I can stomach the volatility and we don't break and kind of keep going, then I have a pretty good position. Got a 410 called daily. I don't know if I like your timing on that hurricane. I have to like on my future. Yeah, I've got 43 days on it. Not an option, it's a future contract, so and there's no theta decay, so I just need it below the price I entered, which was like here. I took a loss on the natural gas one. Don't like it. It's flushing through that support. These guys are. You guys aren't even talking about it. Yeah, 1%, 2%. We could see 3%. And so far, it's a very small move from FOMC. So it's all gonna be on Powell what he says. GME bounced up to VWAP. BBBY bounced up there. AMC bouncing a bit. Retesting of the high on the day. Let you guys listen to him for a sec.
They're keeping the writing the same if they could find other ways to change expectations. So that's what I'd be worried about. The press conference should be a powder keg, but also the next coming days, again, with the language the same, this just is going to make the next few days here a little bit more sketchier. So there's Apple. Google chilled out a little bit. A couple things are chilling here now. 10K watching. Well, hit that like button, man. We appreciate y'all. We got updates every single day. Free 99. It costs you a like. That's all we charge you. And get ready, man. We got 15 more minutes. 15 more minutes of dancing. The bonds haven't moved, honestly. I would kind of watch out for them. I can't tell which one's lagging or leading. And actually, you know who we haven't looked at today? The dollar. Yeah, dollar's practically unchanged. So Avi Steinhill, chief economist, CIBC, she says nothing to see here, folks. But he adds that where is it? He adds that the retention of ongoing increases could essentially be an effort to address the easing in financial conditions. That could be an effort to push the bond market towards higher yields in the long run. The language of the Fed statement sets the tone for what is to come from Powell shortly. There is little doubt that the Fed is approaching the last lap of tightening, and it could have easily altered the language around that. For instance, it could have changed ongoing to measured or gradual. The fact that they didn't suggests that we should expect Powell to be hawkish and not cut the markets any slack here. The committee anticipates the ongoing increases in the target will be appropriate in order to maintain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. So looking for the dollar, Chilled Friedman, BI's chief strategist, says the dollar's up marginally, confirmed hawkish bias, but that is proving short-lived on this bounce as there's nothing particularly new here and nothing to alter what remains a dollar negative narrative this year. Yeah, Powell. Well, again, he just what he should have done, he didn't. But I think it's just buying some wiggle room in terms of just talking here. That's all. But he's gonna come out hawkish. The question is though, like you see it already. This is what I was telling you. The market could clearly ignore it. That's all. If he doesn't, I think the only way the market sells off is if Powell wants to be an asshole and say that 50 basis points is still on the table. So, or again, depending on what he says with the soft landing odds, or if he just wants to hammer home the employment, but it's not in a weird way, hawkish bias was confirmed off of the language. It's showing Powell's stance, but you're seeing it. The market is not, you're barely moving off of this. I know it sounds weird because you're watching all this volume, but this isn't really as drastic as you would have expected here.
I'm sorry, guys. My bad. I had stuff muted. I forgot. Yeah, I'm just listening to stuff, trying to figure out what's going on. Got 8 minutes till Powell. Just watching the dollar here. Dollar ripping up, SPY coming down. Now dollar's dumping, SPY kind of bouncing. Yeah, sorry. Let's talk about your BBY calls. You got 350 calls in BBY, so you're paying almost 400 in IV, 400%. That's crazy. Yeah, so SPY just back a view up. Consider just closing out for now, since this was my exit, and it could come down with Powell, but my first exit's now gone. And I might be able to get a better entry higher up if I'm going short, that is. So, let's see, we got 2 minutes. All right. Or sorry, 7 minutes, 6 minutes.
But that last mile from 3% to 2% is going to be a bit
Whoa,
challenging,
dump
just
on
given that's going to be
BBBY.
driven more by what's happening in services. And so that's where we think there's going to be some challenges. And then when you think about the markets more broadly,
Powell's probably not going to say we're doing 50 basis points. He's going to keep his options open, so you know, he's not going to give clear direction. It's just all the little subtleties of his language. I mean, maybe he will. He never has.
$4.3% or so.
Yeah.
That's real money.
We were talking about the market response to this somewhat, some would say hawkish, some would say in actuality dovish statement. There was a comment out on Twitter by an FX trader basically saying, right now, words mean very little from the Federal Reserve. Bonds know this, that the market basically is looking past anything the Fed will say. Is there anything that Fed Chair Jay Powell could say in, say, 8 minutes time that will catch your attention, that will make you shift your view?
I think a big part of it is really how he's thinking about the market more broadly. And when we look at financial conditions and the fact that they've eased up so much over the course of the last 6 months or so, if he were to come in and say something more aggressively than what the market's expecting. So again, our view is that there's going to be a couple more rate hikes, which is in line with the language. But if he were to say, you know, the market is way off base, I don't think that's going to necessarily be perceived well by the equity markets, which in our view, still seem a bit stretched from our perspective.
So that's actually what I was.
So if he says they're well off base, I like that. This is an interesting one. Dan Curtis points out that the change in the 2-year has been more muted on this in December's Fed days compared with any meetings going back to March of last year. The press conference is still to come, but the yield rose 3 basis points today and declined 0.8 last time around. Last March, on the other hand, it rose nearly 9 basis points. Yeah, bro, bonds are muted. Pretty crazy. And then they took out the public health, but we'll see. If Powell wants to go crazy with the language, we're going to find out.
Yeah, I closed my ES. I was up a little bit on it. I'll just close it.
Stock's up here with the bonds on that move, but nothing else is here.
Yeah.
Get ready.
So it could rally up
So
before
4 minutes
when he
here
comes
until the
out. Like
presser.
I could get a much better entry.
We'll
It's just
see
if I
his
want that
time
entry.
and, how long it takes him to come out.
I might try and time this though. I usually don't, but I might play the volatility.
Let me get up my other Google Doc. Just so we have the list of reporters.
Yeah, should taking profits.
Today.
Oh well.
Again, we're gonna have a couple of them.
I still looking at the chart. I think I still want to short. I mean, momentum's all good, but Out of break.
Bonds are this kind of weird. Again, in the last year, off of a Fed meeting,
I think we're coming down.
The bonds have moved triple the size of this. So I think everybody wants that clue on the terminal, and if Powell, whatever he says to word his way in or out of that, I think that will have an effect. So we are gonna find out here, Chattadonia. It's coming. So now bonds are moving first. So this is it. If everybody starts smashing the ask on the bonds, and they're like, "Screw you, Powell," that will be interesting. So let's see. And again, dollar. So every time bonds take a bid, dollar comes back down, but we still don't have a leader yet. Some on Wall Street are reading the change of extent of future increases from pace as being dovish, suggesting we're near the end. I'm not sure if it's 100% why the FOMC changed the wording. Perhaps, oh man, watch out, the Bulls. The Bulls found a way to do it. This is what I was talking about. That's the whisper right now. They're saying extent of future increases was different.
Peloton's up 22%.
Further ongoing, they're saying
we've got 2 minutes.
Hold on, I'm gonna double check this right now.
2 minutes. That's a big move. It kept. Oh, it was on.
I told you, bro.
No, it's just consolidating up there.
Find a way to ignore Papa Powell. Where was it? To attain in determining
bond interest paid.
Of future increase.
Share the
range.
Share the link.
Let me see if I could get.
Why aren't we seeing a reaction on the stock?
What does that mean? There was a slight change. They kept the.
Share it in Discord. We don't have Discord. Share it on here.
To extent.
I'll just search it. BBBY bond interest. News.
Statements. Okay, today's February 1st.
Date. Not seeing any news on it. YouTube? They have begun to pay? I thought it was due today. Is it a live stream or what do you watch on YouTube that's giving you
Let me show you this one right here.
fast news like that?
This is the Bulls are gonna.
I would imagine the stock would be reacting too.
They want it right there.
I don't know if that's a good or bad sign the stock doesn't react.
In determining, say, instead of pace, they changed it to extent. So that could be very bullish there for the bonds if everybody eats that up. Because now they're saying they're not determining how high to go or how fast to do it, but how high, the extent. So this could be the only bullish read on that.
Hey, we've got 20 seconds till he comes out.
That's what people are going to try to get bullish on. That could go either. That's what I'm saying. I think it's kind of a reach, but it is a change.
BBBY signing the check for live stream of it. Yeah, let's see the live stream.
Every other response in the last year, but that is a little.
Ben, Mr. Business is live streaming something.
If everybody wants to read into that, where we got to see how Powell addresses that one.
Oh, dude,
be on the lookout for that question.
One guy, I think I've seen him.
Michael McKee is going to ask him that. So I think we're getting ready here. Game time.
Yeah, this nerd. I like this guy.
No audio. What time is it? 10 seconds.
Oh, he just says they paid it.
He is not out.
Good morning, everybody. Welcome back to another Bed Bath Beyond video. As always, this video is not financial advice, just some interesting opinions. So, guys, the day has finally come. It's finally February 1st, and I'm sure you know what that means. It's the interest payment day for Bed Bath Beyond bonds. So we need to answer a very important question for Bed Bath Beyond.
I have a faster one.
Did Bed Bath Beyond actually pay their interest coupon payment for their bonds? Because as you can see in the chart beside me, Bed Bath Beyond actually owes approximately $24.20 million of interest payment and debt service payments today, February 1st. So guys, this is a make or break moment for Bed Bath Beyond. Did Bed Bath Beyond actually pay their interest? Because as you all know, JP Morgan their interest payment today. And as you can see in the screenshot beside me, currently no news articles are talking about this. They're probably not sure if Bed Bath Beyond actually paid their interest. And guys, I have some great news today, February 1st, on this beloved interest payment day. It just so happens one of my friends who has an account at Morgan Stanley received their interest payment for their Bed Bath Beyond bonds. Guys, that's great news. Bed Bath Beyond agent Baker New York Mellon has begun depositing the interest payments to the brokerages. Guys, that's great news. I know this is a trust me bro moment, but guys, you gotta trust me. It just so happens.
One of his buddies at work. Okay.
Bedrock of our
yeah,
economy.
I'm not gonna jump on that yet.
Without price stability, the economy does not work.
There's literally his buddy that works at
in particular
Morgan Stanley or something.
Stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
He's just reading the statement now.
In addition, we are
So
continuing
this shouldn't be
the
moving too
process
much
of
from it.
significantly reducing the size of our balance sheet.
Thank you.
Restoring price stability will
This is what
likely
happened at the
require
last
maintaining
meeting.
a restrictive
This is
stance
what's so
for some
weird.
time. I will have more to say about today's monetary policy actions after.
Yeah,
a
of course,
brief
could've gotten better
review
exits,
of
all
economic
hindsight.
Developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates.
Wow, he addressed these
Higher
things,
interest
and
rates and slower output growth also
Again,
appear
give
to
this
be
8
weighing
minutes.
on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3
hit a new
months.
low before bonds.
Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago.
There it is. Bonds
Inflation
are following.
remains
Dollars
well
gapping.
above our longer-run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%.
There it is. New low on the
inflation
SPY.
data received over
Bonds
the
are trying to
past 3
follow.
months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently,
I think
it
this is all
remains
written
too
statement
high.
still.
The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation.
I'm not playing right now. I don't have any positions.
The Fed's monetary policy
Closing there
actions
would've been
are
like a
guided
grand,
by
though.
our
It would've been
mandate
nice.
to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power,
Pull through the picture of a baby.
especially for those least
Dollar
able to
back
meet the higher
down.
costs of
Again,
essentials.
SPY went lower than
like
bonds.
Food, housing,
Polk gonna buy
transportation.
All of this is
BBBY.
still light.
We are highly attentive to the risks that
5
inflation
minutes in,
poses to
so
both
give him
sides
4
of our
more
mandate,
or 3 more.
and we are strongly committed to returning inflation to our 2% objective.
He's a dad.
At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5 to
granddad or
4.75%.
something.
And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive
Yeah,
sectors
nothing
of
has
the economy,
changed. Every single
particularly
thing
housing.
is a quote he's already said before.
It will take time, however, for the full effects of monetary restraint to be realized.
The market loves
especially
hearing
on
that.
Inflation.
That's the lagging effects.
In light of the
Yeah, it's like
cumulative
no one
tightening
read
of
it.
monetary
Yep.
policy,
They're all waiting to hear
and
it.
the
That's so
lags with which
strange.
monetary policy affects economic activity and
None of this is
inflation,
new. This is just
the committee
jitters.
decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases.
Listen for the word extent.
Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance.
That's why bonds are doing better.
We
From
will
there.
continue to make our decisions
That was the
meeting by
change.
meeting,
That right there.
taking into
But we
account
need
the
more
totality
update
of
on, but
incoming
market
data
might
and
like
their
it.
implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal.
He did emphasize the word
and to
extent.
keep longer-term inflation expectations.
But it's not enough. But that's why I'm not moving yet.
Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely
7 minutes.
loosening policy.
Give him 1 or 2 more minutes.
We will stay the course until the job is done.
Might finish now.
To conclude,
okay,
we understand that our actions affect communities, families, and
So now
businesses
questions.
across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
7 minutes 30, a lot shorter. So there's your rally.
Chris Rugaber, Associated Press.
Rugaber's the
thank you
first.
for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling.
Already hitting him with it.
Which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder, and could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
He's going to say something about confidence.
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions.
You said that last time.
And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy.
He's not batting it down.
And we will take into account overall financial conditions along with many other factors as we set policy.
Wow. That's kind of bullet. He didn't bat it down.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post.
These are
Over the last quarter, we've seen a deceleration in prices.
What the heck?
She usually talks unemployment.
Spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view that
New high on the day.
unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed. Demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story. The issue is that we have a large sector called core non-housing services, where we don't see disinflation yet.
It's Powell day, baby. That's what's happening.
So far,
FOMC and then Powell right now.
Progress, but without any weakening in labor market conditions.
That's.
Has your
Go ahead.
Has your expectation
dude, he's
for where
sounding
the
bullish.
employment rate might go changed since December?
You know, we're going to write down new forecasts.
Again,
at the
I'm
March
expecting
meeting,
a big
we'll
drop,
see at that
so
time.
don't get sucked
I will
into
say that
it.
it is gratifying to see the disinflationary process now getting underway, and we continue to get strong labor market data. But you know, we'll update those forecasts in March.
So no word on the SEP or terminal.
Powell, Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down, and that would let some of the air out of the labor
407
market.
on the
This guy
SPY.
talks about rate cuts a
We
lot.
saw the opposite in the December jolts this morning. Job openings actually rising. That
484
also coincided with slowdown in wage
under that
inflation.
high.
Do you believe that openings
This is
are
the
an important
Goldilocks
indicator to be
question.
studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. What we
Bonds
did
are
see,
ripping
we've
now.
seen average hourly earnings, and now
They're
the
pushing Powell into the
employment
corner.
cost index abating a little bit, still off of their highs of 6
There's new
months
high.
ago and more, but still at levels that are fairly elevated.
4816. See if it breaks that.
The job openings number in jolts has been quite volatile. that recently, and I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see very high payroll job creation, and quits are still at an elevated level. So by many indicators, the job market is still very strong.
Yeah, bro, that's the Goldilocks dude. He's not even coming in hard. You might have some market pressures, but bonds are going.
Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So
this might be
you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be, and that's obviously back in December, and the median for that was between 5 and 5.25%.
It's almost been 15 minutes, too.
At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance.
He's not answering the terminal question. That's bullish on bonds.
We think we've covered a lot of ground, and financial conditions have certainly tightened.
On bonds, but let's see what it does to stocks.
I would say we still think there's work to do there. We haven't made a decision on exactly where that will be.
Oh, new high.
We're going
Just
to be looking
it.
carefully at the incoming data.
Broke the
between
408.16.
meeting and then the May meeting.
BBBY caught some of that volatility.
About, where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down, to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data
Jimmy got to move through VWAP with it as well.
We'll make data-dependent decisions.
Dude, that's bullish for bonds. Right? Dude, he's soft today.
How are you viewing the kind of balance of risk between those 2 options of, the likelihood of maybe...
Again, yen and bonds are ripping off that now.
That level.
My contract would have been down like $2,000 here.
I would say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back in, and now you really do worry about expectations getting unanchored and that kind of thing. This is a very difficult risk to manage, whereas of course we have no incentive and no desire to over-tighten, but if we feel like we've gone too far, we can certainly and inflation is coming down faster than we expect, and we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years.
So far it's bullish, but I'm worried about there's going to be one dip candle.
As I started to mention earlier, we have a sector that represents 56% of the core inflation index, where
and the bond market is bullying now, and it could get worse.
Yeah, there's no throat clears from Powell.
Inflation in
that's always he's hawkish.
Ex-housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other 2 sectors, representing less than 50%, you actually, I think, now have a story that is credible.
Wait till he gets a hardball question. It has to be
You
hawkish.
don't actually see disinflation in housing services, but it's in the pipeline, right? So for the third sector, we don't see anything here. So I think it would be premature. It would be very premature to declare victory. Or to
this is pretty bearish, very premature to declare victory.
Our goal, of course, is to bring inflation down. And how do we get that done? There are many
look at TA right now,
driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process, begin in that sector. But so far, we don't see that. And I think until we do, we see ourselves as having a lot of work left to do.
Howard Schneider with Reuters, and thanks as usual.
That all sounded hawkish, that last
connect
bit.
a couple dots here. The statement's made a number of changes that seem to be saying things are getting better.
You're going to talk about the extent.
Has eased.
I hope.
That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing.
SPY is ripping now, 409.
So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
Great question.
So I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that. And we see it really in goods prices.
Oh, that is bullish.
That's the first time he's
Goods
acknowledged
prices is a
it
big
without
sector.
saying
This is
we
what we thought
expected
would
it.
happen since the very beginning, and now here it is actually happening, and for the reasons we thought. It's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. This is a good thing. But that's
what we
around
wanted
a
last
quarter of the
meeting.
PCE price index, core PCE price index. So the second sector is housing services, and that's driven by very different things. And we, as I mentioned, with housing services, we
You've
expect,
went above
and
4,100
other
already.
forecasters expect that measured inflation will continue moving up for several months, but will then come down, assuming that new leases continue to be soft. And we do assume that. So we think that that's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline.
All right, this gap might be getting
two
filled up here.
sectors that amount to a little less than half. So this,
Probably not
this
today,
is good,
but
and we note that when we say inflation is coming down. This is good. We expect to see that disinflation process will be seen, we hope soon, in the core goods ex-housing, the core services ex-housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same. And, we have a sense of what's going on in each of those different subsections. Probably the biggest part of it, probably 60% of that is, research would show is sensitive to slack in the economy. And so the labor market will probably be important. Some of the other ones, the labor market's not going to be important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet. And I think we need to see that. It's the majority of the core PCE,
409.
which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves, we see ourselves as having.
He's not that dovish, honestly. Market's just pumping.
In that sector, which will take longer to get down.
I closed out my Dolby. I'm
just
trying
gonna
to
have
take advantage of the
we have to complete
smaller
the job.
ones here.
That's what we're here for.
Nick Timmerhouse.
Oh, he's starting to clear his throat.
Nick Timmerhouse, The Wall Street Journal. Chair Powell, you observed several years ago that we learned we can have a low unemployment rate without above target inflation, and we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So we've raised rates 4.5 percentage points.
Saying why not
and we're
pause
talking
here?
about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is
So this will be
to
a pivot
ourselves,
point here.
and the way we
The
understand it
dollar's
is
chilling
basically
too.
the 3 things that I've just gone through a couple of times.
3 buckets.
And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, by an appropriate set of measures, are positive across the yield curve. I think policy is restrictive.
That's bullish.
We're trying to
again,
make
too.
a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
Ooh.
Well, you'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead, and the state of the economy, and
I think he just
wouldn't
doesn't
start
want
to describe all the details there, but
he
that
just
was the
doesn't
sense of the
want.
discussion.
He's
was
going to cut
really
some.
talking quite a bit
That's
about
it.
the
He
path
just doesn't want to say it
forward.
explicitly or give you a clue in writing. That's
Of course
it.
not.
Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past
he's been
the
soft all day.
will
This
the
is
Fed
bullish so
do
far.
whatever the
I'm just
Treasury
worried about the
directs
red
as it relates
candle.
to making
But
payments
other
as the
than that,
fiscal
though,
agent, or will it
he's
do
small
its
and
own
he's going to cut
analysis of any
soon. He's
legal
just not.
constraints?
He just doesn't want to give you. That's it. That's why he doesn't care.
So your question is, would we?
Very
Say your
surprising.
question again?
Will the Fed do
It's good for
what
now.
Treasury
The markets could
directs
still
as it
go up.
relates
It's already
to
ran up a lot
making
here, but
payments,
still.
Or will it do its own analysis of any legal constraints?
I'm just waiting for
So
the.
you're really asking
the
about
drop.
You're asking about prioritization, in effect.
Again, this is a debt
Okay.
ceiling question.
So
Don't worry about it till June.
I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all of its
Pushing
obligations
through there,
when
410.
due. And any deviations from that path
Might
will
take
be
a short
highly
up here,
risky,
honestly.
and that no one should assume that
Just
the
for a
Fed
quick-
can protect the
quick
economy
flip to the
from the
downside.
consequences of failing to act in a timely manner. In terms of our relationship with the Treasury,
I
we're
have
their fiscal
412.
agent, and I'm just going to leave it at that.
Are you actively doing any planning of what might happen in the event that would happen?
I'm just going to leave it at that. This is a matter that's to be resolved between it's really Congress's job to raise the debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions, so we're the fiscal agent.
Gina and then Steve.
Gina Smilik from the New York Times. Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from the Federal Reserve Bank of Dallas seemed to suggest that would be a possibility in a recent speech.
Might take a short at 412.
Shared on the committee.
So,
but yeah, I mean, it's looking bullish. Looks like we probably will end up filling gaps up here.
Did not see this as a time to pause.
416.
We judged that the appropriate, thing to do at this meeting was to raise the
You got a
federal
sell
funds rate
wall
by
up here.
25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're gonna write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? Rather than just doing at every meeting.
Kind of nail them
go
down.
a little bit more slowly, take some gaps in between moves.
I mean, I think this is not something that the committee is thinking about or exploring in any kind of detail.
You're trying to trap him.
We used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and I mean, you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But
So
this
look
is not
at bonds
something
are
that- this is
outpacing
not
the stocks
something
there.
that
The bonds are going to
that
bully
the
Powell for
Federal
the next
Market
month now.
Committee is on the point of
The
deciding.
dollar just plummeting.
Steve Leisman, CNBC. Mr. Chairman,
Nothing showing up.
the SEP has the PCE inflation rate in
Not showing up on the hourly. What the heck?
3.1%. Meanwhile, the 3-month annualized
People's
PCE
broken.
is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong.
Maybe
and,
a short here, I don't know.
It's possible to achieve these things without raising rates that high, and also without the surge in unemployment. And specifically, I wonder if you might comment on the speech given by Vice Chair Lael Brainerd, who said, to the extent that inputs other than wages may be responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment
Nice play, Hurricane.
rising to get this sector of inflation under control. Thanks.
But you're not even getting the
So
red
couple
right now.
things. First on
Yeah,
the-
didn't close.
on the
Again, the bonds are
forecast,
doing what
You,
they need
you
to.
jumped the gun on it. Got 4 minutes
You're
for
right.
that
If you
candle.
take very short-term, three-month, say, measures of PCE, core PCE inflation, they're quite low
zero-date
right
SPY
now.
calls.
That's because
Yeah.
it's driven by significantly
out.
negative readings from goods inflation. Most forecasters and would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around zero, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. You know, let's say inflation does come down much faster than we expect, which is possible. As I mentioned, you know, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that.
We could be setting up a divergence here on the daily. We'll see.
We think are sensitive to slack in the economy, sensitive
Might
to
take a short here if that engulfs.
But some of the other sectors are not. And for example, you know, financial services is a big sector. That's really not driven by.
All right, close out the Whirlpool $80 loss. Again, I want to clean up some of these other ones here. I don't want too many X factors.
So that's why I said there are a number of things that will affect. Take restaurants.
Just compare the bonds
so clearly
to the
labor is
NQ.
important for restaurants, but so are food prices. And you know, transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view
all day on MSGM.
that you're not going to have a sustainable return to 2% inflation in that sector without a better balance.
Well done. I don't know how you made profit on this all day trading in and out.
I don't know what that will require in
You have
terms
some
of
wash sales on that
increased
thing, too.
unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far, we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2%.
Oh, just a
without
short on the
a really
ES,
significant
the futures.
economic decline or a significant increase in unemployment.
I don't know if I'm going to take it or not,
And
though. We'll
that's
see.
because
That's
the
the
setting
soft
we're in is
landing.
quite different.
It's interesting the market's not
inflation
taking
that
it as
we
good.
originally got was very much a collision.
Yeah, looks like this
between
will engulf.
very strong
Yeah.
demand and hard supply constraints. Not something that you really have seen in
Well.
prior, in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down. And I think a story will emerge on the non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see.
How are you tracking the
we don't
BBY
yet see
bonds?
weakening in the labor market, so we'll have to see.
Can we get there with 5%?
Certainly possible. Yeah, absolutely, it's possible. You know, it's a question. No one.
What do you say,
really knows.
5%?
I think it's because this is not like the other business cycles in so many ways. It may well be that that it will take.
It's gonna be really
more
close.
slowing than I expect to get inflation down to 2%. But I don't. That's not my base case. My base case is that.
There you go.
the
Break even on
economy
BBY.
can Return to
Not
2%
engulfing,
inflation
just
without
consolidating.
a really significant downturn.
Dude, his
or
base
a
case
really
is
big
soft
increase
landing?
in unemployment. I think that's a possible outcome. I think many forecasters
Still
would say
ripping.
it's not the most likely.
BBY, high of the day
Bonds
almost.
don't like that
There's-
as much
there's a-
because
there's
like,
no,
what do you
high of
mean?
yesterday.
It means higher rates if that's the case.
Yeah, high of yesterday.
Everything else
Yeah,
he said.
BBY
fueled
broke
bonds.
yesterday's
Like,
high.
He's just not trying to
Mike
admit
McKee
he's
from
going to
Bloomberg
cut.
TV and radio. I'd like to
That's
pick
it.
There
up
you
on,
go.
what you were just saying about a
Mike McKee.
substantial downturn and ask with the full weight of your tightening not in place
Oh,
yet. And,
BBY is starting to get poppy.
With the progress against inflation, there's still a lot of talk about
GME's not
very, very slow
yet.
growth going forward in 2023. And the recession indicators are all suggesting that we are going to see
BBBY
recession
up
this year.
1%.
So I'm wondering if you've changed your view or you have a more nuanced view of what you think the danger to economic growth is going forward, and whether you're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part.
So it's kind of breaking through that line I have.
And my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be
Alt at
considered.
282.
You will have seen that the global picture is improving a bit, and that will matter for us potentially. The labor market remains very, very strong, and that's job creation, that's wages. As inflation does come down, sentiment will improve.
Carvana made 24% today.
State and local governments are
it was
really
10% when we last
flush
looked at
these
it.
days with
he literally said big
money, and many of them are
no
considering
big
tax
jobless
cuts
jump.
or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction.
So new high right now. You're getting up
both
there.
Private and public.
Again, this
And
is
so
already
that's
above
gonna support
4,100.
economic activity. So I think there's a good chance.
Might be a blow off the top too on the
those
market.
factors will help
Even though we're getting
positive growth this year.
pretty dovish
And that's
Powell.
my base case is that
It could set up a divergence here. I don't need a good penny stock, no.
Thank you. Rich Miller from Bloomberg. First of all,
You're
how are
welcome
you
to
doing?
share, though. Share your play.
Fine, thanks. Fine.
Good, good. Second of all, I think
Everybody
earlier
laughed at
on in
that.
the press conference, you said you need to see substantially more evidence
Good.
Of inflation coming down. Can you give us some idea of what you're thinking of? You mentioned 3 months, that we've seen 3 months in a row. Governor Waller suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence?
Yeah, I'm familiar with CGen.
I don't think there's going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence.
41.33.
So of course we'll be looking, by the time of the March meeting, we'll have 2 more employment reports, 2 more CPI reports, and we'll be looking at those carefully, as all of us will, and we'll be asking ourselves.
SPY ripping new high.
And soon after that, we'll have another ECI wage report, which, as you know, is
monthly.
a
What
report
time
that
frame?
We like because it adjusts for composition and it's very complete.
What time frame candles?
And the one we got, I guess it was yesterday.
Monthly means
was,
nothing. I'm assuming right here, this one.
It shows
this
wages
cup
coming
and this
down,
handle.
but still at a high level. They're still.
That's not really a handle to that cup.
Way above where.
This is way too low.
Where they were before the pandemic. So
buy new high.
I don't want to put a number on it in terms of months, but as the accumulated evidence comes,
UI's getting some.
It's going to be reflected
getting some steam
in our
from it.
assessment of the outlook, and that will be reflected in our policy over time. But I will say though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. We're not. Market participants have a very
BBBY
different job.
or GME moving up
It's a
some.
fine job. It's a great job. In fact, I did that job for years, but in one form or another. But we have to deliver that, and so we are strongly resolved that we will complete
good
this
time to sell
task
cover calls.
because we think it has benefits that will support economic activity and benefit the public for many, many years.
Oh, cut the Broadcom too early.
Thank you, Michelle. Thank you, Fed Chairman, for taking the questions. So you've talked about we had solid job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down. And Congress did what it did, and we did what we did. It's unique. I think certainty is just not appropriate here. Inflation, it's just hard to forecast.
Ripping.
It may come down faster. It may take longer to come down. And our job is to deliver.
There's 1%, 1.05% on the SPY.
We're going to be cautious about declaring victory and sending signals that we think that the game is won.
I grabbed 200 Apple shares.
It's the
I
early
think this is going to
stages
run
of
until
disinflation.
earnings
And
fuck it
it's
up.
most welcome to be able to say that we are now
average down on
in
my Apple.
disinflation.
So my average is like 146
That's great,
now.
but we just
But
see
I'm
that it
risk
has to spread through the
$3
economy,
a
and it's
share.
going to take some time. That's all.
How long do you see then the federal funds rate?
Again, the
remaining
speech
at
is
this
about to
elevated
end, it seems like, too.
Yeah, so my forecast and that of my
You
colleagues,
have
as you will
barely
see
any
from the
red on
S&P, and I mean there are many different forecasts, but generally it's a forecast of slower growth some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year. Of course, other people have forecasts with inflation coming down much faster.
It's hawkish, but the market really doesn't care.
If that happens, if inflation comes down much faster, then
no, I'm still holding my NQ. That's why I want the Apple and then the run up for tomorrow. We already have the Amazons.
Jamie's almost green.
Powell, Simon Rabinovich with The Economist.
Again, I'm down to, I have the bonds, so even if it comes down,
BBBY 2%, some buys, just grinding up.
Rate rises. If you look at Fed
There's
funds
GME. GME's green.
The implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
6,000 contracts. You just ate that level.
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecasts, different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession, and we have inflation moving down.
Broke that high from yesterday.
Somewhere in the mid-threes or maybe lower than that this year. We'll update that in March, but that's what we thought in December. Markets are past that. They show inflation coming down in some cases much quicker than that. So we'll just have to see. And we have a different view, it's a different forecast, really.
A lot of risky names on the high.
And given our outlook, I don't see us cutting rates.
Kind of expectations for Powell, honestly.
Turns true. As I mentioned just now, if we do see inflation come
in fact, the statement was somewhat hawkish.
That'll play into our policy saying, of course.
Dude, this is.
But he's been talking somewhat dovish.
Hi, Chair Powell. Scott Horsley from NPR.
Bro, he did not have the stick.
In the statement this
yeah, I mean, you can hear it. We're listening to Stock Market Live.
Bro, the high ticker's tweaking. Bro, everything's running. Dude, this is tweaking out right now.
What should we make of that?
Yeah.
You got people piling in right here.
Yeah, here's the 412 mark.
I'm still cautious. I had to take that one there to balance some things.
I think I want to take a short of
here.
here.
Might be a green light till earnings tomorrow.
I personally understand well that COVID is still out there, but that it's no longer playing an important role in our economy. And we kept that statement in there for quite a while, and I think we knew we would take it out at some point. There's never a perfect time, but we thought that people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in a
Meta might do its own, but this is just Apple, Amazon, Google now. That's it.
Post-meeting statement as
this
an
is
ongoing
just good, bro. He's too soft
risk,
today.
As opposed to
he's way too soft.
Issue.
Again, he knows it's gonna cut. He knows he's gonna cut rates, but he has to be soft. Otherwise, he has to admit his plan. That's it.
Nice, Ruthless. Well done, man.
Again, just wait for the big red candle. But for now,
you're getting 420 calls already.
Dude, he's being.
You're not gonna
soft.
wait for some pullback. I mean, look at this. Look at this RSI.
And I'm wondering if you agree with that.
I do.
Wait till end of day.
I do. You don't see that yet, but the whole point is, once you see it, you have a serious problem. That means that effectively in people's decision making, inflation has become a really salient
you could have
issue.
it down.
And once that happens,
so maybe
I'm just saying this momentum's not going to keep going.
I'm expecting some big drop. If that doesn't
so next
materialize,
Monday.
it's going to happen at
the longer
earnings.
we're at this, and the longer people are talking about inflation all day long, every day.
Next level is 41.33.
The more risk
or
of
41.40 on SPX.
There's not much. It's more of a risk. It always has been more of a risk.
I think this is a level on the futures, though.
By the way, I think it's becoming less salient. And people are, we pick that up in conversations, and I've seen some data too that show people are, gradually, they're glad that inflation's coming down. People really don't like inflation. And as we see it coming down, that could also add a boost to economic activity. You look at the sentiment surveys now, and they're very, very low. With 3.5% unemployment and, high wage increases nominally by historical standards, why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even, you will also see a boost to sentiment, I hope.
So that's what
yeah, for sure. I'm just saying, even today, you could enter them
That's at the very
after this
hardest.
volatility
Consumers and
settles.
businesses,
You've got 50 minutes to close. You can enter 15 minutes
essentially,
after close.
We believe that expectations of future inflation are
I wouldn't enter
a very important part of the process.
I mean, that's
of creating inflation. That's
I didn't play this right. I should have gotten long. I closed my short at least.
In one way or another, it has to be. We think it's important. In this case,
that 408 break,
the risk.
Suppose I should have gone long, but
or so.
I was waiting for a question that dumps it,
we moved
and
quite vigorously last
he's just
year.
been dovish and
Expectations seem to be well anchored, including at the shorter end.
Hasn't had too hard of questions, but the ones he has had,
and I think that's very reassuring.
It's super
I think,
dovish.
The markets have decided, and the public.
Yeah,
has
wait for this RSI. Wait for it to
inflation
cool. I
is
mean, you can
going
still
to
come back down even to 408. Like,
bonds inspire just taking
That's
turns.
immeasurably helpful to the process of
I'm
getting inflation
my next plan is drop the ES off.
Believe
but
that
I'm waiting.
That'll be part of the process.
This guy bought time. You need Apple or another Fed speaker to bring it down. Oh, I'm already saying this is all borderline very bullish.
Thank you, Chair Powell. Greg Robb from Market Watch.
Again, it's already moved up though, like 2%.
There was a couple sentences that struck people.
And then
as
ultra
important.
bullish on bonds
now. The committee
now.
said participants talked about this unwarranted easing of financial conditions was a risk.
411 had for a level,
really
and it did rejection right there.
If you guys see it,
Or to have 412.
we have it balanced with other stuff.
Actually, 411.81,
Yes,
so
or
basically
the
412.
Ethereum hurts it there too, but
so I was wondering,
on all of this today, I'm down $100, $200. That's why I'm just waiting. It gets worse once I drop
put it this
something
way,
off.
it's something that we monitor carefully.
I'm pushing it.
Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets
No, I think this is
reflect
bullish for
the
natural
tightening that
gas.
we're putting in place. As we've discussed a couple times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I'm not going to try to persuade people to have a different forecast. But our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But
There's some stuff that really hasn't even moved.
Go to Brendan for the last question.
Hi, Chair Powell. Brendan Peterson with Punch
BBBY with Big Red.
I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer faster to that
If we do get our big reds, we sell off to VWAP and then bounce by the end of the day.
That drop dead
and then if it holds up, it's going into squeeze mode.
It's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any.
Yeah, I think maybe a long at 408 would be good.
I believe Congress will wind up acting, and as it will and must in the end.
Well, this could be a fake out
in a way that doesn't risk.
Could be a fake
the
breakout.
progress we're making against
breakout.
inflation and the economy and the financial sector. I believe that will happen.
He seems pretty dovish, though. For sure.
We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that. We're watching it carefully. We'll just be monitoring it. Thank you very much.
Thank you, Jerome.
That's it, man.
Thank you, bro. That was crazy.
Wow. Wow. I feel like that always happens. It doesn't always, but I feel like it always does. Always like exactly opposite of what I was thinking. So that's why I closed my short. Sold 23 GME cover call 210. Nice. John, are you new to cover calls? You're one of the guys we were talking to about it before. I can't remember. That sounds pretty good though. So market might come down here. He's done talking. Probably along. We still have all his big earnings though and stuff. So yeah. You saw me right there. Okay. No, you picked a good time. We were going over covered calls earlier. People that weren't familiar. We paper trade it for people to see. So for those of you that wanted to do it and we did the paper trade, I'll show you how much it's down now. So this is why you don't need to look at your account when you're paper trading. You just let it marinate, let it sit. Then when it comes time to roll it or close to expiration, then you pull it up and figure out what you want to do. But to give you an idea, that call, if someone went long on it, they're up 51% on it. You went short, so you're down 51%. So you don't have to close it, you're fine. You just leave it and let it sit. So it'll ebb and flow, ebb and flow. If it goes up above your strike, getting close to expiration, then it's gonna start to think, okay, you might need to roll it, or just let it get called away. You know, if you want to sell the shares at 24.5. But yeah, so that's how the covered call swings. And look, with GME just on that red candle, look at this thing move now. 34%. Wait. 44%. Watch with it coming down. This is a February, so it's got some time. And of course, we sold this today at like the worst time ever. I mean, market ordered it, but this is kind of just how you have to trade cover calls, just chilling them. I mean, you can scalp them, of course, but to start, do the monthlies, pick a delta, 25 delta, 30 delta, and just chill on it. Up 15%. Yeah, there you go. Just from here to here. So nice entry. Stopped. Even exit. Oh, you got a stop loss on your option? Yeah, I mean, I don't think it's a bad play. I think let the volatility chill out and enter. Don't wanna buy when it's exciting. Gotta buy when it's boring. Sell when it's exciting. Just like John did here. It was exciting and he sold. Sold a call. If it's in the money at expiration, it's gonna get called away. At expiration, so like after the bell on that Friday. If it's in the money, it can get called away before, but it's very unlikely. Unless if it's deep in the money. But even still, it's not a smart move to exercise your contracts, your long contracts. Even if you're in the money, it's not a smart move. You have exercise fees. It's best just to sell it, whatever value it's at in the money, on expiration, and then buy the shares. So yeah, there's never really a reason to exercise contracts that I know of. I suppose maybe with dividends or something, there might be a couple certain scenarios where you would want to exercise it. I mean, okay, so one scenario, there are some outliers where maybe you would exercise it and make more sense. I'm gonna sell your call at 3. Sell your call? No, I've never had that happen. At least if you have a short option, yeah, their margin department will close out. You're talking about like credit spreads. If you have a long call, I've never had them close a long call. Unless you're talking about one in the money and you have auto exercise on. Like deep in the money. Or probably just in the money. And you don't have money to cover it? Yeah, all those factors. That's long calls though, we're talking short. Buy holding up well though, look at that candle. Give me based on nothing today, yep. So, I mean, it still has this bull flag. The chart still looks bullish. I mean, you guys heard kind of my thesis on it earlier. I feel like it could explode any day, but now that the market's bullish, maybe more likely that it will move up to kind of the equilibrium, up to that at least like 24, like the prior support here. But as far as it doing its cycle move, its quarterly move, I don't know when or how or what's going on with that. Yeah, SPY will come down for sure. Cup and handles can form any time frame. Any technical analysis can form on any time frame. Right? So any time frame you can see it. It applies to all time frames. The longer the time frame, the more probable, the better the TA basically. So, but you have to wait for that longer time frame for it to play out. If you have a cup and handle on daily, don't expect on the 5-minute for it to just go up like, oh, it's breaking out. No, you have to wait for it to happen on a daily time frame. Yeah, longer is definitely better. I don't even like cup and handles on like 5-minute, like, not really. Maybe 1 hour you could kind of look at those. My divergences, like dailies, I've been pretty consistent with following it, and they've worked pretty well, especially if it's an exaggerated one, like an obvious divergence. Hourly, it's hit or miss. If they're, that's why I'm saying like this move right here is a divergence on GME to the hourly, but I don't hold those with much weight. And with just this price action, I kind of don't hold it with much weight because this looks like just kind of an upward trend now, upward wedge. So that could be throwing off the RSI. You know, we've got kind of that. We've got this kind of range up here a little bit, right? Something like that. So then maybe this is down here and we're kind of still more down to go. We could put this one down here. But where we were today, yeah, I'd say like there. So yeah, longer time frame for TA for sure. So SPY's coming down a little bit here. GME, not a whole lot's changed for me. I'll go over a recap in the video. I'm going to do a recap video today. The trades we made, I actually lost on the futures today because of stupid natural gas. But I'm glad I didn't lose $3 grand or whatever this would have been if I left my short open for all that. Could have made it back here with that little drop, but I didn't want it. So yeah, I think SPY could make a big move. I think it's probably confirming this breakout. Happy buying for happy. Not sure what that means. But thanks guys for watching. Thank you for the dono today, Ace. Really appreciate it. Thank you for your 40 likes and your subscriptions. Jump on our Discord. It's pinned in the chat. Sub up, like up, comment down. Happy money sticks around. Hapstock. Thanks, Christopher. Oh yeah, happiness development. There you go. I'll do a recap video. Should be out in like 30 minutes. Hopefully do a short one. Gotta get going. Thanks for the stream today, though, guys. Thanks for hanging out. It's a fun one. This is a pretty big move, but for even FOMC day, this isn't that huge. If you haven't been around for those, they're crazy. I mean, this was pretty cool, but this is what I was saying. Like, you very well could say something and we break out, and then it could be a sign for a big move to the upside. It kind of made its move all the way to 408 though, which was my first target. But anyways, I'll go over this in the video. 411. Thanks guys. Very exciting. Very exciting. Yep. And apparently BBBY has paid off their bonds, but I have no idea. Okay. Thanks guys. We'll see you on Discord and on the premiere.